In terms of the Nifty heat map, let's pull up that and see what counters are seeing pressure. Where on the lower end of that heat map is some of the counters like Eternal, which has reversed its early gain. Shriram Finance facing significant significant amount of pressure. In terms of counters that are doing well, Reliance up 3% on the back of its earnings. Some other counters doing well, ranging in the range of around 2%. Let's also take a look at the advance decline ratio and the breadth of the market. The breadth of the market, I'm sure, is skewed towards slightly towards the advances, that is the buyers. There are 1160 odd advances versus that of 1046 odd declines. In terms of the Nifty total market, well, clearly the street right now is penciling in the earnings. Counters which are doing well and which are not doing well are from the pockets of earnings. There's DCB Bank up around 8% on the back of its earnings. There's RBL Bank up around 6% on the back of its earnings. Some counters, of course, not on the back of earnings, but they're worth mentioning. There's Barbecue Nation, which is up around 14%. Garden Reach up around 7%. Paradeep Phosphates up around 6 odd %. Paras Defense also doing well around 6 odd %. Data Patterns, Cochin Shipyard, a lot of defense name buzzing in trade today. In fact, defense names were down on Friday on the back of escalation of India-Pak war, but today they are recovering. Cochin Shipyard up 5% as we speak. Some counters cratering in trade on the back of earnings. Tejas Networks down by about 10 odd %, recovered a tad bit from its day's lows, but down by about 10 odd %. Shriram Finance, we discussed earlier as well, down by about 6.7 odd %. Lloyds Metals down by about 5.4 odd %. So all of these counters to keep an eye on. With that, let's also welcome in our guest for the day, Saurabh Jain, Equity Head Research at SMC Global Securities, and Brijesh L, Head Technical and Derivatives Retail Research at IDBI Cap, joining us now. Welcome to both of you, gentlemen. I'll come to you, Brijesh, first. Volatility is something that the street was kind of expecting. The India VIX right now is hovering around 2 odd %. What's your reading with respect to where technicals are concerned for both Nifty 50 as well as the Bank Nifty quickly?
Hi, morning. So basically, as you said, the VIX is a little bit of concern because it is at 17 level. But I believe technically what we saw on the Friday session, we had taken support. Like the Nifty almost came to the level of 200 moving average. It broke, but then on a closing basis, it was at 24,000. So that itself was one of the trigger which suggested there would be some strength. Bank Nifty, the way it has recovered in the morning trade, it suggests that Bank Nifty can go back to 56. And we are very optimistic, and I do believe that this week, maybe this is a small week, like for the current month, it's a pre-trading session for the month. I won't be surprised if the Nifty is back to 24,500 level. So it is extremely positive. Whatever the longs which we are going to take, we are going to say 24,000 as a stop loss. And for the Bank Nifty, I believe above 56,000. There will be a short covering, and I think Bank Nifty will head into a new trading zone. So basically, the bias would be extremely positive, and this I am specifically talking another till this Wednesday session.
Okay, so that's the overall technical check that we are seeing for Bank Nifty and the overall market breadth that we are looking at. But with that, let's jump in our queries, and we have the first caller joining us. This is Kiran from Hyderabad. Hi, Kiran. How can we help you on the show today?
Sir, ma'am, my query is regarding IIFL Wealth Management.
Right. Please state your query. Yeah.
I'm holding IIFL Wealth Management shares at 1,066 rupees.
Okay.
So recently there is a tie-up with UBS. Will it help the stock to perform well in the next 6 months, or should I exit at current levels? Is my query, ma'am.
So you're looking for a technical check on this counter, and how long have you been holding this again, if you can state that?
I have been holding since last 1 week actually.
Okay.
I would like to hold it for another 6 months.
Okay.
How are the outlooks after the tie-up with UBS is my query, ma'am.
Okay, right. So let me take this across to Brijesh first. Brijesh, IIFL Finance and Focus wants to understand the overall outlook for the next 6 months. What is your outlook on this?
So maybe from the 6 months time frame, I think he can pretty hold the position because the recently at the level of 300, 310, the stock has taken support. Maybe this can go back to 550 levels, 530, 550. So on an immediate basis, 400 will be a small resistance. If those levels are taken out, I think the structure is positive. He can hold on to the long positions close to 400, 405. Just review it, and if it sustains about those levels, then I'm confident that it will be heading toward the 500 levels.
Sure, just quick correction. I think he was talking about IFL Wealth Management, which is 361 WAM right now. Were you also talking about the same thing?
Yeah, yeah.
Okay, perfect. All right, thank you for that. All right, our next question is on Hindustan Copper. Jayesh from Mumbai is holding 219. He's holding 4,000 odd shares at 299 a piece, and he wants to know as to what should be the next course of action for this particular counter. Saurabh, I'll come to you on this one. Good morning to you, and what are the views with regards to where Hindustan Copper is concerned?
Hi, good morning. Thank you for having me on the show. See, I think he should wait for things to settle down, how things shape up with respect to the tariff. And, then the outlook will be clear to how the global economy will progress. And if the things settle down in the next 2 months with US, then I think the global recovery will be there, and all industrial metals will do well. So in my opinion, I think he should wait for a month or two.
Okay, so that's the view with regards to where Hindustan Copper is concerned. Our next caller, Yusuf, is calling in from Hyderabad. Yusuf, a very good morning to you. How can we help you?
Very good morning, madam. Madam, I am holding 457 shares of Sagar Cement at
Okay.
211 to 11, and I wanted to know whether presently it is currently trading as 218 to 219. Can I hold it or can I exit?
Okay, Yusuf, when you bought this counter, did you look at the fundamentals of the company or did you read the charts of the company?
Generally, since I am in construction, I thought that all cement should grow.
Okay.
So accordingly, I purchased it. When it fall down to 211, and earlier it was around 257 something. So then I purchased it.
Okay.
Thinking that all construction will grow, cement demand will be there.
Okay, got it. That's an interesting approach to how you plan to enter the counter. Saurabh, I'll come to you again. Sagar Cements is the counter. What's the outlook like?
We won't be able to give much outlook on the Sagar Cement because it's effectively a very small company, and in fact, it is a loss-making company also. On the valuation fronts, yes, it is trading about around price to book value only. But yes, we do expect that the demand for the cement will increase. But I would suggest him to buy some of the bigger names like maybe Ultratech or maybe for that matter, Rambo Cement.
Okay, so that's the view that we are seeing for Sagar Cements. But next question is from Rakesh, and he has about 300 shares of Motherson Wiring, and he bought at a price of 64 for 2 to 3 year holding period. Wants to understand the fundamental picture of this one. So let me come across to you for the fundamental check on this. What's your view on this?
In my view, I think one should wait for what kind of a resolution will come with after the 90 days moratorium by the US. It all depends upon how the global arena will shape up. If things get settled down, and then I think the industrial companies, automobile companies are expected to do well. So in my view, I think he should wait for a while.
Okay, so that's the view with regards to where Motherson Sumi Wiring is concerned. Our next caller is from Snigdha, who's calling in from Hyderabad. Snigdha, very good morning to you. How can we help you?
Hi, this is Snigdha from Hyderabad.
Yeah.
So my query is regarding Jupiter Wagons. I have 505 shares at 502 rupees.
Right.
So I just want to know when will my buying price come and how long will it underperform?
Okay, got your point, Snigdha. I'll take this up with Brijesh. Brijesh, in case where charts are concerned for Jupiter Wagons, what are you reading? She's sitting on a loss right now. She's got 505 odd shares, but at 502 a piece. What's the view with regards to where charts are concerned, and do you think that she can recover some of her losses?
Yeah, I think, see, if she can hold on for like 7, 8 months kind of a time frame, and right now it's 370. So already the stock has formed a bottom at 280, 275 level. So that bottom formation is done is what I can understand. And from the current level, for example, if there is a slip of another 20, 25 points, I would recommend to add few of the average the position, because see the pullback will come for sure, and that pullback will be close to 490, 500 level. So there is an opportunity. For example, she average it at on a little lower. I'm sure that she will be getting an exit opportunity. Maybe at that point she can review it. If things change, the structure changes, it might even go further. But one should do the average, and close to 494, 500, one should again review it.
Okay, so that's the view that we are looking for Jupiter Wagons. But next query is from Aditya from Pune. He's bought about 50 shares of LTI Mindtree at a price of 6,153. Currently facing a loss of around 86,000 on the counter. Wants to understand whether he should book the loss or keep holding on to it. Saurabh, let me come to you. Overall IT sector. Now the major concern has been on the discretionary spending, the revised guidance that we are seeing for some of these counters. Want to understand your view on something like a LTI Mindtree?
Yeah, there will be a very small growth but in the IT sector, because recently all the bigger companies have announced the results, and the guidance in the range of 2, 4, 5%. In case of LTI Mindtree, I think it is a high growth company, but not growing at that pace at which earlier it used to be. So that is why I think the valuations are melting. In my opinion, I think it is a contrarian call, because we don't see any kind of a discretionary spending coming up and large order intake coming up for the company. So in my opinion, I think it is better to get rid of in case you find any rally.
Okay, so that's the view with regards to where the IT pack is concerned. Our next question is from Ram, who's calling in from Telangana. Ram, a very good morning to you. I believe you have a query on Vedanta.
Yes, ma'am. Good morning. I have Vedanta shares at 2,000 shares at 400. So my target is for 3 months from now. Mm-hmm. So what's it going to be like a whole, or, And okay. One more question for you guys is, I'm watching your channel on YouTube, okay. But there is no subtitles option there, the closed caption, CC.
Sorry, come again?
On your YouTube live channel,
right?
There is no subtitles.
Okay, all right. We fixed that, Ram. Thank you so much for pointing that out for us. All right, I'll take your query with Brijesh. Brijesh, I'll come to you on this one. Vedanta is the counter. Is sitting on a profit of around 32,000 odd rupees right now. What's the view with regards to where technicals are concerned?
So basically the selling came from the level of 470, 475. So I'm pretty sure that he can bid for another 50 points from the current level. He's already in the money. Maybe he can raise his stop loss to the cost and he ride the momentum. Maybe he'll take some profit, maybe small profit, but he should be riding the momentum. So 475, 480 is what I'm looking into. If and at those levels, if the scenario changes, then I am looking for the 520 levels. So directional view on the Vedanta is positive. I think he should be taking a little bit risk on this particular stock and should be riding the profits. 475 for sure is what I can see on charts.
So 475 is something that is looking favorable on the technical chart. But let's take our next query. This is from Krishna from Trichy. He wants to understand the outlook for something like a transformers and rectifiers for the next 2 years. So Saurabh, let me come to you. Now this has been one of those counters where every earnings we see a positive upside to the stock, but it's the valuations which have been relatively a question on this. I want to understand what's your view for something like a transformers and rectifiers India.
The outlook is quite positive. The company is able to garner good order book and has shown quite a good growth in the numbers quarter on quarter. Yes, the valuations are on the higher side, but if you have a long-term view of 2-3 years, then there should not be any issue. I think you should stick with it.
Okay, so that's the view with regards to where Trill is concerned. Our next question is from Darshan, who's writing in from Bengaluru. He's invested 2,500 shares of Maharashtra Bank ahead of results is what he had said. And in terms of fundamentals, he wants to understand whether this is a good company to invest in or not. In terms of the earnings overall, Saurabh, you are a better judge here, but advances grew around 16% year on year, deposits grew around 16% as well, and the CD ratio has improved to around 75.2 odd percent. What's the view with regards to where this particular bank is concerned, and of course your view on the entire banking space right now, because that is the space where people are, bullish on with respect to where valuations are concerned, and a lot of private sector banks have already come out with their earnings. So your overall review with regards to where earnings are concerned for banks?
The overall view on the banking sector is quite positive. If you look from the valuation perspective, they are simply on a comforting factor with respect to the other sectors in the market. With respect to the growth, we feel that the growth will be good this year also. In fact, some of the banks who have reported results like ICICI maybe or HDFC Bank or some PSU banks which have gained their earlier numbers so far have shown good growth. When we speak about Bank of Maharashtra, I think in the mid-size PSU banking space, it is one of the best bank, growing above industry average. You have just said that the bank has grown at a rate of about 16%. They have healthy margins too. I think the bank is putting up a good show and is likely to do well in the ensuing future. So my take is a hold on it.
Okay, so hold is what we are looking for Bank of Maharashtra. So that's the overall view on the banking space also that we are seeing. But next we have a caller joining us, and this is Murli from Bengaluru. Hi Murli, I hope we are audible to you. Please state your query.
Yeah. Good morning to you, and thank you for taking up my query. I bought Tega Industries,
Right.
a high-tech liner product for the steel industry.
Right, and this is
global presence. And I bought at 1414, 1414, 200 shares at the price of 1414.
okay. And Murli, when is the time period when you had entered into this stock?
I want to wait because I am told the Chile expansion is getting delayed. But they are going to have a good year for the next 2 years. I happened to see the interviews in one of the things of Tega Industries management.
Okay, so it's the fundamental, yeah.
Yeah, fundamental call. I am willing to wait for maybe more than a year. It depends on whether I'll get about 15 to 20% return.
Okay,
I'm willing to wait even if it's longer. Average return is 20% or 15% for 2 years also, it's fine.
Right. So let me take this across to our fundamental guest. Saurabh, Tega Industries now is positive on the overall outlook going forward for the business. What is your view on the stock?
Won't be give any take on this. It's not in coverage.
Okay, let me take this across to Brijesh. Then Brijesh, what is your technical charts indicating for this particular counter?
So this is quite a little bit of illiquid counter. So the volumes are missing. So, but since it will be difficult, but then he can hold this position with 1350 as a stop loss, and he's willing to take this bet for the 1.5, 2 years. So, and it is almost near to the cost. So as long as 1350 levels are held, I think he can stay long. And purely from the charts point of view, 1520 was the level from where the supply came. So on the immediate basis, 1520, 1525, that can be the level where he may see some resistance. But then if those levels are sustained, it can move back to 200-day moving average, which is 1650, 1660 level. So he can take a risk chance. Probably he taking a stop loss at 1350 level.
Okay, so that's the view with regards to where technicals are concerned for something like a Tega Industries. Our next question is from Satyan, who wants to understand the long-term outlook for KEC International. He's bought at the levels of 700 a piece. The stock is currently trading at 727 and wants to know as to what should be the stop loss and target for the next 1 year. Brijesh, I'll stick with you for this one. What's the view like with regards to where charts are concerned for KEC International?
I think the charts are positive. From the year perspective, I think this can go back to 1000, 1050 level, because somewhere at the lower level of 600, 650, the bottom formation is done. So the stock is slightly moving up. There were volumes previously when there was a breakout. So it will take a little bit longer time. I'm not very sure how will it span out in the year time or not. But then this can go back to 1050, 1100. So view remains positive. Somebody wants to make a fresh entry can also take that view. But view somewhere close to 1050, 1100, we can watch this.
Okay, so that's the view for KEC International that we are seeing. But next question is from Gopi from Bangalore. Now his question is on L&T Finance. The company reported its earnings as well over the weekend, and he's holding 320 shares at rupees 165 over here, and he's holding it since July of 2024, before the whole microfinance issue had started. Question is on the Q4 earnings. How would the company pan out? Even if we see a city's report that came out, Tamil Nadu government had also introduced a bill to curb coercive loan recovery practice. The stock down in trade about 5% today. Brijesh, let me come to you for L&T Finance. What's your view on the stock?
We are positive on this counter. We are saying that over the next couple of months, this can bounce back. So we are anticipating maybe 15-20% kind of a return. So we have fundamentally also we are covering this stock. So we are positive. So nothing to like. I think it will take a little time, but then it should work positively.
Okay, so that's the view with regards to where L&T Finance is concerned. Our next question, in fact, our next caller, Suresh, is calling in from Hyderabad. Suresh, a very good morning to you. How can we help you?
Yeah, hi, good morning. Is this right time to enter into Motilal as well? It has been fallen down. On Friday, it was fall down around 7-8%, and today also it came around 4%. I'm currently holding some of the shares, but I'm looking for the long-term outlook, like 1 to 2 years.
Okay.
So is this right time to add some more
an average out
shares? And what is the overall outlook regarding this mutual fund housing?
Got it.
Like UTMC or Motilal as well?
Got it. Got your point, Suresh. I'll take this up with Saurabh. Saurabh, is this the right time to buy Motilal Oswal? Is this question? He's holding some shares already and he wants to average out. Is this the right time to enter?
I think from the long-term perspective, the outlook for the financial market is good enough. After the results, management also said that their business are likely to grow. Their home finance business is doing now well, and the AMC business is also is likely to do well in the ensuing future. So if you have long-term perspective, I think you can add more.
So that's the view that we are seeing for Motilal Oswal. But the next query is from the Arkav, and we have to, and it's about Suzlon Energy. Wants to understand, Partha from Kolkata, whether it's the correct time to enter in this counter or not. Let me come to you, Saurabh, for this one. What's your view on Suzlon Energy, even in terms of fundamentals? If we are seeing, how is this company shaping up?
A lot of good changes have been done in the company in the last few quarters. They have been able to garner good orders. The profitability is on the rise, and the net worth is now positive. They have been able to retire some debt also. So long-term outlook is quite positive for the power sector and for the Suzlon. My take is better to add Suzlon in a staggered manner on declines.
Okay, add on declines is the view coming in on something like a Suzlon Energy. Our next counter that we're talking about is SW Solar, that is Sterling and Wilson Solar. Shravan from Hyderabad, he's holding 100 shares bought at 449 a piece, so he's sitting on a loss of 15,000 rupees right now. He wants to buy again and average it from a longer term perspective is what he's saying. I mean, though it's long term, Brijesh, I'll come to you because he wants to average out at the current levels. We've seen a significant amount of pressure on the counter. Last 6 months down for almost 48%. Today also the stock is down by about 5%. And if I'm not wrong, it's also locked in lower circuit. We checked that. But your view with regards to where technicals are concerned, yes, so it is locked in fact in lower circuit today as well. Where technicals are concerned, is this the right thing to do? Should he average it out right now or should he book losses?
If his vision is for the long-term perspective, I think he can average it out because level of 200, 215, this is the level from where the stock has formed the base formation. Currently it is in downtrend. It has to strongly sustain above 400 levels to recover the strength and then come into a positive zone. So, but then if he's willing to take some risk, then averaging is the best option and review the position close to 400. And eventually in the near future, whenever it sustains above 400, then the scenario may get changed. But then, yeah, it is advisable to do some averaging at current level and hold the position.
Okay. Hold and average at current levels. Is that what you said? Average at current levels, Brijesh? Am I correct?
Yes.
Okay, so that's the view with regards to where Sterling and Wilson is concerned. Our next caller, Prashant, is calling in from Pune. Prashant, I believe you have a query on Trent. Is that correct?
Yes, that's right. I have 22 shares of Trent at the price of 5,840.
Okay.
And I have bought this down after a lot of averaging because my initial cost was a little high and still having about 10.5% worth of loss.
Okay.
So I don't mind holding on to this share for 6 months to about a year.
Okay.
But so I wanted to know the view. Should I exit or should I keep on holding it?
Okay. So Prashant, if I'm not wrong, you bought it at elevated levels and averaged it down. Am I correct?
Yes,
Okay.
that's right.
Okay. And did you see the fundamentals of the company while buying it, or did you see the technicals?
No,
Okay. I think we seem to have lost his feed. All right. Got his query per se. Brijesh, I'll come to you again on this one. Trent is the counter. 5840 is his average acquisition cost. With regards to where charts are concerned, what's the view like? And also Trent is expected to post its earnings tomorrow as well. Overall, what are the technicals indicating?
See, we are positive on this counter, and we are at the lower levels. I think it is advisable to take the long bets. From the long-term perspective, that is from 4 to 5 kind of a months. I think it can go back to 6,200 level. So this is the area from where the selling came. So I think it's a hold, and if you is willing to average, I would take that call. And 6290, 6300, 6300. This would be my immediate view on the trend. So we are positive on this counter.
Okay, overall a positive stance is what we are looking for trend. But let's just focus from the consumption to the auto sector. Mahindra & Mahindra is set to acquire almost 60% stake in SML Isuzu for 555 crore rupees. My colleague Tushardeep Singh caught up with Anish Shah, Group CEO and Managing Director at Mahindra Group, talk about this acquisition, synergies and the future of M&M going ahead. Listen in.
Let's first talk about the rationale behind the deal. Why now? And what is the play that you're making in the CV space?
So let's look at our auto and farm businesses. We have market leadership in multiple segments. SUVs, we've grown from 12% to 23% market share. In tractors, we have a 43.4% market share, which is 4 or 5 points higher than where we were 5 years ago. In LCVs, we have a 51.9% market share. In electric three-wheelers, which is a business we really had a single-digit share in ICE three-wheelers at one point and nothing in electric, we today have a 43% market share. So we've been able to take segments and really do very well in those segments. We're now looking at the next one, which is greater than 3.5 ton commercial vehicles. And not as much in the MHCV space, but in the intermediate space between that. Mm-hmm. And we have a 3% market share today. Mm-hmm. With this acquisition, with a company that has done very well, that is positioned very well in the market, that takes our share to 6%. And we have a target then to go to 10 to 12% in the next 5 years, and then to 20% plus in another 5 years after that. So this is something that we feel positions our trucks and buses business very well, mm-hmm. and allows us to play in this segment in a manner that is consistent with how we play in many other segments in this space.
What are the immediate synergies that will emerge from this particular acquisition? What does Isuzu contribute to you? And what would you contribute towards SML Isuzu?
A number of synergies, because scale matters. So first, product rationalization, manufacturing synergies, sourcing at the distribution end, from a customer standpoint and a brand standpoint. So there are a number of synergies that will come into play. And as we grow a business, it's going to start creating a lot more momentum for our employees as well as for our customers and distributors and dealers. And that's going to be a very positive play.
Let's talk about a little bit about the valuation. The deal is being done at two levels. One is an open offer price, which is I think about 1,555 rupees, and the other one is 650. You believe that valuation is in the eye of the beholder. How are you seeing this acquisition in terms of the valuation is concerned? Why this gap, so to speak, between the open offer as well as the stake purchase that you're doing?
So we believe it's a fair valuation. There is an open offer that's done per the SEBI regulations. And for us, we would look at, in a sense, the blended offer price. And it's one that we feel is fair for all the parties concerned.
Okay. Any future plans to raise the stake even further beyond 58 point something or 59?
We have no plans to do that. We feel that with a 59% stake, we're well positioned to be able to take this business and grow it much further. Okay. And to the extent there is subscription from the open offer, yes, we will take that. But from our standpoint, we are well positioned today.
Will Mahindra look to merge SML with itself or keep it as a separate listed entity going forward?
It will stay as a separate listed entity. We have no plans to merge it within the business.
Okay, and the brand also continues, the SML brand continues?
That is correct.
Okay, but the Isuzu brand goes out. So any further synergy with the Isuzu part of the business?
There has been little at this stage. All the IP is owned by the company, and therefore there is nothing further at this stage that needs to be done from that perspective.
Do you also looking at, now we have a separate business on the SML side, you have the Mahindra Trucks and Buses, you have the Last Mile Mobility. It's a CV business that's spread across, catering to multiple businesses or multiple usage that you see. Are you looking to consolidate all of them into one CV umbrella going forward?
So Last Mile Mobility has a very different customer segment and operates in a very distinct manner from the medium or the intermediate commercial vehicle segment. And therefore Last Mile Mobility will stay as a separate business. We have external investors there as well, and that's one way we've talked about that we will likely potentially take it to an IPO at some point in time, which is the right time. So that will stay as a distinct business. There are lots of synergies at the back end that exist. And therefore, at this stage, we don't plan to change the structure a whole lot. SML will stay as an independent listed entity and benefit from many of the back-end synergies that we can provide.
You talk about growth gems. We have talked about a lot in previous earning calls and everything. This, I'm sure, this also you're going to pitch as the next growth gem. How will SML add to your incremental revenue and margin going forward? And when can we start seeing the impact coming in?
So you see the impact immediately, because the combined revenue is going to be 5,000 crores. SML is a profitable company and has good margins, good EBITDA. So it is immediately going to come in, and it's accretive from our standpoint.
Okay. What are the prospects of electrification after the SML acquisition? I think they have an electric bus in the works. Is that something that you'll look into immediately?
Yes. So they have gone a long way in electric. They've got a very good set of products that they're developing, and that's going to be positive for us.
Okay. Finally, a couple of questions. There's a pickup trucks business that they have. You essentially, at this point of time in India, you don't have it. How does that work out? In the auto
we
space,
will look at the product rationalization or synergies as we go forward, and we are very excited about the company overall. We think it's a good set of products. It's a very good management team, and we have a lot of respect for them, and therefore we feel that it's a big positive for us to work together and take this company forward.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
the last 1 month, if you see the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Jaggi brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias.
You're watching NDTV Profit, a show that gets all your stock related queries answered, whether they're fundamental or technical. For viewers who are just tuning in, you can either call us on the number that's flashing on your screen in the lower band, and for viewers who wants to send us their query on WhatsApp, you can write us on the number that's above on the screen. In terms of where markets are moving, well, Nifty 50 has slightly gained in the past half an hour to around almost 1%, around 0.95 odd percent. The mid cap 150 is up around 0.8%, and the small cap 250 hovering about the 0.06% levels. With that, let's also welcome in Ajit Mishra, SVP Research at Religate Broking, joining us now. Good afternoon to you, Ajit. In terms of the next query, P. Somaya from Chennai is writing in and has bought IDFC First Bank at 77 rupees from a short-term holding period perspective. Wants to know whether he should hold, exit or average at the current levels. Ajit, I'll come to you on this one. What are the charts indicating for something like an IDFC First Bank?
Yeah, good morning, Mahima. So, Mahima, I guess he bought it last year when the prices were hovering around 80, 77 zone. Now, after seeing almost a dip close to around 50 levels, we have seen a decent recovery of late. And, the way the recovery has panned out, probably we can see a level close to around 70, 72 in the near future. So, as of now, I would recommend him to stay put and recommend him not to add at current levels. Let it surpass the 70 zone decisively, then only you can consider adding to this existing position. In the meanwhile, also a stop at 60 is something that one should maintain, because in case if it slips below this level, probably we can again see the consolidation, if the view is short term.
So that's the view that we are seeing for IDFC First Bank. But Ajit, for the next query also, I'll take your view. Now, this is from Sri Vardhan. He holds shares of Tata Motors and wants to understand whether he should continue to hold or sell in this counter. Now, what we've seen in this last 6 months, the stock has seen some major correction. It's down about 26% if we take the 6 months timeline in picture. Want to understand your view on this counter.
So that's true. Means if you see that the last 6 months been consistent underperformance from Tata Motors, and a stock like Eicher, TVS, Maruti, they have done exceptionally well during this time. So if let's say the view is less than 3-6 months, my recommendation would be to still look for the opportunity to exit from this counter and switch to the performer wherein we are seeing relatively higher strength. If let's say the view is long term, then they can stay put, because the price wise damage, it's been already done. And probably 750, 760 is something that the stock might test in next 3 to 6 months.
That's the view with regards to where charts are concerned for Tata Motors. Our next question is on Shriram Finance. Ravi Reddy wants to have a view with respect to where this counter is concerned. Saurabh, I'll come to you on this one. In terms of earnings, well, margins did contract. Even in terms of profit, it was a miss, and this is on the back of a higher credit cost. How did you read the numbers, and what's the view like for something like a Shriram Finance?
The numbers were clearly disappointing, and that is why we are seeing selling on the stock. The management is quite confident that they would be able to grow in the FY26, especially on the gold loan side. They have given a guidance of more than 20%. See, if you have a long-term view, then I think it makes sense to hold on. Otherwise, I don't feel I feel that after these numbers, the stock will remain underperformer with respect to the market.
Okay, so that's the view for Shriram Finance that we are looking at. Next question is from Sunil from Visakhapatnam. He's holding 100 shares of PG Electroplast and this is at a price of 900. So currently around those levels is what we are looking at. Wants to understand the technical support level for averaging out the stock. So let me come across to you, Ajit, for this one. What's your view on this counter?
So this stock definitely is among the few names wherein we are seeing consistent outperformance. Means the stock declined from its record highs, tested its long-term averages in line with the market correction initially, but it has rebounded very swiftly from those areas, and now we are almost on the verge of making a new record highs. So in case if we wish to add more, in anticipation of next leg of the up move, then 1050 is the area basically where one can look to add. Means it should be added once we have a clarity over the momentum, not in the current zone wherein we might spend some more time, let's say maybe a month or two under consolidation.
Okay, so 1050 is the kind of level that we should be looking out for. But next we have a caller joining us and this is Shiv Kumar from Bengaluru. Hi Shiv, how can we help you on the show today?
Good morning. This is Shiv Kumar. So I have a query on Geo Financial Services. I have bought 276 rupees. I have bought 40 shares of Geo Financial Services for the last 6 months. What is your opinion for the next 1 year to 2 years? And should I add more or should I book losses here?
Okay, so it's a one-term outlook that you want to understand. And while you had entered in this counter, was it in terms of fundamentals for a longer holding period also that you're looking forward for this counter?
Really, also I would like to know it's the same. Yeah, correct.
Okay, so let me take this across to Saurabh first. Saurabh, your view on this stock?
See, in my opinion, I think it is a company of from the Reliance Group, and I think the platform is ready with Geo Finance for the lending SME exercises and all, for the banking and all, and they have a tie-up with BlackRock also. But I think it will take 4 or 5 years for the company to show some kind of a growth on the balance sheet. Right now, it is purely a interest is coming in the balance sheet, and the profitability is because of that there is a profitability. You need to have a very long-term perspective for this stock to hold. So, in my sense, if you have that kind of perspective, keep on holding.
Okay, so that's the view with regards to where Geo Finance is concerned. In terms of the next question, Srinivas from Hyderabad has bought HAL at an average price of 4370, and he wants to know whether the charts are attractive enough to keep holding for the next 3 months or not. I'll come to you, Ajit, on this one. For HAL, what are the charts indicating?
So, when it comes to the defense-related stock, HAL was among the initial performers. Means it rebounded strongly after retesting a support zone around 3000 area. Now we have reclaimed all the major averages. In fact, we have formed a fresh buying pivot. Today also we are seeing strong traction, so that indicates a probability of retesting the previous swing high, which is around 4700 mark in the near future, and then probably close to around 5000 levels also. So definitely he should stay put. Now 4000 is a very strong base, so that should be his closing stop loss with a potential target of 5000 levels.
Okay, potential for 5,000 is what we are seeing for Hindustan Aeronautics. So definitely a stock to keep on our radar. Next question is from Jeevan Mudaji, and he's bought shares of Canara Bank, and this is at a price of 101 that we are looking at. Again, wants to understand or have a technical check on this counter. So Ajit, let me come to you on this. What's your view for Canara Bank?
See, when it comes to banking as a space, we all know that the kind of recovery or rebound that the banking index has witnessed in the last 3 weeks, and private banking measures, but they are largely, contributing to the move. Off late, we were seeing that selective stocks from the PSU basket, they were also witnessing rebound. But the way we are seeing selling pressure emerging on every rise, the pace of rise could be gradual in the PSU pack. So my recommendation is still to stick with the private banking heavyweights like HDFC, ICICI, Kotak, Axis, instead of looking for any stock from the PSU basket. If you have any existing position, you may stay put and utilize any recovery towards 106 to 108 to exit your longs with the stop loss at 94.
Okay, so that's the view with regards to where charts are concerned for Canara Bank. Our next question is from Bart, who's calling in from Greater Noida. Very good morning to you. How can we help you?
Good morning to you. I just want to know the prospects of Lloyd Engineering.
Okay.
I am holding about 2,000 shares, bought at a price of 58.80 or 59.80 or something.
Okay.
And today it has come down considerably. I think about 11-12%.
Right.
The reason and what it is.
Got it. Got your query, Bart. I'll take this up with Saurabh. Saurabh, if at all you have a view on something like a Lloyd's Engineering, it's not like the stock is done too much. Here today it's down by about 24%. And today also the stock is seeing significant amount of pressure. But with respect to where fundamentals are concerned, what's the view like?
I won't be able to give you on this.
Sure. No worries. Ajit, with respect to where charts are concerned, what's the view like?
So, Maima, if I'm not wrong, there's a right which got triggered today in the ratio of 9:34 shares. So maybe that could be the reason that why the stock is indicating a downtick. But otherwise, the stock is trading closer to its record highs. Means 70-74 was the range. Previously it made a record high, and currently also it's holding above its multiple moving averages. So as of now, my recommendation is to stay put. It's a highly volatile stock. So obviously the support exists around 54-55 levels. If you are okay with that, then you can definitely continue and use any recovery towards 68 to 70 zone to book your profits.
Okay, so that's the view with regards to where Lloyd's is concerned. And yes, you're right, Ajit. It's the right day today. And just for viewers' perspective, 9 right shares for every 34 held shares is being issued at the price of 32 per share, which is why we're seeing a significant downtick of around 16% in this particular counter. All right, our next query is on IREDA. Avnish Kumar Chaudhary from Muzaffarpur, Bihar is holding at the rate of 203 a piece and wants to know as to what should be the next course of action for this particular counter. Saurabh, I'll come to you. IREDA, what's the outlook like?
Because of the valuation concern, the stock has cooled off. From the growth perspective, the company is growing at a good pace. 20-30% kind of a growth is there, and it is likely to witness same kind of a growth. If you have long-term perspective, then stick to it.
Okay, so long-term positive view for IREDA is what we are looking at. Next question is from Avramana from Andhra Pradesh, and he's purchased 160 shares of Bajaj Finance. This is at a price of 9,389 that we are looking at. Currently facing a loss of about 60,000 on this. Wants to understand the overall short-term outlook on this counter, whether he should continue to hold for another 3 months or so. So Ajit, what's your view on this?
No doubt it's among the top performing name within the NBFC basket. Of late, the stock had made a new record high also, but I guess the buying is slightly on the higher end. That's why we are seeing this, losses. Overall, the stock looks positive. Means we have, very short-term averages placed around 89, 90, which is almost around the current levels. And if it breaks, then probably around 87, 70. So if the view is very short term, he should maintain a stop at 87, 70 and use any recovery towards 94, 9500 to reduce his position.
Okay, so that's the view for Bajaj Finance that we are seeing. But next we have a caller joining us, and this is Ramesh from Mumbai. Hi Ramesh, please state your query and a very good morning to you.
Yeah, good morning. I want to ask on 1 year basis, I have purchased Mazgaon Dock.
Right.
At the 2435, 500 shares. I want what is the view of for a 1 year basis.
On a 1 year basis, and when you had entered the stock, was it because of the overall defense theme or was it stock specific fundamentals?
For the defense.
For the defense theme that we are looking at. So let me go across to Saurabh for this. Saurabh, overall defense space, what is the outlook that we are seeing for something like a Mazgaon Dock? Now, do note that even in the last 1-2 months or so, after a bit of correction that we had seen in this space, now the counters are back in focus. So what is your view on this?
while the view is quite constructive, but the growth hasn't been at par with the kind of a re-rating that these stocks have witnessed over the past 2 years, and that is the reason why the all the defense stocks have took up beating in the last 6-8 months. But yes, if you have a long-term perspective, I think you should stick with it.
Okay, so that's the view with regards to where fundamentals are concerned for Mazagon Dock, and hold is the view coming in from Saurabh. Our next question is on BSE. Pankaj wants to know if this is the good time to enter into something like a BSE or wait for some more correction, and he wants to invest from a longer term perspective. He's currently holding 10 shares at 3,900 a piece. Ajit, do you think averaging out right now is the right strategy to adopt for something like a BSE from, let's say, 1 year point of view?
So Mahima, it's almost like kind of 100% kind of a return that he's already seeing on his initial investment. And of late, yes, the stock was volatile, and around that corrective phase, there was an opportunity. As of now, since the stock is again trading at the record highs, in case if you wish to add more, maybe closer to around 5,700, 5,800, in case if the stock retraces, it could be a good area to look to accumulate more.
Okay, so that's the view for BSC that we are looking at. Next, we have a caller joining us, and this is Ashish from Kolkata. Hi Ashish, how can we help you on the show today?
हेलो, एक्चुअली मैं HDFC बैंक का शेयर होल्ड कर रहा हूँ जो 355 क्वांटिटी ऑफ शेयर्स है, जिसका एवरेज प्राइस है 1962.30. तो मेरा एक क्वेश्चन है कि इसका मेरा एवरेज जो टारगेट है तो 1978 की 1970 ऐसा कुछ टारगेट है. क्या ये टारगेट इस वीक में अचीव कर पाऊंगा?
आपका टारगेट क्या था, वापस अगर बता सकते हो? वो
है मेरा जो HDFC बैंक का टारगेट है वो है 1978.30 की 1977 ऐसा कुछ है.
Okay, 1978. Let me go across to Ajit for this. Ajit, HDFC Bank wants to understand a 1 week perspective. What's the kind of targets that he should be watching out for?
All right. So, see, this is what we were discussing, that after this marginal dip, we were seeing that almost all the private banking majors, especially HDFC, ICICI, they are again witnessing buying pivot formation. So, yes, he should stay put. His target is the record high area. So, obviously, that is possible. But 1890, 1890 should be his stop loss because his view is less than a week. So if he is okay with that, definitely he should stay put. Otherwise, he can use any recovery in the range of 1950, 1962, book his profits.
Okay, so that's the view with regards to where HDFC Bank's 1 week chart is concerned. Our next question is on VIP Industries. Shiv Kumar from Chennai is holding at the levels of 340 for more than 3 years now. He wants to know whether he should exit. Though it is recovered from 260 levels to 305 or thereabouts, what should he do next? He's sitting on a loss of roughly 3,000 rupees right now. Ajit, I'll come to you again for this one. With regards to where charts are concerned, do you think it'll come back to the 340 levels?
So probably yes, Mahima, because the last leg of decline was almost vertical, means from 500 to 250 in no time, and now after this oversold positioning, we are seeing recovery. Volumes are okay. The stock has reclaimed the short-term averages. So probably 350, 360 is something that the stock might test. But 290 is something that the stock should hold now, because that's the area basically where we have the short-term averages placed now. So with that as a stop loss, definitely they can wait for 350, 355 as a position target.
Okay, well, it's time for the rapid fire segment now. Gentlemen, we'll try to throw as many queries as possible at you, and we expect that you answer them in the shortest manner possible. I'll start with the first query. Rudra from Vadodara is writing in and wants to know as to this is the right time to enter into Newgen Software or not. Ajit, on charts?
Wait for a close above 1100.
Okay, next question is from Kalyani from Telangana, holds 200 shares of Seagull at a price of 372. Whether she should continue to hold or sell. Let me come to you, Ajit, on this.
Penny stock, please avoid.
Okay, Titagarh is the next counter. The person has 22 odd shares and wants to exit at least 50% profit. Saurabh, what's the view like from a longer term perspective?
Go ahead.
Okay, next question is from Vandana from Delhi, long-term investor in Shriram Investment, wants to understand whether she should remain invested in this. Saurabh, what's your view?
Hold.
Okay, CDSL is the next counter from a longer term perspective. Saurabh, what's the view like?
Hold.
Okay, so next question that we are looking is for K FinTech wants to understand the long-term perspective on this stock. What is your view, Saurabh, on this?
Hold.
Okay, Wellspun Specialty Solutions, Lakshmi from Hyderabad has bought 300 odd shares at 41 a piece. From a longer term perspective, let's say 1 year, Ajit, should she hold or sell?
Hold and keep on trading stop losses on rise.
Okay, next question is from Vijay Sima and wants to understand the view on Time Technoplast, currently facing a loss of 17%. Ajit, what's your view?
Maintain stop at 325 and use recovery around 390 to reduce his position.
Okay, Inox Wind is the next counter. Adil is holding 500 shares at 177 a piece. From a 3-month perspective, should he continue to hold? Ajit?
Yeah, hold, maintain a target of around 204, 205, stop 155.
Okay, and last question is from E. Venkataram, wants to understand the outlook on Renuka Sugar holding over next 15 minutes. Ajit, your view?
Use recovery to reduce underperforming stock.
Okay, so with that, we're completely out of time on this edition of Ask Profit. Saurabh as well as Ajit, thank you so much for taking out time and speaking with us at NDTV Profit. With that, it's a complete wrap on the show. Thank you so much for watching NDTV Profit. Stay tuned, know your company on the other side.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Junkie brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias.
Hello and welcome. You're watching KYC. We're today going to talk about Hindustan Zinc, and first off, I'm going to talk about why. Hindustan Zinc has literally supplies 75% of India's zinc production and caters to nearly 75% of India's zinc needs. So in that sense, it's a critical company with a very high free cash flow. It does free cash flow of roughly 15,000 crore, and there could be an upside bias to this. Why would that be so? Two reasons. One, you're expecting cost of production of zinc to continue to compress. They've done that in FY25. Likely, it's possible that they could do it in FY26 and beyond as well, which could healthily add to the free cash flow number that Hindustan Zinc does. The second reason is zinc prices. Of course, that element is a little more variable, a little more outside Hindustan Zinc's possible control, but it's the world's second largest zinc producer, and therefore, in that sense, controls some bit of that. So those two positive tailwinds could well lend a push to the numbers for Hindustan Zinc going forward. Last 3 to 4 year numbers, etc., we'll of course discuss, but let's first talk about the company. And let me bring on board Mihika Barve as well, because she's going to help me do that. Yeah. Welcome, Mihika. Good morning. So I'm going to first start off, Mihika, by probably breaking down the company. It's engaged in mining and smelting of zinc, lead, and silver. It's the world's largest integrated zinc producer with the lowest cost of production. 77% of domestic primary zinc market share is directly owned, controlled by Hindustan Zinc, and it's India's only integrated and listed silver player. So some of those factors. Mihika, what about commodity prices? What can you tell us about that vis-a-vis Hindustan Zinc?
Yeah. So when you look at a Hindustan Zinc, its earnings and thereby its profitability is dependent on three factors. The first factor is your commodity prices, and the potential earnings depend on how the movement in zinc and lead prices as well as silver prices move in. Now, FY25 earnings were supported by a 16% year-on-year rise in the zinc prices, and the company had a strong set of numbers for the same. And the company does expect resilient prices in FY26 despite globally a zinc and lead surplus vis-a-vis the demand. They do expect stable pricing for the next 3 to 6 months. Now, FY25 average price for zinc was $2,800 per MT. The expected price as per the company stands at $2,850. Now, this is obviously the average price that they expect in FY26. There could be volatility during the financial year. For lead, from 2013 odd levels to $2,025 per MT is what they're expecting. Now, 10% rise to the commodity prices was when you compare to the FY25 average. For zinc, it leads to a 1900 to 2000 crore positive impact on EBITDA. For something like lead, it leads to almost 300 crore EBITDA addition, and for silver the range is between 550 to 575. The next thing that we need to look at when you have your you have your commodity prices stable, Harsh, is production, how much they're producing. Now, year-on-year growth for mine metal, it's been a very steady uptick, but they do have certain small growth projects into stream, and their target for FY26 stands at 1,125 kiloton per annum. The same thing for refined metal stands at 1,100 kiloton per annum, and for silver, which is a byproduct of all their mines, and and all depends on the kind of grades of silver you're getting at the mines, is expected to see a further uptick in the range of 700 to 710 metric tons. And lastly, you have to look at, like Harsh mentioned, cost of production. FY25 zinc cost of production stood at a 4-year low, and the company has reduced their cost of production by $300 per ton if you look at their peak level, and their FY25 zinc cost of production stood at $1,052 per ton. This is lower than what we saw in FY24, and their target ranges between $1,025 to $1,050 per ton in FY26, but it may be lower if the company has more renewable power in their power mix as per management. Lastly, a 5% fall in the zinc cost of production has around around 425 to 450 odd crores of benefits for the company's EBITDA, thereby helping its profitability. So Harsh, when you look at what the earnings and the profits of Hindustan Zinc matter on, these three factors are the ones that you need to watch out for.
Perfect. And you know, maybe to contextualize this a little bit more, we spoke about how Hindustan Zinc's EBITDA is roughly 15,000 crore. If all of these factors were to play out, you could likely see at the same volume level an EBITDA rise of 20% this year, which is FY25 versus FY26. So keep that in mind. Of course, this is subject to all of those factors playing out. 10% rise in commodity prices, 5% fall in zinc cost of production. And there are large downside risks to both of those playing out. So something to keep in mind. But if it were to play out, it could be a large positive as well. So something again to keep in mind as we analyze Hindustan Zinc. Let's talk about the factors that we'll look out and we'll try and assess as we break this company down. We look at income statement, balance sheet, cash flow, as well as return ratios. We'll also look at shareholding, street cred, street coverage, and valuations. So we'll look at those 8. Let me start off with the income statement. The revenue FY25 versus FY24 has gone up 18%, but the 3-year CAGR is just 6%. A lot of this in terms of top line, just for context, is determined by pricing and volume, both of those. So you will see plenty of variability with regard to the top line number. And let me try and demonstrate this. So FY23, the top line number was 34,000 crore rupees. FY24 was 29,000 crore rupees. And FY25 went back to 34,000 crore rupees. Just for context as to how the variation is. In fact, even FY22 was around 29,500 crore rupees. So that variability largely driven by prices, by commodity prices, and very little by volumes, because the kind of inch up we've seen in volumes has been steady, but just maybe 2-3% inch up with regard to volumes. So not so much volume growth, more value growth is what you have to look for in the top line, and that's what we've seen. In terms of EBITDA as well, there's a clear flow through. So your EBITDA margins are quite healthy at around 56% odd, but they tend to fall as well. So we've seen that EBITDA margins can fall if there is pressure with regard to cost of production, and therefore you will see that variability even with regard to EBITDA margin, as you can see on your screen. So something to take care of. But again, over the year-over-year period, we've seen a solid EBITDA growth. From the 19,000 crore number, EBITDA has inched, or rather from the 15,000 odd crore number, it's inched up towards 19,000 crore. And another 3,000 to 3,500 crore could lead to an expansion of around 15% odd to that EBITDA number, if that were to translate, of course, the 3,500 crore that we spoke about in terms of lowering with regard to cost of production and increase in terms of commodity zinc prices globally. So you could see some of those variables happen. Now let me try and go a little more granular here, because on the 19,000 crore EBITDA, 2 costs majorly are incurred. One is an interest expense of roughly 1,000 odd crore, and second is a depreciation expense, which is a non-cash expense of around 3,500 crore. That's how you land at profit before tax roughly of around 13,500 crore, and thereafter the profit after tax is roughly 10,300 odd crore, which has gone up well when you're looking at it on a YOY basis. It's also the increase in the interest expense and the increase in the depreciation which has led, or rather increased the net profit a little bit more. So that's how it's played out, at least the profit after tax. Let's now look at the balance sheet. Now in terms of the balance sheet as well, fairly healthy in terms of capitalization, but what we've seen is a sharp increase with regard to debt. So FY22, the debt was sub 3,000 crore, even on a console level, including short-term liabilities, etc., was roughly around 10,000 odd crore. Now, with the standalone borrowing number is roughly 11,000 crore, and with other liabilities, it's coming.
But it's key to know that FY25, the company was full in 2 growth projects.
Yeah.
And they were investing heavily, and
Correct.
these will be commissioning in FY26, one in Q1, one in Q4. So that's where you're seeing an uptick in debt.
Perfect. So that's the reason why there's an uptick, but there's an uptick nonetheless. And therefore, you've seen interest cost also rise gradually over the last 2 to 3 years. So something to keep in mind. But when you're looking at the overall market capitalization of the company, and let's try and contextualize this a little bit more. So you've got 10,000 crore of debt, but the profit after tax of the company is 10,000 crore. So in that sense, it's well protected. Second is the EBITDA of the company is roughly 18 to 19,000 crore, 15,000 crore over the last maybe 3-4 years if I take the average, 18,900 odd crore if you're looking at the current year, and therefore it's very, very well covered from an interest cost perspective. There's no concern there. So your balance sheet seems to be well protected. For a 2 lakh crore market cap company to have an 11,000 crore debt is okay. But when you're looking at the debt to equity, it's even Steven, it's almost 1:1, and therefore slightly on the elevated side the debt, but no concern per se because of all of the factors that are highlighted. Profitability with regard to market capitalization, when we compare it, the debt looks fairly okay. Also something to note that a lot of the capital of the company is legacy capital, something that has been invested over the last 20-25 years. And therefore, those costs and the costs today don't really align, and we'll see that in the return ratios. But that's how really the balance sheet is panning out. No real concern on with regard to the balance sheet. Now let's look at the cash flow, and that's where the position starts to change, and you'll see that improvement. The cash flow has roughly been 14 to 15,000 odd crore over the last 3 years, 13,500 crore in FY24. And now 15,000 crore, fairly steady, right? If you just take the 19,000 crore EBITDA, reduce the tax and maybe an element or two of interest, then that's where you're landing up in terms of cash flow. So fairly healthy in that sense, but there's no inch up. There's no growth which is visible in the cash flow at this point. So again, something to be kept in mind. We'll give this a neutral with regard to the cash flow, Mihika. But at least these are the 3 parameters that we've looked at. Mika, you want to take us through return ratios?
Yeah, interesting set of numbers here, because you've seen the return of equity of this company in FY25 be 72.6%, and it's been a steady growth from FY23, from 44% to 55% to 72%. But when you talk about return on equity, you need to know that they have certain assets that have been on their books for years, and they were capitalized a while back. Even if you look at the return on capital employed, which basically kind of helps you gauge how much profit or cash the company has been generating on the capital that it has been investing. So generally a higher ROCE does suggest that the company is better generating profits from the capital that it is infusing into the company. Return on capital employed has been growing from 39% in FY23 to 43% in FY24, and then to FY25 at 52%. Key to know that FY25 the company did have some growth projects going on, and the capitalization for those would come once they have been commissioned in this financial year, which is FY26. And then you have return on assets, which has seen a steady decline from 26% to 22% to 20%. However, it's key to note that Hindustan Zinc has been operating for a long time, and it has dated assets. So when the depreciation and certain fixed assets become older, the kind of efficiency you're going to get from certain assets, or even from certain of the mines that we've been investing, which is what we've been seeing in the company's silver mines, this tends to kind of steady slowly, and then it depends on the company when they want to get and explore new assets, and when the returns from those newly coming in assets do come on the books. But it's still a thumbs up on us for the key ratios of the company, because they stand high, and we've seen a good growth over the past few years. Next up, I also want to talk about the shareholding pattern. Now, they have a strong promoter holding. It's Vedanta, which is the promoter and Hindustan Zinc is a subsidiary company of Vedanta. Vedanta has sold some stake over the years, 64% to 63% when you look at from March 23 to March 25, but it's a strong ownership nonetheless. You also have a stake of the government of India in something like an Hindustan Zinc, which has been steady in the 27 to 29% range. And it's actually domestic institutional interest that has grown from 2.95% at the end of FY23 to over 4% in FY25. So you've seen that traction coming in, and the traction is not only domestic, it is also from foreign institutional investors. Like you can see on your screen, 0.8% as of the end of FY23, and now it stands over 1.4%. And then when you look at individual retail participation, it is fairly small when you compare to all the other shareholders, but you've seen that grow as well from 1.8% to 3.1% over the last 2 years. So it's a thumbs up on the shareholding pattern. And then I want to talk about the street cred. Now, in terms of the performance of the company in the past, the stock is up over 2% today, but in the past 1 month, it's down about 4%. If you look at even the year-to-date performance, it's fairly flat, but it's key to note that it's not been a steady downtick when you look at the year-to-date performance. You've seen a volatile stock movement. Like, for example, the entire month of March, the stock was gaining, but it was after April 1st week that we saw the stock declining. And the one-year gains, it's 4%. If you count today's gain, the stock is up 7%. But yeah, it's key to note that the stock is down around 40% from its peak levels. It's, even its year range stood at around 800. Life high actually stood at around 800 odd levels. Currently, the stock is trading around 455. But if you look at a long-term period, the stock has given returns. Your 5-year period is at 154%. That means the stock has doubled, and this is despite it being 40% lower from its highest point. So we've given a neutral rating on the street credential for this counter. But Harsh, how is the street viewing the stock?
Well, yeah. So we have 5 buys, 3 sells, 7 holds. So fairly balanced in that sense. The return potential is extremely muted on this one. So clearly not a thumbs up, but we'll give it a neutral, flattish kind of return expectation. But again, a decent dividend yield. It gives around 7% in terms of dividends annually, and therefore maybe something to look out for, that while the return potential may be muted, you might still make a decent amount in terms of dividend. And that also brings me to valuations, right? The current price to earnings is roughly 18.5 times. The 5-year average price to earnings has been around 23 times. So slightly cheaper on that note, despite the return potential being muted as per analyst expectations. Again, the dividend yield at around 7% is slightly on the lower side, given the fact that over the last few years, we've seen very, very heavy dividend distribution. Now, in terms of, I'm just talking from FY21 to FY24, in those 3 years, FY22, FY23, FY24, and FY21, the company has given a dividend of over 50,000 crores cumulatively. This is a 2 lakh crore market cap company, which has given out nearly 50,000 crore plus of dividend distribution.
But it's key to know that most of it is going to the promoter and the government of India.
So if that is the requirement of the promoter and of the government of India, then the shareholders are inadvertently beneficiaries of that, Mihika. And therefore, my view is that the free cash flow which comes through will in any case flow through shareholders, whether you are Vedanta as the shareholder or government of India.
And if you've seen, we were discussing earlier, this last 10 years, 6 years, the payout ratio was above 100%. So that's something to look at.
Absolutely. So maybe that also to be kept in mind, that pretty much all of the EBITDA coming in is going out in dividend payments, which is something to keep in mind. In fact, the payout ratio is also extremely high, as Mihika obviously highlighted. So again, something to keep in mind. So we're going to give this a neutral as well in terms of valuations, just comparing it to 5-year averages, because there's not too many companies in the space, Mihika, which has a 75% market share in a commodity play like zinc, and therefore it's an interesting one. Let's take our final ratings and cumulatively let's stack it up. The income statement, no real growth. Balance sheet, fairly placed because debt is low in comparative terms. Otherwise, debt to equity is 1:1. If you remember, Cash flow also no growth there, and therefore we've given it a neutral, but very strong cash flow overall. Whatever is coming in the P&L is going straight into the cash flow statement and going out as dividend. Return ratios is a thumbs up because all of the legacy equity is now giving decent returns with regard to how it's playing out and will continue to do so. I'm not sure how much on incremental investment, Mika, they're going to be making with regard to the return ratios. So something maybe we need to keep in mind. Shareholding is a thumbs up, street cred is neutral, street coverage is neutral, and valuations are neutral. That's how it stacks up. Let's go though, dip into that conversation with Arun Mishra, who's the CEO and whole-time director at Hindustan Zinc. Mihika spoke to him. Here's what he had to say about the company's play on pricing as well as capex guidance going forward, because those are going to be variables which could alter cash flow both from a dividend standpoint as well as from an EBITDA standpoint, and alter valuations as well. So listen in. Interesting conversation.
First of all, congratulations for a strong Q4. Let me start off this interview by asking your view on how the quarter went by.
No, the quarter, as we have demonstrated, we have got more than 1.2 million ton mined metal production capability. We have remained almost at a quarter 3 level of finished metal production, but year on year we have scored a good. Overall, if you look at cost, we have produced in the quarter 4 $994 per ton, one of the lowest ever cost that we could produce. Of course, it is for quarter 4 because of the high grade of metal and all that, we could get such a lovely cost. So overall in the year, we have almost close to our guidance as far as mined metal is concerned. We are almost same as on the cost guidance is concerned, gives us a lot of satisfaction. And of course, nothing is more satisfying than generating a profit after tax of 10,353 crores, 33% increase year on year, which should make everyone happy.
Next, I want to focus on pricing. There's a lot of global uncertainty and domestic factors at play. How are you viewing pricing for zinc, lead and silver to be in the first half of FY26?
See, the first part is the uncertainty. It was more uncertain maybe a week back. Slowly it's becoming certain that the tariff trade war does not benefit anyone. That realization is sinking in, and I am sure the whole thing will be resolved in 3 months to 6 months time. So hence my prediction is next 3 to 6 months, don't expect much movement in the price. It may remain range bound between $2,600 to $2,750 per ton. But once everything re-establishes, we know now the likely growth in GDP, because in many places GDP has shrunk. So we'll have to look at where all the GDP will expand, and that I can expect only increase in prices of quarter 4 of this fiscal. That means Jan to March of next year, not before that.
So with no significant change in pricing for the next 3 to 6 months, how is demand looking like? What cues have you been seeing so far in quarter 1 of FY26?
See, right now, the US consumes about 700 KT out of the 12 million tons of production globe does. In spite of tariffs, supposing the demand shrinks in US, but it cannot become zero, it remains as say 350, 400 KT. So all that remains is imbalance of 400 KT metal to be shipped from one geography, which is Canada, Western Europe, to rest of the world. So that's not going to upset the equation so much. So all producers will first make an attempt to satisfy their local market. And that will not allow them to increase the prices beyond the range. So everybody will stick to this number and try to push as much of sales in the nearby vicinity as possible. The supply chain is most uncertain now. So after 6 months or so, I guess the supply chain will be streamlined, and then you can expect slowly the prices to correct going into January to March of next year, maybe around $3,000 per ton.
Got it, sir. So amid all of this, do you expect muted realizations for your volumes in H1 of FY26?
See, we are a domestic driven company, and the prices in India will remain very stable. Domestic demand will remain to be high. We are the only producer, so we have to manage our cost even better, because at 27, 28 and 26.50 to 27, we need to ensure that we have a further cut of $50 to $75 per ton in our cost. That is visible to us how to do that, both in terms of increasing renewable power mix in our operations, also managing the grade of ore that we mine. We will do all the actions necessary and ensure that we remain in that cost leverage of about $1,000 to $1,052. so that we can keep getting this benefit.
I'm glad you mentioned your cost of production. FY25 saw zinc cost of production at a 4-year low. What's your target for FY26 and what is going to help you take it there?
No, we are still keeping it at 1050 only, but if our renewable power mix increases sharply, we could achieve up to 15% in quarter 4, total 13% this year. Next year, we want to exit at 30%, but if we are able to bring this project faster, we will get a faster cut in cost. At the same time, if we can really strike a good amount of silver in our SK mine, of course, it will impact our earnings and profitability.
Sir, I also want to ask about silver. Your FY26 guidance shows a 3 to 5% uptick in mined as well as refined metal. But silver growth is rather muted. Can we expect an uptick in this segment soon?
There are two things. One, silver is a byproduct. It depends upon the grade of ore that we mine as well as what is the production strategy. So this year we have taken entire 12 months. We will be running in zinc plus lead mode that will focus on maximizing metal production, and whatever silver we get as a result of it, we should be happy with that. And to that account, I won't call it a muted number, as a more realistic number.
So now coming to your growth projects, the 160 kiloton per annum roster is set to commission in Q1 of FY26. What kind of benefits will this be bringing into the company?
It will straightway add another 45 KT of production. So like last year we finished at 1052, we should be doing 1.1 million ton metal next year.
And I also want to talk about the 510 kiloton per annum fertilizer plant that is set to commission by the end of FY26. Does the company, it mentions that DAP fertilizers will fetch the right margins. What kind of revenue contribution and margins can we expect?
We are not looking to fertilizer business to compete with zinc business, right? Fertilizer business is more from one de-risking our operation, because we are handling huge amount of 98% strong concentrated sulfuric acid. And so we are always under the pressure of dispose it off and get it sold and all that. Of course, it brings us some money. As long as fertilizer brings us profit over and above what we used to make with acid, we are happy. This is more for catering to the farmers in Rajasthan and western part of Orissa, western part of India, where they are forced to buy imported DAP. If we can supply them DAP and then help them to grow their product well, and we get a fair margin, not an exceptional margin, we are happy with that. We are not really factoring in a large profit from fertilizer business.
So coming to CAPEX, what's the overall FY26 CAPEX guidance and how will it be allocated?
Absolutely. So what we have done, the currently guidance is very minimal, $225 to $50 million is minimal, which is tapering off of the earlier growth projects, be it fertilizer, be it roaster, and some amount of replacement equipment, debottlenecking projects, things like that. But wait for a month or so, then we should make big announcement on our next growth plan, and that would be the real capex. So it is not in the guidance, but it will get added later on.
Lastly, sir, I know you can't give exact details on these new announcements coming in, but what areas will these growth projects be focusing on?
Another 1 million ton metal, similarly, so roughly about 0.8 million ton of additional zinc, 0.2 million ton of additional lead, another 600-700 tons of silver. It's like doubling of Hindustan Zinc. So we should do that.
Okay, so that's an engaging conversation with the management of Hindustan Zinc. But for the moment, from Mika, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet. where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
In the last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The
Benchmarks gain nearly 1% as Nifty trades over 24,200 while Sensex trades over 800 points in the green. All sectors except IT and FMCG trade in green. SML Isuzu hits lower circuit after M&M announces it will acquire majority stake in the company. M&M says it will piggyback SML Isuzu to enter electric bus segment. L&T Finance down over 4%, has 22% exposure to MFI portfolio. However, says it will see limited impact from the Tamil Nadu loan recovery bill. Shriram Finance tanks close to 5% after higher credit cost hit the company's net profit. Management says the company will remain in wait-and-watch mode with regard to asset quality and provisioning for the next 2 quarters. CBDT sets aggressive crackdown plan for FY26, targets to detect 2.4 lakh crore rupees in undisclosed income in a move aimed towards tightening the net around black money and plug tax evasion. That's an NDTV Profit exclusive that you're seeing. Hello and welcome to Markets at 12. This is Nushi Vakharia. Let's take a look at how the markets are currently faring today. First up, the benchmark indices, if we are seeing Nifty 50 up in green, seeing gains of over 1%. We are seeing some bit of an uptick in the last half an hour of trading of so. Let's see how the point contribution table is looking for the Nifty 50, which are some of the key gainers in focus today. We have Reliance Industries right at the top, buzzing in fact because of its fourth quarter earnings. We are also looking at positives from ICICI Bank, HDFC Bank and L&T in focus. While on the dragging side, we are seeing names like Shriram Finance, again in focus on the back of a brokerage note also that we are seeing HCL Tech, Bajaj Finance in pressure. Let's also see how the Nifty Bank is doing currently. We had a lot of banking names in focus. So if you can point out Nifty Bank, again in green, 1.25% higher is what we are looking at. Let's get a sense of overall sectoral indices, which are some of the key sectors that we are seeing in focus today. So we have Nifty Defense right at the top. In fact, a lot of defense names in focus seeing gains of more than 6% in trade today. After that, we have something like Nifty Oil and Gas, Nifty Pharma seeing about 2%, trading about 2% higher, while the only two pockets where we are seeing some bit of a downtick is something like Nifty FMCG, almost flat in red, and Nifty IT down about 0.4%. Let's take a look across the broader markets also. If you are seeing Nifty Midcap 150, similar to what the benchmark is doing currently, over 1% up. Let's pull out some of the top contributors in this space. If you are seeing, well, Nifty Small Cap 250, we are seeing about 0.6% of gains. But coming back to Midcap 150, let's look at some of the top gainers which are there in this space. RBL Bank, Data Patterns, Mishra Dhatu, Cochin Shipyard, Bharat Dynamics. RBL Bank again on the is in focus on the basis of the fourth quarter earnings that we are seeing, but a lot of defense stocks in focus. That is what we are seeing again. In Friday, we did see some of these defense counters seeing some bit of a correction. Tejas Network, Shriram Finance, Sterling and Wilson, however, are some bit of stocks that are seeing pressure in trade today. But let's shift focus. The Nifty 50 is trading high today after declining over the last 2 quarters. Earlier, we caught up with Sayon Mukherjee of Nomura to get his views on Nifty's growth prospects and the earnings outlook. Here's what he had to say.
Our expectations are not very high. If you look at our range that we are looking at, even on the higher side, we probably would see 6-7% return by the end of this fiscal year. The key reason I think is, as you mentioned, corporate earnings. We had seen significant earnings growth coming through over the past 4 years, between, let's say, fiscal 19 to fiscal 24, 20% plus earnings growth. I think a lot of catch up which was pending on earnings has already happened. And if I look at the earnings to GDP ratio at this point, it's kind of quite elevated and very close to what we were just before the global financial crisis. I think given the economic headwinds that we are anticipating going forward, it would be very difficult to foresee a case where earnings materially outpace the nominal GDP growth. Our economists are somewhat conservative. They are forecasting below 6% GDP growth for India. A fair bit of that is on account of the global turmoil that we are currently witnessing. So assuming, we see a 10% of nominal GDP growth, for corporate earnings to grow at around 15%, which is what the street is currently anticipating, looks very challenging. And frankly, we could see earnings cuts across most of the sectors. There are hardly any sectors, which would be unaffected because of this. It's just that in some cases it may be a little more, in some cases it may be a little less. So we should brace for around 5% earnings cut, even from the current levels. I guess BFSI, if I look at various indices, they are the largest contributor to the earnings. Almost 30% or maybe a third of the aggregate earnings come from the BFSI space. And within that, banking is a big contributor. Though we are positive on that space and, the earnings cut may be a bit muted there, but nonetheless, there will be earnings cut. For instance, we are forecasting, very steep repo rate cut this year. Our team is forecasting almost 100 basis point cut in policy rate from now till end of the year. That will have a near-term impact on net interest margins for some of the banks, which are a large contributor. So yes, beyond that, one can be more constructive here. But in general, I think BFSI space will continue to have an impact. And even on the non-banking space, I think there could be some slowdown in the growth rates on account of slowness that we expect in the overall economic growth this year.
Okay, so that's the overall outlook that we are seeing from Nomura on how the markets are, what the economic growth is expected to be for FY26. But let's shift focus to the banking space, where a host of BFSI counters came up with their fourth quarter earnings over the weekend. Let's get in Harsh with more details on this.
I'm going to start off with IDFC First Bank. Now, in terms of the margin number, it's largely in line. There's been a 9 basis point contraction where margins is concerned. It's coming at 5.95%. In terms of where the likely miss or the larger miss was, OPEX continues to be elevated. That's point number one. And point number two is you've got credit cost, which also continues to be elevated. So some bit of disappointment on both of those counts, due to which, of course, there's been a bit of a recovery in terms of ROA, but nonetheless, it's not been a full recovery. So something to watch out for where IDFC First Bank is concerned. ROA, in fact, down around 5 basis points on a sequential basis. NPA ratios also largely flat. So that's how IDFC First Bank played out. Let's look at RBL Bank. The quarter was slightly better than expected. Slippages were lower sequentially. Recoveries have improved, and the worst likely seems over, is what analysts seem to suggest. Loan growth guidance for the next year is solid. You're expecting an OPEX growth of roughly 10% odd. Cards is also expected to grow mid-single digit is the expectation. Margin pressure will be expected till H1 FY26. Thereafter should come down. And in terms of the portfolio, which is retail secured and wholesale portfolio, there's been near zero credit cost over the last at least 8 odd quarters with regard to RBL Bank. So a thumbs up with regard to the numbers of RBL. Let's also look at L&T Finance. Again here, the numbers largely look steady. The credit cost taper is being witnessed. The ROA also is steady. They've upped their ROA guidance at least for next year versus this year, and overall even growth is expected to be over 25% at least on the retail loans. And this year, given that the AUM growth was just about 14%, likely that's a big positive as well. So lots of positives to take out from both RBL and L&T Finance. IDFC First still needing more.
Another stock which is in focus is also something like a Shriram Finance. If we look at how this share is doing currently, down about 5%, and this is after higher credit costs. The company's net profit and margin have contracted as well. Umesh Revenkar, the executive vice chairman at Shriram Finance, told NDTV Profit that the company will remain in wait and watch mode with regard to where the asset quality and provisioning is concerned for the next 2 quarters. Listen in.
In terms of on the margin front, you've suggested that liquidity within the company remained high, and therefore there's been a bit of a miss with regard to where margins is concerned. And therefore, how should we view this? Is this a 1 quarter phenomena? Because even in the last quarter, we saw a bit of a miss because of this. Is this a 1 quarter phenomena? And how quickly will this unwind, in your opinion?
Good morning. See, if you look at the last quarter, back end of December, we did raise some money, international money. And we had a couple of occasions of raising a long-term only resources, which normally do not happen every time. So we went ahead with it. So we are carrying higher liquidity, and we are confident of utilizing the same in the first 2 quarters of this financial year. So overall, we would like to maintain a net interest margin of around 8.5. Even during the last full year, financial year, it was 8.55. So this financial year also will be around that target.
Okay, so point taken. And therefore, the full financial year will likely be 8.55-ish or 8.6%. But the recovery will happen, sir, in Q1 itself, or will we have to wait another quarter? Will there be a lag?
It will be 2 quarters, but yes, first quarter will be the first quarter where the utilization levels will be very high, because fresh fundraising in the first quarter will be on the slower side. Typically, April, May, the fundraising is slowed down every year. So we are confident of utilizing the excess liquidity.
And sir, what is the impact of the repo going to be like on your book? What's your floating versus fixed? How much will you pass through? How much will you retain? And therefore, what should the repo incremental be in terms of margin impact?
See, our floating is less. Floating is around 14%, and 86 is the fixed one. So the impact of a floating the repo rate will be lesser. But even then, as and when the fixed tenor comes to an end, we will be raising fresh resources, which will be at cheaper rate. So ultimately, 3 to 6 months time, we should get some benefit of whatever the repo already reduced. And of course, all these things takes time to pass on from banking system to us and from us to the customer. So some benefit will be passed on to the customer too.
Well, that was the overall commentary and the updates that we are seeing from the banking space. But another counter to focus is on something like a Dr. Lal Path Labs, which reported a good Q4 as the profit beat estimates. In fact, Ved Goel, the group CFO and CEO, Dr. Lal Path Labs, had a conversation with us on what made it possible. Listen in.
Mr. Goel, the highlighting factor when it comes to Q4 FY25 numbers is the margins. So good uptick in margins. So what are the reasons? Because I believe we have not taken any kind of price hikes, so considering no price hike taken, how should we look at margins? Number one, and are they sustainable considering the digital investments that the company has been doing?
Yeah, no, thank you. These margins are increased. There are a couple of reasons. One, of course, the geographical mix and test mix, which definitely helped us to improve the margin. And in that, if you see our SwasthFit, which has now contributed 26% of the revenue in this quarter. This is also, helping in improving margins. And overall, if you see Q4, generally, we have higher margins as compared to, let's suppose, Q3. But overall, I think going forward, I would say these margins will be in the range of 27% kind of, margins, which are more sustainable, more, standard, which is somebody should take this going forward.
Okay, so company won't be seeing 28% margin, but 27% of margin are kind of sustainable. But any reason for 100 basis point decline in margins?
So that is where you yourself said because we are investing in the business. What is happening right now? We are going deeper in our core geography. We are expanding our footprints in our south and west. And that is where, if you see in this year also, we have opened net 18 labs. And going forward also, we are saying we are in the process of opening 15 to 20 labs in this coming year as well. Along with that, there are investments which is required in terms of technology, in terms of automation, more spending on A&P because we are going newer geography. And there are, investment which has made in the past is still not matured. They will take 12 to 18 months to mature. So those are all investment which is, starting this year and coming year. So that is where I think these investment will require some bit of, profit, which will take. That's why I'm saying 27% is the more sustainable margins going forward.
Okay, understood. Now coming to the revenue growth, revenue was up 10.5%, which is ahead of the industry. But Mr. Goel, there was a time when a company used to see 12, 13, 14% kind of revenue. Now, can you get back to those growth levels because the kind of investments you're doing or the kind of expansion that the company is being doing and taking the specialized tests into consideration, can we go to that 13, 14% level? If yes, what are the initiatives that the company has been taking?
Yeah, definitely. I mean, if you see last year to this year, there is definitely an improvement. If you see last year, FY24, we grew about 10.4%, in which there was a price increase of about 3.5%. And from there, if you see 10.5% this year without any price increase has itself has improved by, let's suppose, 3%. Going forward also, whatever we are investing in the business, we are very confident that we should be doing better than this year, FY25. And I'm not putting any number, but definitely we are confident that without any price increase, we should be doing better than this FY25.
Okay, better than FY25 is the expectation for Dr. Lal Path Labs, is what we are seeing. But moving on with the upcoming earnings which are in focus, Ultratech stays in focus after the company is set to announce its quarterly numbers. Mihika joins in with more details on this. What are key expectations looking like?
So it's expected to be a fairly good quarter. As per consensus analyst estimates, UltraTech's revenue, EBITDA as well as net profit could rise 12% on a year-on-year basis. However, it's key to note that margins are expected to be flat at around 20%. Something that's noted is volume growth expectations, which is a key reason why you're going to see a growth in revenues and then the trickle-down effect thereafter. Kotak expects Q4 volumes to rise 15% on an annual basis and 36% on a quarter-on-quarter basis to around 39.1 million tons. Systematics and Nuvama also expect volume growth of around 12.7% year-on-year and 9% quarter-on-quarter. And this volume uptick is mainly expected on the inorganic capacity additions that the company has been making, as well as seasonal tailwinds that we've seen in Q4. In terms of EBITDA per ton, it is expected to rise sequentially. Q4 margins are expected to be flat on an annual basis, but the expansion on a sequential basis is expected. Kotak expects the EBITDA per ton to rise 22% quarter-on-quarter to around 1,180 rupees per ton, while Systematic has noted UltraTech is one of the only 5 companies that it expects to see an EBITDA per ton of over 1,100 rupees in Q4, and this would be aided mainly by lower costs per ton in Q4 when you compare to the previous quarter. Cost per ton is to be held by operating leverage as well as muted overall costs.
Thanks for that, Mika. So that's the key expectations that we are seeing for UltraTech Cement. But let's shift focus. Piyush Goyal is set to begin his Europe visit to discuss various trade pacts with UK, Norway and Belgium. This comes at a time when India is seeking parity with Australia, UK from US on policies for tech transfer. Rishabh joins us with more on the agenda commerce ministers visit has to have. Rishabh, what are you picking up from this?
Right, what we're hearing is that Piyush Goyal has embarked on his Europe trip. He'll be visiting 3 European cities, 3 major hubs for trade with respect to India. The first one being Oslo, the capital of Norway. That will serve as the hub for the EFTA negotiations that are currently ongoing now. EFTA is basically a bloc of 4 European countries, which is headed by Norway. So we'll see some progress on that front from Piyush Goyal. He'll also visit London, which will serve as the launchpad for the India-UK FTA talks, and he'll also visit Brussels for India-EU FTA talks. So 3 key trade pacts coming out of Europe, and Piyush Goyal's visit expected to advance those talks and also sort of review the progress that has already been made. Remember, all these three FTAs or trade pacts, we could hear some sort of first tranche or an early harvest of this deal by the end of this year. So very, very crucial year for the Commerce Ministry in general. Now, last week, we also had Indian negotiators go to the US for trade negotiation with respect to the bilateral trade agreement with the US. And what we're hearing from that is that Indian negotiators have placed very hard a demand on the sort of tech transfers that will be needed from the US, given how ahead sort of US is in terms of technology that they have with respect to AI, with respect to semiconductors, or even quantum computing. So what India is seeking for is parity with the sort of benefits that Australia and UK get from the US. India also wants those sort of benefits that those countries get under the AUKUS Pact. So that is what we're hearing from the Commerce Ministry. A very, very interesting time for the ministry with respect to the global trade and tariff war that's also happening.
Certainly, very interesting time period considering the kind of global outlook that we are seeing in terms of the tariff talks with the trade agreements and more. But another big news that we are looking at is from the auto sector. SML Isuzu hit the lowest circuit in trade today after Mahindra and Mahindra announced that it will acquire almost 60% stake in the company for a consideration of 555 crore. My colleague Tushardeep Singh caught up with Anish Shah, Group CEO and Managing Director at Mahindra Group, to talk about these acquisition synergies and the future of M&M going ahead. Listen in.
Let's first talk about the rationale behind the deal. Why now? And what is the play that you're making in the CV space?
So let's look at our auto and farm businesses. We have market leadership in multiple segments. SUVs, we've grown from 12% to 23% market share. In tractors, we have a 43.4% market share, which is 4 or 5 points higher than where we were 5 years ago. In LCVs, we have a 51.9% market share. In electric three-wheelers, which is a business we really had a single-digit share in ICE three-wheelers at one point and nothing in electric, we today have a 43% market share. So we've been able to take segments and really do very well in those segments. We're now looking at the next one, which is greater than 3.5 ton commercial vehicles, and not as much in the MHCV space, but in the intermediate space between that. And we have a 3% market share today. With this acquisition, with a company that has done very well, that is positioned very well in the market, that takes our share to 6%. And we have a target then to go to 10 to 12% in the next 5 years, and then to 20% plus in another 5 years after that. So this is something that we feel positions our trucks and buses business very well and allows us to play in this segment in a manner that is consistent with how we play in many other segments in this space.
What are the immediate synergies that will emerge from this particular acquisition? What does Isuzu contribute to you? And what would you contribute towards SML Isuzu?
A number of synergies, because scale matters. So first, product rationalization, manufacturing synergies, sourcing at the distribution end, from a customer standpoint and a brand standpoint. So there are a number of synergies that will come into play. And as we grow a business, it's going to start creating a lot more momentum for our employees as well as for our customers and distributors and dealers. And that's going to be a very positive play.
Let's talk about a little bit about the valuation. The deal is being done at two levels. One is an open offer price, which is I think about 1,555 rupees, and the other one is 650. You believe that valuation is in the eye of the beholder. How are you seeing this acquisition in terms of the valuation is concerned? Why this gap, so to speak, between the open offer as well as the stake purchase that you're doing?
So we believe it's a fair valuation. There is an open offer that's done per the SEBI regulations. And for us, we would look at, in a sense, the blended offer price. And it's one that we feel is fair for all the parties concerned.
Okay. Any future plans to raise the stake even further beyond 58 point something or 59?
We have no plans to do that. We feel that with a 59% stake, we're well positioned to be able to take this business and grow it much further.
Okay.
And to the extent there is subscription from the open offer, yes, we will take that. But from our standpoint, we are well positioned today.
Will Mahindra look to merge SML with itself or keep it as a separate listed entity going forward?
It will stay as a separate listed entity. We have no plans to merge it within the business.
Okay, and the brand also continues, the SML brand continues?
That is correct.
Okay, but the Isuzu brand goes out. So any further synergy with the Isuzu part of the business?
There has been little at this stage. All the IP is owned by the company, and therefore there is nothing further at this stage that needs to be done from that perspective.
Well, that was the management of M&M on the new acquisition that we are seeing, that's SML Isuzu. But that's all the time that we had on this show. Stay tuned to NDTV Profit. A lot more news and updates on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Junkie brothers. What did the money buy?
Hello and welcome. You're watching Profit Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Puneet Javeri. Well, the market continues its upward trend after taking a breather for the last couple of sessions. We are up over 1% in trade, Puneet, today.
Yeah, definitely. Very interesting session that's happening in trade today. We've seen, a lot of reaction actually to numbers in trade, and we'll get to that in a bit. Nifty up almost 306 points. Let's also look at quickly at the, key contributors to the Nifty today. And let's pull that up because we saw, of course, over the RIL being one of the key ones to watch out for. Reliance after reporting results on Friday, some positive reaction seeing on ICICI as well as HDFC, a trend on the banking index continuing on the positive side. Just some negatives, but not too much to talk about there. Let's quickly look at the mid cap and the small cap index as well, because and see if they're continuing their outperformance with benchmarks almost at 1.18% in the mid cap 150. The small cap also in the green, but at 0.71%. And finally, just let's look at the BSE 500 because, as mentioned, we've seen some strong reactions on the mid-cap banks essentially because of some regulations that could come on in Tamil Nadu, and we'll speak about that during the show as well. Tejas Networks in the red after results. We'll also discuss that in the show. Sterling and Wilson, the other key losers. On the positive side though, RBL Bank is a key positive after Q4 earnings. We're seeing a clutch of defense names also that are positively reacting in trade today as well. Some more in terms of, Sonata Software also, after the company had earlier in the month issued that, there will be some revenue discrepancy in this particular time frame as well. But we have, a focus on a company actually in focus, Swami today, which is IGL.
Well, as the stock is up 4%, the company reported a weak set of Q4 numbers, but what's in store for the first quarter on FY26? To give us more details on that, we are joined by Kamal Kishore Chatwal, the MD of IGL. Thank you, sir. Thank you for joining us. Good afternoon, firstly. And if we start off with FY25 volume guidance of 9.5 MSCMD was not met, but any specific reasons behind that? And what is the volume guidance when it comes to FY26?
Well, first of all, a very good afternoon to your viewers. We guided 9.5 exit volume for last financial year, and we could achieve around 9.2 million in the fourth quarter, missing by a slight margin. This year we are guiding for around 10 million, and the major reason for missing the guidance was the uncertainty around the domestic gas allocation. What that has done is that some of the sourcing that we had to do, it took some time, and we had to moderate our own growth in some of the geographies deliberately, just to make up the shortfall in gas sourcing. So due to that, now that the sourcing has been complete, looking in the future growth also, we are closer to 10 million sourcing on the sourcing front. So we hope that this year we will be able to achieve around 10. And with the commissioning of new stations, especially in our growing or the mature market like Delhi and NCR, major stations are being commissioned. So with that, we are hopeful that we will be able to achieve the goal.
Mr. Chatiwal, good afternoon and thanks so much for joining us today. Any impact on volumes that you've seen post the price hike in Delhi as well as the adjoining areas?
See, Delhi, the price hike has been almost, you can say, negligible, that only 1 rupee increase has been there. So there's no major impact of price hike. But yes, in NCR, we did the hike by 4 to 5 rupees. But we are not seeing any major impact of that. The major reason could be that in the neighboring GAs, the prices are even higher than that. So we are still giving some of the advantages, or our competitiveness with respect to the neighboring GAs remain in outside GAs. Delhi, in any case, has only been increased by 1 rupee, whereas the rest of the country has increased by 4 rupees minimum. So, that sense, we have not witnessed any significant degrowth due to the price.
Right. So, the 0.8 MMSCMD of the extra volume that you're expecting in FY26, how much of this will come from new areas and how much of this will come from Delhi?
You see, if you look at the current year also, Delhi is growing at 3 to 4%, and we expect that to continue, given the fact that the DTC volumes will keep on reducing. So to absorb the impact and grow at 3 to 4% at a very high base is itself a big achievement. But outside GAs will continue to grow, like NCR is growing at around 15%, and outside Delhi, NCR is growing at around 28 to 30%. So we see that kind of growth coming in the coming 2 to 3 years.
And so from Q4 to Q1, there has been, a lot of changes in the gas, cost portfolio. Firstly, APM gas allocation has been reduced. This has been replaced by the gas from new wells. Also, spot LNG prices have dropped to $11 per MMBTU from 14 earlier. What does that mean for your gas cost for Q1 as compared to Q4?
You see, currently if you look at the domestic gas allocation, around 2/3 is coming from the APM and 1/3 is the new well gas. Now, the price difference is around 20%. The new well gas is 20% costlier. So instead of 6.75, 6.8 kind of range, we are at 7.2, 7.3. That's the average of the domestic composition. Now, that, the APM was slightly cheaper, but the impact is not much. And you're right that spot prices have come down, but unfortunately, we are not open to any spot adjustments in the sense that we have 100% long-term contracts. But even the long-term contracts have come down because they are linked to crude and Henry Hub, and both have softened last 1 or 2 months. In addition to that, the dollar depreciation or the rupee appreciation has also been beneficial. So all these factors, even the cost is going down. That is a positive impact. And if we can take some more few price hikes, then I think whatever impact was there of gas cost increase, so we will be able to pass on and absorb, and then more stability will be on that front. And then we can look at the growth. So we have made a huge effort in last 3-4 months towards gas sourcing, especially the medium and long-term gas.
Right, sir. Also, sir, we wanted to know that is there a scope for the company to replace the currently high-priced gas with gas from new wells, because new well gas prices are still cheaper compared to long-term contracts and spot prices, or is there any other way to lower your gas procurement cost?
That option is not available with the individual company. That whatever gas cut would be there, that will be replaced by new well. We cannot replace the new well gas with, say, any of the long-term contracts. But cut in APM would be there, that only can be replaced with new well gas. Second, whatever high-cost gas is there, so we are in discussion, we are looking at various strategies. How do we minimize that, or sell that to somebody else back to back? Because now we have more than 100% of our gas requirement is now medium, long-term, short-term contracts. So there's no one position there.
Got that, sir. And keeping all this in mind, what would be your margin guidance for FY26 specifically?
You see, in third quarter after the domestic cut, our EBITDA per SCM had come down to 4.34 level. We were very hopeful that, and the long-term guidance remains 7 to 8 rupees range. But in the medium term, 1 or 2 quarter, we may be in the range of 6 to 7. And after that, we plan to get back to that 7 to 8 kind of range that we have maintaining all along.
Right, sir. Also, if you could tell us how many DTC buses are there today and what is the timeline for them to go out. Also, I believe that we give a discount of ₹5 to them. So if they actually go out, then will your margins or spreads improve?
You see, it's. I think currently the total volume in DTC is around 1.8 lakhs. It's down from say 3.5 kind of lakh levels, and the number is around 1,700, 1,800 from 3,500. And in the next 2 years, they are expected to be phased out because last year we decommissioned around 17 DTC stations. So. I mean, that is a given thing that we are factoring in when we strategize, that in next 2 years, the DTC volumes will not be there. But one good point is that now the total share of DTC or CNG portfolio is around 3.3 to 4% from 7 to 8%. So the impact will not be much, and the kind of growth that we are seeing, especially in Delhi, passenger vehicle segment, is offsetting whatever volumes are going away in DTC.
And so which segment specifically in the CNG market is growing the fastest? Is that seen largely in private vehicles currently?
Yes, the private and the commercial vehicle space is growing faster. Because if you look at the conversion numbers last year, very good. 18,000 as compared to 15,500. That's the average for the year. So the total vehicle additions was very good, and the passenger vehicle continues to see very good growth, especially in the NCR region.
And sir, any new volume offtake tie-up for highway buses with any state?
Yes, we have been in discussion with various state governments, and UP and Rajasthan. There has been two where we have made some progress, that Rajasthan has given some buses on trial basis, and UP has ordered some 270 odd buses for the Noida depot. We are in discussion for other districts also.
And so what is the current volume ratio specifically between Delhi versus the other areas for gas specifically?
You see, Delhi is reducing now from more than 70%. Now it has 66%, 66%, and 35% is coming from outside GAs. So growth in outside GAs is more, and Delhi is more or less because the base is very high. So 3 to 4% growth we are seeing there. So that we are hopeful that it will keep on reducing, especially the increase in the industrial volume. Now industrial volume has touched 1 million, and we are hopeful that domestic volumes will also touch 1 million. Overall share of CNG is also reducing in our portfolio from 75, 76 to 73%.
Right. Sir, also if you look at the recent price hike that the company had taken, that completely does not offset the increase in gas costs. So do you plan to take any more price hikes in near future?
You see, that is always, we are reviewing the situation every month, every quarter, based on the availability of the gas, whatever gas is available. And also looking at the future growth, because we don't want that this fuel, the people should not think that this fuel, because it was pointed as both economical and environmental sustainability, when we pitched it like that. So that we keep in mind when taking a price hike, that it should be competitive, not only with the neighboring alternate fuel, but now with EV. Because our experience has been that wherever the price, the CNG prices have been high, the EV, especially in the 2 or 3 wheeler space, that has been impacted So we need to keep that competitiveness in mind when we are taking a price hike, that we are not only competing with alternate fuels, but newer fuels like EV.
And sir, the proposed EV policy for Delhi does pose a big threat to your volumes. Has there been any kind of conversations with the government regarding the same? And given that the timelines are aggressive, how much of a success do you see of the same getting implemented?
You see, we have also given our representation to the government. We had discussions with them. We have put that gas has always been a bridge fuel, transition fuel, and we cannot club gas with the alternate solid and liquid fuels that are available, be it coal, be it diesel, petrol, and so that has been our pitch, that you keep this as a transition fuel, and because there is significant advantages as far as environmental sustainability is concerned. And second is that the choice of a fuel should be left to the consumer or the user of the fuel. Rather than forcing a particular technology, it should be technology agnostic. At the economics and the environmental, whatever the government says, we are with the government of that, and we will support their sustainability initiatives. But again, the gas has always been across the world, has been a transition fuel, a low carbon fossil fuel. So that we feel that it should be kept as a separate category.
Lastly, sir, before we let you go, with lower crude prices, the biggest threat for IGL could be the cut in petrol and diesel prices. Now, if that happens, then the attractiveness or the competitiveness of gas as a fuel also reduces. So, would you also resort to price cut if petrol and diesel prices are cut as well, or would you look to maintain your margins?
As far as IGL is concerned, we still have if you look at prices of petrol and diesel in Delhi, still the 20 rupees, closer to 20 rupees gap is there. So even if 1 or 2 rupees price cut is there in diesel and petrol, still gas will remain in its competitiveness. And if there is any price cut, we evaluate the situation and do whatever is needed to make this fuel a competitive.
Gautam, Mr. Chirwal, thanks so much for joining and giving us a detailed view of of IGL Q4 earnings as well as the demand environment currently, as for gas as well as the current regulations for Delhi as well. But joining us now is Mr. Raghavendra Kedia, who's joining us now to give us some more context on this. Mr. Kedia, good afternoon and thanks so much for joining in. I just wanted you to start off your view specifically on IGL and on its Q4 earnings. How do you see this space right now?
Good afternoon. Broadly, IGL actually is in the gas distribution business, and if you see, the stock has corrected significantly in the last 6 months from levels of around 250, 260 to current levels of around 180. Now, that said, we believe that at current valuations of IGL at price of 185, the stock looks significantly attractive, and we believe there could be a full year EPS of around 25 rupees. And if you give a moderate P multiple of around 10 times on a 25 EPS, we reach to a target of around 250. So from the current price of 180, 185, that is a significant 35% upside for a 1 month investment horizon. So IGL at 185 looks attractive in terms of the valuation metrics. Also, if you look at the Gujarat Gas or its other peers, which are in the same gas distribution business, IGL is fairly or cheaply valued. So there could be catch-up play versus the peers in terms of P multiples. On top of it, IGL has a very generous dividend payout history, and that could be like an icing on the cake on top of the significant price gains we are expected to see in IGL. So at current levels of 185, where the company has reported good EBITDA margins, good revenue growth, and a slow and steady approach in terms of how the overall business will pan out in North India, we believe at 185, it's an attractive buy for a 35% upside, target 250 on a 1 year investment horizon.
Factor bar is what Raghavendra's view is specifically on IGL, looking at roughly about 250 as target price. Another stock in focus is actually Maruti Suzuki. Now the company did come with its Q4 earnings specifically during market hours on Friday, but we have seen the margins getting impacted by roughly about 150 basis points in this particular quarter, much below estimates. Now for Maruti, they do generally quantify the margins. What took a massive hit, we saw roughly about 20 basis point impact in terms of commodity cost. We've also seen marketing costs getting impacted by 30 basis points because of Bharat Mobility, as well as they launched the e-Vitara. They've quantified a 30 basis point impact on depreciation. That was the key one to watch out for in this particular quarter. The ramp up of that, because of 2 months is what they got in this particular quarter of that. They also saw the SUV share declining in this particular quarter. That had a huge 40 basis point impact on margin. And finally, in terms of other expenses, something we spoke about when the results came in, a 90 basis point impact due to a multitude of factors that they quantify in other expenses, such as the digitization, R&D expense, as well as repair and maintenance of the factories. So that was some key highlights. In the conference call, they mentioned some 7 key points that we want to highlight. The first one is, of course, export volumes. They're expecting a 20% growth in exports, while domestic demand will be flat to just a percentage of growth. In FY25, it was just 3% growth. The second key point is that they are expecting the e-Vitara as well as a new ICE launch, specifically of the SUV in a SUV portfolio in FY26. The third key aspect they mentioned is the e-Vitara sales will hit the markets essentially in the first half of FY26. September is what they are trying to have the launch of the same. And the first year, that's the fourth point, they're looking at 70,000 units for the e-Vitara, but they have mentioned that this will largely be exported, at least in the first year. Fifth key point, they mentioned they've taken a price hike in this particular quarter. It will have its effect from April, and that's largely to offset any kind of regulatory cost, which is largely airbags that have been added and a key mandate now for all cars. The sixth point they mentioned is the inventory at 28 days lower than the industry. And finally, management expects that the CAF 3 norm should come in within the next 2 months, and that will be another key aspect to watch out for all automakers in FY27. And we've seen, brokerages largely maintain their view. JP Morgan, 12,800 is the target price, similar to before. And they've said that the ramp-up environment where volume growth could remain soft going forward. Goldman Sachs also sees the small car segment recovery is not currently visible. And finally, in terms of BOFA, they mentioned that they have a target price of 14,000 rupees per share. BOFA has said that they don't want to overlook any kind of new launch, but margin drag in Q4 could have a similar impact in Q1 as well. And Raghavendra, let me come to you first. Specifically, how did you view Maruti Suzuki in terms of the Q4 results and any kind of stock call that you have right now going forward? Do you see this as a buying opportunity going forward?
Maruti specifically, if you look at the Q4 earnings, what we actually are concerned about is their reduction in the market share in the SUV business. On top of it, what a projection or commentary has been in regard to the domestic growth or the India sales numbers for the year ahead, that seems to be pretty much flat with a no growth in a good case scenario. So with falling SUV market share, with the domestic volumes remaining pretty much flattish, we believe that the stock has beaten down significantly, but it won't give great returns from current levels. But yes, considering the attractiveness at 11,900 levels in terms of the huge price correction that has been in the last 3-4 months, we still believe that a 10 to 12% upside is possible in Maruti, considering the attractiveness in terms of price levels at 11,900. But overall, it could be a wait and watch for the next 2 quarters when new launches come into play. And we believe that there could be very tough competition from Indian peers as well as the Chinese imports in terms of the EV space in the passenger vehicle sector and the market. So Maruti Suzuki, we would not recommend a fresh buy, but if someone is holding, can continue for a double-digit return in a good case scenario, that is around 12% on a 12-month investment horizon. Overall, on 4-wheeler space, we are actually going live, and we like 2-wheeler space more in the entire auto pack, and believe that a good monsoon could augur very well for 2-wheeler manufacturing companies in the quarters ahead. And for fresh buying, we are avoiding any kind of 4-wheeler large cap, mid cap names at current juncture.
Right. Well, that was Raghavendra's view on Maruti Suzuki. Well, let's also listen into the chairman R.C. Bhargava. We spoke to him on margins and the capital expenditure plans going forward.
The budget for the capex for 25-26 is between 8 and 9,000 crores. Karkoda will take some substantial amount out of that. There's, of course, the normal capex which goes on. We provided a small amount, token amount for new plant land and things when we decide where that is going to be.
Well, another big news from the auto sector was that Mahindra & Mahindra has announced an acquisition of SML Isuzu, where they will be taking a 58.96% stake in the company. Now, this is a very key acquisition for the company. They've largely been absent from the MHCV, which is the medium and heavy commercial vehicle space. Now, just to give some key highlights of the acquisition, they mentioned that they will be taking a 43.96% stake from Sumitomo Corporation, which is the promoter of SML, as well as separately another 15% stake from Isuzu Motors. But this will be done at a share price of 650 rupees per share, which is currently a 63% discount to the previous close of SML Isuzu, which currently trades between 1500 to 1700 rupees per share. So it's a deep discount that M&M has been acquiring this particular company. M&M also said that they will mandatorily launch a new open offer of 26% stake, and that will be done at 1554 rupees per share. Essentially, this is for the minority shareholders, and the 1554 rupees per share value has been calculated with the SEBI mandate and the formula for open offers post acquisitions. Now, the key rationale for this particular acquisition, they mentioned that is, of course, a proposed step towards establishing a stronger presence in the 3.5 ton and above segment for M&M, something that is very absent in the current market scenario. M&M currently just has about 3% market share. This will increase to 6% now going forward. And they've also said that they plan to increase the market share to 10% going forward by FY31. But my colleague Tushardeep Singh also caught up with Anish Shah, the group CEO and managing director at Mahindra Group, to talk about this acquisition, synergies, as well as the future of M&M going forward. Listening.
Let's first talk about the rationale behind the deal. Why now? And what is the play that you're making in the CV space?
So let's look at our auto and farm businesses. We have market leadership in multiple segments. SUVs, we've grown from 12% to 23% market share. In tractors, we have a 43.4% market share, which is 4 or 5 points higher than where we were 5 years ago. In LCVs, we have a 51.9% market share. In electric three-wheelers, which is a business we really had a single-digit share in ICE three-wheelers at one point and nothing in electric, we today have a 43% market share. So we've been able to take segments and really do very well in those segments. We're now looking at the next one, which is greater than 3.5 ton commercial vehicles, and not as much in the MHCV space, but in the intermediate space between that. And we have a 3% market share today. With this acquisition, with a company that has done very well, that is positioned very well in the market, that takes our share to 6%. And we have a target then to go to 10 to 12% in the next 5 years, and then to 20% plus in another 5 years after that. So this is something that we feel positions our trucks and buses business very well and allows us to play in this segment in a manner that is consistent with how we play in many other segments in this space.
What are the images?
Well, that was Anish Shah of M&M with his view and rationale on this acquisition. With that, let's slip into a short break and we'll be back with more news on the other side.
That's huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled.
Benchmark jumps over 1%, Nifty trades above the 24,300 mark, while the Sensex gains over 1,000 points, with Reliance as the highest contributor to the Nifty. Broader markets trade in the positive territory.
Well, share prices of IGL Indraprastha the Gas Limited gains over close to 4% in trade on the back of strong margin outlook driven by the management.
CBDT sets aggressive crackdown plan for FY26, estimates that it can find 2.4 lakh crore rupees in undisclosed income. This is the latest in the government's move to tighten the net around the black money and plug tax evasion gaps. That's an NDTV Profit exclusive.
A lot of stocks are in news. Maruti Suzuki gains over 1.5% despite the poor show, while SML Isuzu hits lower circuit after Mahindra & Mahindra announces that it will pick up a majority stake in the company. M&M though trades close to 1.5% higher.
Defense Minister Rajnath Singh briefs Prime Minister Narendra Modi in a 40-minute meeting on security preparedness following the Pahalgam terror attack.
Welcome back. You're watching Profit Buzzers on NDTV Profit, and first, the CBDT expects to unearth nearly 2.4 lakh crore in undisclosed income in the current fiscal, that is FY26, launching a sweeping crackdown on black money and tax evasion. Now, the plan aims to plug systematic loopholes and bring the informal economy into the tax fold. Shrimi joins in with more details on the same.
Yeah, so the direct tax apex body who decides on the direct tax matters have actually put out, outline an action plan. This is an internal action plan disseminated to all investigation heads across the country, where they first of its kind move where the CBDT has set a target to detect 2.4 lakh crore in undisclosed income for the current financial year. And in fact, CBDT directed, tax officials to have a sector-specific extensive report to formalize informal economy. So, as per the strategy, investigation heads asked to submit a detailed report on select sectors with significant tax evasion, and select sectors could be, ranging from manufacturing, services, agriculture, mining, hotels, healthcare, retail, trading, scrap, dealing, etc. And this detailed report should focus on the business landscape and key players of that particular sector, merger and acquisition of the sectors and its respective companies, bulk deal, shareholding changes, if there is any IPO in plans, if there is any delisting happen, restructuring, and even the investment trends. In fact, CBDT also tells, field official to have a financial metric included in that report, which will talk about the advanced tax payment these companies have done, come from that particular sector, profit margins, input and output costs, tax evasion patterns, cross-border tax issues, if there are any, and any risk outlook of that sector. And in fact, the timeline has been also set by the direct tax apex body. They are saying that by May end, the next month end, they have to identify these sectors and prepare a report by December end and submit that report to board by February 2026. In fact, of all the 2.4 lakh crore target, 60% should come from intrusive methods and 40% through non-intrusive. And Mumbai given the highest target of 60,000 crore, followed by Delhi 45,000 crore, and Bengaluru and Ahmedabad 20,000 crore each. So clearly, a strategy, extensive plan to bringing the informal economy under the tax net.
Well, thanks to Shimi for getting us that exclusive on the CBDT FY26 crackdown plan. Now, let's shift focus to the banking space, where a host of BFSI counters came up with their fourth quarter earnings over the weekend. Let's get in Harsh with more details on this. Harsh.
Well, yeah, so a couple of stocks in focus on the back of that. We'll first talk about RBL. It continues to be a tough quarter. It's not like ROAs have gone back to normal, but what we've seen is credit costs have tapered when you're looking at it sequentially, which is the key positive and which has impacted the numbers as well. So that's point number one. In terms of FY26 guidance, things looking better. The cards business is expected to grow mid-single digit, which is a positive. NIM pressure is going to be expected till the end of H1 FY26. That too, to a large extent, is positive. And what it's done is it's had near zero credit cost in retail secured and wholesale over the last 8 quarters, which has been one key positive. So there are only certain pockets which is impacting the credit cost number, which should likely get better going forward. The PCR against microfinance NPA is now at 100%. Again, a very key positive. They're expecting normalization across the board starting Q2 FY26. All of this positive commentary is leading to the kind of reaction on the counter that we're seeing. The other one is an L&T Finance. Now, L&T Finance, a good set of numbers, 2.2% ROA. FY26 guidance is also strong. Likely the impact on L&T Finance today is more to do with everything that's happening with regard to Tamil Nadu. The Tamil Nadu portfolio might well impact the numbers. Otherwise, it's a strong number. Credit costs are on a taper. ROA is steady. You're expecting the ROA inch up towards 2.8% in FY26. Growth guidance is strong at 25% for FY26 as well. All of those factors should play positive.
Well, thanks for that, Harsh. But, let's get in Amit Bhuptani, the derivatives and technical research analyst at Nirmal Bang Securities, who's now joining in. We also have Raghvendra with us. But, Amit, let me come to you first, both on RBL as well as L&T Finance, both seeing a strong reaction on trade today. Any view that you have on charts regarding both these stocks?
Yeah, hi, good afternoon. So if you look at the RBL Bank, currently the stock is having resistance on the upside at 210 level, 210 level. And from the point of view, if it gets clearance above that level, then only we might witness the fresh rally in this counter. Overall, if you look at the setup, volume has been increased nicely from last 2 to 3 days of trading session. But from the current scenario on the monthly pattern, it need to get clear above 210 level. Then only we will get confirmation for the further leg of buying. While if you talk about the L&T Finance currently is trading and it has currently we have witnessed that from last 2 days of trading session, it has shown some liquidation from the upside levels. Volume has increased substantially from the lower ends. Currently stock is having a support at 155 level of the 200 DMM. So if it goes below 155 level, then only we will exit the long position. So or else the fresh buying entry will be again reinitiated above 172 level. So anyone who want to create new long position, once the counter goes above 172 level, then new long positions can be created at that point of time.
Right. Let's get in Harsh again to understand more about the Tamil Nadu regulation that are expected to come in as per news reports.
Well, absolutely. Thank you. So, the Tamil Nadu government has introduced a bill, at least that's what news reports are suggesting, to curb coercive loan practices or loan recovery practices. Now, this is more for unregulated entities rather than regulated entities being NBFCs and banks. Unregulated entities like money lenders, etc. This is more towards that, but this will have a knock-on effect on banks as well, because you will have recovery agents of NBFCs, banks, who will also to some extent have to taper down with regard to the way they are conducting their recoveries. That's what we've seen basis how it's played out in Karnataka. Now, it could drag collection efficiency, because that is what happened when a similar bill was passed in the Karnataka state. MFI AUM overall in Tamil Nadu is large, around 51,000 crore. MFI is the portfolio by regulated entities, and Tamil Nadu is the second largest state with regard to MFI exposure. And lenders with the highest exposure within this category is something like an Equitas, a L&T Finance, a Suryodaya Small Finance Bank, a Credit Access Grameen, an Uchivan, a Jana Small, and an AU Small. All of those will likely get impacted to some extent, the extent to which will vary depending on the player, but will get impacted likely, and you'll see some of them reacting on the back of this.
Right. Let's get in Raghavendra's view on the proposed regulations of collections in Tamil Nadu. Raghavendra, do you actually see any impact that could come in on L&T Finance because of this? As Harsh was mentioning, this is more likely or most likely for the unorganized sector and not for the organized sector.
Definitely, there will be an impact, but it could be actually very limited impact. However, very few handful of players have a very good exposure in the geography of Tamil Nadu. And as you said, Equitas or an L&T Finance or a Jana Small Finance Bank, these names which have a exposure in terms of the microfinance book, particularly to the state of Tamil Nadu, might see very dented recoveries or delayed recoveries, and hence their NPAs specific to the MFI book could be impacted. So that's a negative. And we see that price reaction to this announcement is correct in terms of the stocks are like L&T Finance is trading at 165, down by around 4%. And this have a history of actually impacting the recoveries in the state of Karnataka. So I think we have a precedence where some similar negative impact for quarters ahead could be seen across Tamil Nadu and the books of these micro lending banks. But yes, broadly it will be impacting more the unorganized players versus the listed large cap names, as we just discussed. But net, it could be a slight negative in the space. Overall, we are bullish on the banking sector with overweight in private banks, with overweight in small cap names. So this correction could be taken as a buying opportunity for a broader recovery in the overall banking sector, which could be the leadership role for the market recovery. So any dip or fall could be taken as a buying opportunity, considering the great rate reduction and RBI liquidity boosters coming on and off. So we are bullish on banking, but this particular event could be taken as a buying opportunity.
Got that, Raghavendra. But Cholamandalam is also another stock that's in focus. After the company's profit jumped 18% and beat consensus estimates, we caught up with Arun Selvan, the president and CFO at Cholamandalam Investment and Finance, and he expects the profit to improve by 20 to 25% in FY26. Listen.
Let me first start off with the provisions number, because generally on a sequential basis in Q4, we see a little bit of a tapering down with regard to provisions. And that's also a little bit to do with seasonality. Not seeing it this time around. Can you just take us through what's happened there?
Yeah, you are right. But what we have done this time is we have provided a little bit more on the consumer and small enterprises loans, primarily because, especially in the fintech segment, where we have been slowing down, as we have discussed earlier, and we are now more or less almost exiting most of the players. So when you are slowing down and exiting, you will tend to have slightly larger requirements on provisions. So to that extent, we are fortifying our provisioning requirements out there. So that had made the provision seem to be a little higher. In rest of the products, it had followed the similar pattern.
Okay. Sir, is this done because there is a concern there or only out of prudence?
It's more of prudence, because when you're running down a book, you tend to have more of the bad apples, at the bottom of the barrel. So you better provide more so that you are fortified against any unexpected surprises out there. The other aspect also is in the rundown or the reduction in the stage 2, stage 3s in other products have also not been significantly larger as it used to be in Q4 in any typical year. So to that extent also the provision reversals have been a little muted. I was just thinking on that, yes.
Yeah, okay, point taken. And sir, do you believe that there's going to be some amount of a spillover FY26 as well with regard to this book, or do you believe that there's enough cushion now?
There's enough cushion is what we believe, because we have provided in more than 150 days at around 75% and 180 days at 100%. So to that extent, recoveries are, we have seen them happen, and so that is why we have taken this call. So we should not have any more surprises or shocks in this portfolio as we move into FY26. Subject to the global and economic issues out there. You are seeing every other day, you are seeing each state coming out with their own thing of not wanting to pursue collections, like Karnataka, I was saying, in Tamil Nadu. So hopefully that shouldn't deter payments. Yeah.
Point taken. So what's the impact like if Tamil Nadu were to impose this?
We need to see, because this is primarily focused on the MFI type of a borrower profile, so we should not have any large impact. But then sometimes there are some spillouts on other portfolios, but it will take a longer time. Not that we are being harsh in our collection efforts or collection mechanisms, so we should be not impacted that much. But I'm just saying that there will be fallouts if it depends on how it is imposed by the government, as well as how the others are reacting to this.
And let's cut into the Delhi Chief Minister Rekha Gupta, who is speaking at the NDTV's Emerging Business Conclave.
आयुष्मान भारत का हेल्थ कार्ड हमने रोल आउट किया है. क्या आइडिया है इस बुनियादी हेल्थ सुविधा को देने के पीछे आपका नेशनल कैपिटल के सिटीजन्स के लिए?
मैं एक्चुअली बताऊं, सच में जो 70+ एज ग्रुप के हमारे रेजिडेंट हैं देश के, उनको ये हेल्थ एश्योरेंस मिलना सरकार की ओर से कि आप निश्चिंत हो जाइए, आपकी किसी तकलीफ़ में, आपकी किसी बीमारी की स्थिति में सरकार विल टेक केयर ऑफ़ यू, आपकी पूरा ध्यान रखेगी, आपका इलाज कराएगी, आपकी टेस्टिंग्स, आपका हर वो मेडिकल एक्सपेंडिचर जो आपको अपने बूते पे करना कई बार डिफ़िकल्ट हो जाता है, कई बार आपके बच्चे भी उतना सपोर्ट नहीं कर पाते, कई बार सिचुएशंस बड़ी ऑड होती है। ऐसे में सरकार जो अपने सीनियर सिटीजन्स की केयर टेकिंग कर रही है, ये ना केवल दिल्ली के लिए, मैं बताऊं पूरे विश्व में आप कोई देश उठा के देख लीजिए, ऐसी योजना आपको मिलेगी नहीं। ये पूरे वर्ल्ड के लिए एक विजनरी योजना है, जिसमें आप अपने देश के, अपने शहर के 70 साल से ऊपर के बुज़ुर्गों का इलाज करा रहे हैं, डिस्पाइट ऑफ देयर इनकम स्टेटस, उनका धर्म, जाति, स्टेटस कुछ भी इसमें काउंट नहीं करता। आपके पास उस शहर का आधार कार्ड हो, आप वहाँ के लोकल रेजिडेंट है, दैट इज़ एनफ। आप सोचिए कितनी खूबसूरती है इस योजना में कि एक अमीर आदमी जो अपने सब कुछ उसके पास होगा उसके लिए भी ये योजना है, और एक गरीब रेडी बटरी वाला व्यक्ति भी, उसके लिए भी वो सेम योजना है। और सही बताऊं, अमेरिका हो या कोई और बड़ा देश हो, अगर उन्होंने कोई हेल्थ का प्रोविज़न अपने सिटीजन्स के लिए क्रिएट किया होगा तो केवल उसका क्राइटेरिया है आप टैक्स पेई हैं कि नहीं है। अगर आप टैक्स पेई हैं तो गवर्नमेंट विल गिव यू हेल्थ असिस्टेंस। पर ये जो योजना है, वेदर यू आर टैक्स पेयर और नॉट, कुछ भी आपका स्टेटस है, आपको ये योजना समान रूप में हर एक बुज़ुर्ग को मिल रही है। मैं सच में थैंक्स करना चाहूँगी नरेंद्र मोदी जी का, देश के प्रधानमंत्री जी का, जिनकी वजह से आज दिल्ली के सब बुज़ुर्गों को उनको एक बहुत ही खूबसूरत लाभ मिला है, योजना मिली है और जीने का एक नया अधिकार मिला है।
और मैं ये इसी बात पे आने वाला था कि प्रधानमंत्री का पर्सनल फोकस इस योजना को लेके बहुत रहा है। पर्सनली उन्होंने खुद पुश किया है 70+ की आरोग्य स्कीम को देश भर के लिए, और काफ़ी दिनों से ये रुकी हुई थी नेशनल कैपिटल में, और अब आपको लगता है कि आप इसको पूरा स्प्रेड दे पाएंगी। वो लोग खासकर जिनको कि इस तरह की चीज़ों की जानकारी नहीं पहुंच पाती है, जो लोगों को जानकारी हो जाती है वो तो जानकारी से सुविधा का फ़ायदा उठा लेते हैं, उनको भी आपकी सरकार कोशिश करेगी कि क्या उनको पूरी इन्फॉर्मेशन दे और वो इसका फ़ायदा ले सके?
मैं प्रॉमिस करती हूँ दिल्ली के हर एक 70 साल से ऊपर के बुज़ुर्ग को कि आप हम तक पहुँचे या ना पहुँचे, सरकार आप तक पहुँचेगी और एक एक बुज़ुर्ग का रजिस्ट्रेशन करा के उसको इस हेल्थ योजना का पूरा लाभ मिलेगा।
सो चीफ मिनिस्टर, दैट यू प्रॉमिस फ्रॉम द NDTV's फोरम, थैंक यू वेरी मच। एक और बात बताइए मुख्यमंत्री जी, आप यू आर ए यंग चीफ मिनिस्टर, बीजेपी के शासन में पहली बार एक महिला मुख्यमंत्री बनी है दिल्ली में, और दिल्ली में मुख्यमंत्री बनने के पिछले 10 साल का एक्सपीरियंस जो था उससे कहीं ना कहीं लोगों को एक बड़ी डिसअपॉइंटमेंट भी हुई थी कुछ इश्यूज़ को लेकर के। आपके अपने मन में, क्योंकि आप दिल्ली के रेजिडेंट हैं, आपने स्टूडेंट पॉलिटिक्स करी है यहाँ पे, आपके अपने मन में एक नेशनल कैपिटल की क्या छवि है, कैसे चेंज देखना चाहती हैं आप उसमें?
मुझे कई बार ये प्रश्न पूछा जाता है कि आप दिल्ली को कैसा बनाना चाहती हैं, लंदन बनाना चाहती हैं, पेरिस बनाना चाहती हैं, क्या बनाना चाहती हैं? तो मेरा एक ही जवाब होता है कि मैं दिल्ली को दिल्ली बनाना चाहती हूँ। दिल्ली जो देश की राजधानी है, दिल्ली जिसका एक अपना इतिहास गौरव है, दिल्ली का अपना एक कल्चर है, दिल्ली एक मिनी इंडिया है। पूरे देश के हर राज्य के लोग यहाँ आकर के बसे हैं, उनके लिए ये उनका होम टाउन है। और ऐसे में दिल्ली का इंफ्रास्ट्रक्चर, दिल्ली का हेल्थ, दिल्ली का एजुकेशन, दिल्ली हर मायने में दिल्ली अप टू डेट होनी चाहिए। पूरे देश में सबसे टेक्नोलॉजिकली अपडेटेड शहर होना चाहिए, पूरे विश्व में इसका एक सम्मान होना चाहिए। पिछली सरकारों के राज में आप देखेंगे एक नेगेटिव पॉलिटिक्स, एक नेगेटिव इमेज दिल्ली शहर की बिल्डअप हुई, और आज भी कहीं ना कहीं पॉल्यूशन के लेवल पे कहें, यमुना जी की सफाई के लिए कहें, दिल्ली का जब नाम पूरे वर्ल्ड फ्रेम में आता है तो हम देखेंगे कि सबसे ज़्यादा एयर पॉल्यूशन कहाँ है, दिल्ली में है जी। सबसे ज़्यादा प्रॉब्लम कहाँ है, दिल्ली में है जी। तो मैं ये सोचती हूँ कि दिल्ली की इमेज बिल्डिंग होनी चाहिए। दिल्ली में ये जो नेगेटिव एक्सपेक्ट है ये ख़त्म होना चाहिए। दिल्ली के लोगों को वो मिलना चाहिए जो दिल्ली का अधिकार है, और दिल्ली में रहने वाले लोगों का दिल लगना चाहिए यहाँ, ऐसा मेरा सोचना है।
मुख्यमंत्री जी, दिल्ली की छवि बदलनी चाहिए, और आपने पोल्यूशन और यमुना की क्लीनिंग के दो बड़ी चीज़ों की बात करी। दोनों ही मुद्दे आप भी जानती हैं, क्योंकि आप जैसे मैंने कहा कि स्टूडेंट डेज से यहाँ पॉलिटिक्स कर रही हैं, रहने वाली हैं, रेजिडेंट हैं दिल्ली की। दोनों ही मुद्दे ऐसे हैं जो कि जिसमें बहुत काम करने की ज़रूरत है। ये ओवरनाइट सॉल्यूशंस इन इश्यूज़ का हो जाए ऐसा संभव है नहीं। तो एक बड़ी कैपेसिटी आपकी गवर्नमेंट को, आपको खुद और सेंट्रल गवर्नमेंट के साथ कोलैबोरेशन में डिस्प्ले करनी पड़ेगी अगर हम इन दोनों इश्यूज़ को हमें सेटल करना है तो।
ऑफ कोर्स करनी ही पड़ेगी। आप देखिए, पॉल्यूशन जो है एक बहुत सीरियस मैटर है, और पूरी दिल्ली का हर एक नागरिक इससे बहुत इफ़ेक्टेड है। छोटा बच्चा हो, बड़ा बुज़ुर्ग हो, अनेक तरह की बीमारियां इस पॉल्यूशन के कारण से आज दिल्ली के लोगों को लगी है। पर समाधान क्या दिया पिछली सरकारों ने, मैं आपको बताती हूँ। समाधान के नाम पे एडवर्टीज़मेंट। हम पराली की दवाई बनाएंगे, वो दवाई बेच देंगे, अन्य राज्यों को देंगे, पराली ख़त्म हो जाएगी, हवा साफ हो जाएगी। ऐसी एडवर्टीज़मेंट के ऊपर करोड़ों रुपए का बजट सरकारों ने खर्च किया। पर आप तो मीडिया चैनल हैं, आप मुझे खोज के बताइए तो कि वो दवाई बनी क्या, किसी को मिली क्या, कोई इलाज उसका हुआ क्या, कोई लाभ मिला क्या? नथिंग। करोड़ों रुपए की एडवर्टीजमेंट के बाद ना कोई दवाई मिली, ना कोई दवाई बनी, ना किसी स्टेट में गई, ना पराली खत्म हुई। हाँ, उनकी सरकार बन गई इसलिए पराली खत्म। अब पंजाब का कोई रोल नहीं है पराली में। अब सारी की सारी पराली जो है वो बीजेपी गवर्नड जो राज्य है वहाँ से आती है। अब पंजाब की दिशा से आना बंद हो गई। तो ये उनका सॉल्यूशन था। अगला सॉल्यूशन ऑड इवन। अब बताइए, इतने समझदार लोग हैं, इतने सारे पर्यावरणविद भी यहाँ पर हैं, ऑड इवन करने से कितना पॉल्यूशन कम हुआ भाई? ये 3 मेजर स्टेप मैं बता रही हूँ जो पिछली सरकारों ने किए। एक, पराली की दवाई बनाएंगे, दूसरा हम ऑड इवन करेंगे, और तीसरा एक स्मोक टावर बनाया गया। कहाँ है वो एक स्मोक टावर? हमने खोजा, पता चला कि कनाट प्लेस में बना था, 6 महीने चला, कॉस्टिंग उसकी 2 करोड़ थी, उस पर एडवर्टीजमेंट 30 करोड़ का था, और आज वो वर्किंग नहीं है। अब बताइए, ये समाधान सोचेंगे तो एयर क्वालिटी ठीक होगी क्या? आज भी आपको लगातार जब पता चलता है कि जी आज भी एयर क्वालिटी ख़राब थी, आज भी, तो ये वो काम नहीं है कि साल के 2 महीने सर्दियों का मौसम आया तो आपने एयर का सोचना शुरू किया, तब आपने ग्रैब लगा दिए, तब आपको कोट फटकार लगा रहा है, तब आप काम करने की सोच रहे हो कि अब क्या करें, और कुछ नहीं मिलता तो दूसरे पे इल्ज़ाम, ये हरियाणा का प्रॉब्लम है, ये यूपी का प्रॉब्लम है, ये बाकी केंद्र सरकार का है, इसमें पीएम नहीं है, इसमें एलजी नहीं है। नहीं भाई, अगर आपको सच में एयर पोल्यूशन ख़त्म करना था तो एक उसका डिटेल स्टडी, उसका सॉल्यूशन, उसमें कंसल्टेंट्स, उसमें ऐसे लोगों की राय कि करना क्या चाहिए। हमने जब सरकार आने के बाद इसको पूरी तरीके से ऑब्ज़र्व किया, इस समस्या पे घंटों के लोगों की कंसल्टेंसी ली, तो ये समझ में आता है कि जो इसके कंपोनेंट है एयर पोल्यूशन के, चाहे वो आपकी डस्ट हो, क्योंकि आधे से ज़्यादा शहर तो आपका ओपन है, वहाँ पे ना ग्रीनरी है, ना आप वो सीमेंटेड है। दूसरा, इसमें व्हीकलर पोल्यूशन कि आपके जो व्हीकल पूरे शहर में चलते हैं उसका पोल्यूशन होता है। और ये जो डस्ट पार्टिकल एयर में रहते हैं, ये कोई 2 महीने के लिए नहीं आते, ये साल भर है। वो आज गर्मी के मौसम में भी है, वो सर्दी के मौसम में भी है, हर समय है। तो हमने आते ही जितनी योजनाएं बनाई, हमने वाटर स्प्रिंकलर्स थे, हमने जो स्मोक गन्स थी, पूरा साल भर चले एक्सेप्ट मानसून मौसम, क्योंकि उस टाइम तो ईश्वर बारिश कर रहा है। तो पूरा साल भर स्प्रिंकलिंग हो, पूरा साल भर स्मोक गन्स चलें ताकि जो एयर पॉल्यूटिंग कंटेंट हैं वो बैठ जाएं। ये साल भर की योजना बनाई, डिटेल्ड बनाई कि आपके अगर दिल्ली में 250 वार्ड हैं तो उन 250 वार्डों पे 4-4 मशीनें उनको अलॉट करनी है। उसके लिए बजट क्रिएशन किया, उसके टेंडर लगे, और अब वो जनता के बीच में आने की शुरुआत पे हैं। तो ये जो काम किया, मतलब अब व्हीकल का पॉल्यूशन है, तो व्हीकल मान लीजिए आप पब्लिक ट्रांसपोर्ट को कर लेंगे तो प्राइवेट ट्रांसपोर्ट, और प्राइवेट ट्रांसपोर्ट को भी कर लेते हैं तो जो दिल्ली के बाकी शहरों से यहाँ पे ट्रांसपोर्ट आ रहा है, वो प्राइवेट गाड़ी आ रही है, वो आपकी ट्रांसपोर्ट की बसेस आ रही हैं, राजस्थान से आ रही है, हरियाणा से आ रही है, पंजाब से आ रही है। तो क्या आप उनका पॉल्यूशन चेक कर रहे हैं? तो ये भी तो कंपोनेंट है दिल्ली के पॉल्यूशन में। तो इसके लिए क्या नीति बनाई, इसके लिए क्या किया? तो इस सब के ऊपर काम करने की ज़रूरत है, बहुत ज़्यादा डिटेलिंग में। और मैं विश्वास दिलाती हूँ कि दिल्ली की आपकी अपनी ये सरकार अब इस पे बहुत माइक्रो मैनेजमेंट के साथ चल रही है। हर एक जो सेगमेंट पॉल्यूशन का है उस पे काम किया जा रहा है और हर एक को समाधान दिया जाएगा।
और सेम यमुना पॉल्यूशन के लिए?
यस, यमुना। देखिए, यमुना जी पे भी केवल बातें हुई। सरकार ने 8,000 करोड़ रुपए पिछली सरकार को दिया, अब वो उन्होंने कहाँ खर्च किया, क्या कर दिया, पर यमुना को सॉल्यूशन नहीं मिला। कस्में खाई, वादे किए, बाद में माफ़ी भी मांग ली, पर होना क्या चाहिए था। आज यमुना जी का जो सेगमेंट हमारी दिल्ली में आ रहा है, प्रयागराज से शुरू हो, प्रयागराज पे ख़त्म होते हैं और यमुनोत्री से शुरू होकर यमुना का जो जितना हिस्सा दिल्ली के अंतर्गत है, वो सबसे ज़्यादा पॉल्यूटिंग इसलिए है कि उसमें 22 बड़े बड़े नाले जो कि नदी से भी बड़े हैं, वो सारे जाके यमुना जी में एज इट इज़ गिरते हैं, जिसमें आपका इंडस्ट्रियल वेस्ट होता है, जिसमें आपका डोमेस्टिक वेस्ट और हर प्रकार की गंदगी, केमिकल सब उसमें है। तो सबसे पहला इलाज तो ये है कि इन सभी नालों की डिसिल्टिंग हो, इन सभी के ऊपर STPs बने। ये जो जिस नाले को आप कर्व नहीं कर सकते वहाँ डिसेंट्रलाइज STP बने। आप यकीन मानिए कि मैं आपको पिछले 15 दिन पहले की, 1 महीने पहले की रिपोर्ट, देखो सरकार को अभी 65 दिन हुए हैं, एक भी STP वर्किंग में नहीं था उनकी सरकार के समय का, एक भी डिसेंट्रलाइज STP उन्होंने बनाया नहीं। आज हमारी सरकार के माध्यम से हमने 9,000 करोड़ रुपए इस प्रोजेक्ट में रखे और उसमें से 500 करोड़ के केवल डिसेंट्रलाइज STP की, जो आपके नाले को देन एंड देयर वहीं सफाई करके उसके बाद उसका BOT ठीक करके उसको नाले में छोड़ेंगे।
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have 2 credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they
Hello and welcome to NDTV Profit. You're watching Top Trades. I'm your host Mika Barwe, and with me is Varsha. Before we go and speak to the first manager we're talking today, let's just take a quick look at how markets are faring. You have the Nifty 50. It's showing some strength today, up about 1.2% right now. If you had to look at some of the counters that are contributing the gains, you have RIL up over 5% after it posted its Q4 results on Friday, followed by an SBI, Sun Pharma and Axis Bank all seeing gains of over 2%. Something that's on the losing end, however, Shriram Finance, it's bucked up some of the losses. It's down about 5%, but at the start of the day it was much lower. You also have some weakness in an HCL Tech, as Eternal or a Zomato Auto, as we used to call it, as well as the Bajaj Finance. When you look at the broader markets, the Nifty small cap is the underperformer of the day, up about 0.5%. Some of the leading counters on the small cap, you have something like an RBL Bank up over 10% on the back of a strong Q4 results, as well as some defense counters like a Garden Reach and Data Patterns seeing gains of 7 to 8%. But on that note, I want to welcome first of all Harsh to the show, and Harsh, you'll be taking forward the conversation which with DCB. We'll be talking to the MD and CEO, Mr. Praveen Kutty at DCB Bank. Take it up.
Yes. Hi, good afternoon, Mr. Kutty. Very quickly, I want to first understand from you first off, thank you so much, Mika, for handing that over. But Mr. Kutty, first off, pleasure speaking. Good afternoon. I want to first talk about the key number here, margins. They've come off substantially when I'm looking at it year over year. What should we expect as part of this rate cut cycle? Currently, you're able to hold them, at least in Q4. But can we expect margin dilution further, maybe over the next quarter or two? And if so, how much, and whether it will be temporary?
Good afternoon. Thank you for having me here. It's always a pleasure to be with you.
Thank you.
The numbers are decent. We quite like. It's in line with what we had planned out in our business strategy. The top line growth is 22% for the year. What's even more heartening is the operating income is moving in line with the top line. We're very happy with the increasing jaws. Our income growth as a percentage is higher than the cost growth, and the portfolio quality is looking better. The gross NPA, the lowest in the last 5 years, below 3%. Slippages have come down. Our provision cost, if you were to look at it and compare with the operating profit, we got a 5 times cushion. So all in all, a decent year. As far as the NIM is concerned, your specific question, yes, the NIM is stabilized. We've been able to manage the rate cuts so far by a combination of two activities. First, we'll talk about the liability side. We have gone ahead and reduced the savings account rate, which has an immediate impact on the net interest income. And also, we have done some tweaking on the retail term deposit, both bulk as well as retail. So that will have a long-term impact. You'll see the entire benefit of that coming over the next 12 to 15 months only, progressively each month over the next 12 to 15 months. On the asset side, we've grown co-lending quite a lot last year. I don't think that we'll see similar kind of growth happening this year, because while co-lending comes at a lower cost, it really reduces your net interest income. The yield that you get is lower than what you would get from organic sourcing. So that's one. The second is that you would see more of business loans, which as compared to home loans, so which will get you a better yield for the similar kind of cost of funds, similar kind of cost, and similar kind of slippage and gross NPA. So these are the activities which we have done and we'll continue to focus on to ensure that the margins are protected. But it's important for me to tell you that if there are more rate cuts in the offing, and the sooner the rate cuts are coming in, we will not be able to pass that on and the margins will take a hit.
But that will be transitional.
Yes.
Okay.
Absolutely.
Okay. So they will recover thereafter. And thereafter, where do you see it settling in at the end of this cycle?
Absolutely. So the only reason is that the rate cut has got an immediate impact on the floating rate EBLR linked loans, whereas the actions that we take on the term deposits will see the effect over a 12 to 15 month time, maybe even slightly higher.
Where should it settle in at, sir? Is 3.3 the realistic number, 3.5, 3.1? Where should it settle?
Well, the work is on. We would like somewhere between a 15 to 20 bips increase on the NIM. So there's a lot of work happening on that count. But again, like I said, what we have is our controllable variables. If rate cuts were to happen in the future, we're going to deal with it at that point in time.
Point taken.
So we'll work on what we can control.
Fair. Fair. Let me talk about growth now, because you've done very well this year, 25%. You're also guiding to double your balance sheet every 3 to 4 years, which is roughly 18 to 24% in terms of growth. How do you see loan mix evolve as a result of all of this? Because, and ancillary to this, because your aspirational credit cost number is roughly 0.5% odd, and therefore just trying to understand how the loan mix will evolve.
So there are something sacrosanct to the bank, which will stand good in all weather, and that is that we would be a smaller ticket, granular, secured, business-oriented bank. In times of NIM compression, there is always this temptation to go to a higher yielding unsecured loan or even a high yielding secured loan. We'll ensure that the growth that we have is within the business strategy that we have kept for ourselves. That strategy is not going to change. There are headwinds in the market as far as advances are concerned. MFI has taken its share of blows. But despite that, we've seen an improvement in portfolio quality. And for us, portfolio quality improvement is absolutely cardinal. It's very, very important for us. So the growth that you would see from DCB Bank in the coming quarters and possibly even the coming years would come from similar kind of stock, which is secured, granular, retail. That's a key. And we really believe for a bank with a balance sheet size of 76,000 crores, there is enough in the market, enough good lending that is possible in the market, which falls within the framework that we have.
Okay, and how should OPEX evolve? You're currently sitting at around 60% in terms of your cost to income. You expect to taper down on that? What is the lever which will help you expand ROA from here?
Yeah, first let's talk about the expenses bit. For the first time in 4 years, we've seen the jaws expanding. The rate of increase, the percentage increase in operating income is more than the percentage increase in the operating cost, both at a quarter level, of course, and also at the yearly level. We intend to continue widening the jaws. Where is the operating cost benefit coming from? Primarily, it is coming from two sources. One is productivity improvement. 3 quarters back, when I came onto the media, and I made a commitment that I do not see the number of employees that we have increasing from the current level for the rest of the year, and also for even the next year. I stand by it. In fact, the number of employees has come down. How are we able to sustain similar growth despite the number of employees coming down? The answer is fairly simple, difficult to implement, but simple to explain and articulate. The productivity increases that we have put into place has really helped. Second is a lot of expenses have gone into technology and more will go into it. And that has started showing results in reduction of operating cost. The paper stationery cost, the courier cost, those are the costs that which has come down dramatically. We're really playing the technology game to reduce the cost of operations, and it has got a spin-off benefit in terms of lesser operating errors and hopefully better work-life balance for our people as well.
And therefore, what's the aspirational ROA like, sir? Because you're still evolving on some of these strategies, and therefore, what would that goal be? Maybe a couple of years from now, where would that ROA number lie?
So we currently close the quarter at 0.95% ROA,
Correct.
And for the year we closed at 0.89. The first milestone in our journey, that's not a destination, it's a milestone in our journey, is to get to 1% ROA and 14% ROE. So that's a first step. We're working on it every quarter. What we're focusing on currently is to ensure that every quarter is better than the quarter that has passed in terms of 5 parameters: growth, operating income, cost, provision, and also capital usage. All the five are important for us. It's easy to say it, but that's what we want to do. We are focused on it. And if you were to see the last 3 quarters, it's been kind and generous to us. We've managed to achieve this. So the whole game plan is to become consistent, predictable, and boring.
Okay, so take your point, Mr. Kutty. We'll leave it at that. Of course, we'd love to continue to talk to you every quarter to try and assess as to where we lie with regard to being consistent, predictable, and boring. But it's interesting to hear that from the leadership of a bank. So thanks so much for joining us and giving us those insights. But
look forward to that. Thank you very much.
Right. Okay, I'm going to toss it straight back to you on that note, Varsha.
Well, thank you, Harsh, for joining the conversation. On that note, let me just invite Gaurang Shah, who's the Senior Vice President at Geojet Financial. Gaurang, I just wanted to have your view on DCB Bank. How did you see the numbers? Do you track the company?
Well, we used to track. Thank you so very much, Varsha, for having me on the show, and good afternoon to all of you. Also, we used to have a coverage on DCB Bank quite some time back, but then post our targets being in place, we've dropped the coverage. But I'm quite pleased to listen into the verbatim that the management was just giving into, and their aspirations are quite tall. 3% plus gross net NPA is tall, still not a likable kind of a run rate. You need to work very, very hard and burn the midnight oil. And of course, their presence in terms of their branch network, I think they need to seriously introspect in terms of their presence.
Would this enthuse you, Gaurang? Sorry, Harsh, invading into this conversation as well. Would it enthuse you to resume coverage on a DCB Bank with the way in which they've both given their guidance as well as put out their numbers?
Harsh, you are more than welcome. Absolutely no intrusion at all, to be very honest. But it will take me, just because of the words that have been spoken about and the statements that have been said just now a while back, that will not excite me to initiate a coverage. I would want to wait to see a much better run rate in terms of gross net NPA, a much better number in terms of their geographical reach, and of course, a little bit of more sanity and clarity in terms of the loans and that they have been giving out. In the past years, there has been a big question mark in terms of the loans that have been given out. That was one of the reasons, Harsh, to be very honest, why we removed our coverage post our targets being in place.
Okay, got it. Thank you, Gaurang, for that view. But after Karnataka, Tamil Nadu has now introduced a bill to curb coercive loan recovery practices, and this would largely affect microfinance institutions. Tamil Nadu is the state with the second largest MFI exposure, and we have Harsh with us. Harsh, what are the companies that are likely to be affected by this?
Yeah, let me get straight to it. The first one is going to be Equitas with a 47% exposure in MFI, and this is as per Citi Research, so I'll caveat that. L&T Finance is the other one, 22% exposure. Suryodaya has 20%, Credit Access has 20%, Ujjivan has around 14%, and Jana has 13%. But mind you, these are all regulated entities. Now, what Tamil Nadu is seeking is to curb unregulated entities in terms of the practices that they do with regard to recoveries, and therefore may not have a first order impact on some of these entities. But it could well have an impact in the short term with regard to collections in any case, because that's the experience that's played out, at least when Karnataka has implemented the exact same legislation. If this were to play out, you might see a bit of an overhang with regard to these stocks in the short term, because that played out in Karnataka as well, because collections might get impacted, again, only in their MFI, which is their microfinance portfolio. So maybe something to be watchful about.
Got it, Harsh. Thank you for giving us details on the same. Gaurang, I'll come to you. Within the, kind of the companies that Harsh just mentioned, something like an Equitas or Ujjivan Small Finance or a Jana Small Finance Bank, anything that seems attractive despite the short-term overhang that we could be seeing coming in?
Well, so this is a double whammy, isn't it, Mika? Because on one hand, you have a light approach for the unsecured loans from the RBI. There was a little bit of cool off and the statements made by the Honorable RBI Governor. And now you have a state government which is going to be the father of all this thing. So having said that, of course, it's a little bit too mature to comment on the impact, etc., etc. But and going ahead with the view that there is not going to be any serious material impact on the earnings, and more importantly on the correction front and on the asset quality. We do have coverage on Ujjivan, Equitas, we have coverage on L&T Finance, M&M Finance, we have coverage on two south-based NBFCs, that is Cholamandalam and Shriram, and we also have coverage on Bajaj Finance. It will be interesting to see how the story develops, but I hope that's going to be minimal impact.
So then with, whether it develops negatively or positively, we don't know, but some of the stocks are seeing pressure today. Would you see this as a buying opportunity for some of the companies that may have low exposure, something like a AU Small Finance or a Jana Small Finance Bank? They have only 12 to 13% exposure when it comes to your microfinance.
So I won't restrict myself only to low exposure to TN, that is Tamil Nadu. So and since you've taken AU Small Finance, that name also features in our fundamental coverage. But I think these are great times. I mean, Bajaj Finance, incidentally, Mika, when from last October when the market is under correction pressure, this is one stock which has made a new lifetime high, isn't it? So I think it's a great time, though it has not corrected much, just about close to 1% today as we speak. But M&M Finance, Bajaj Finance, Chola, Shriram, you mentioned AU Small Finance, Credit Access Grameen also features in our coverage. So yes, from a long-term point of view, you should use corrections like this to invest from a long-term point of view.
Right. Thank you, Gaurang, for that view. Let's move our focus to Maruti Suzuki, where in its fourth quarter EBITDA and net profit missed estimates. Let's go across to Puneet to understand what are the 5 things that affected margins and highlights from the company's conference call.
Maruti Suzuki is in focus after the company reported its Q4 earnings on Friday. Now, while the earnings did come during market hours and we saw a huge impact on the margins, down by almost 150 basis points, the company in its conference call mentioned a few key reasons. Apart from that, what were some of the key highlights? We highlight the 7 key points from the conference call as well. Let's first start with what was affecting the margins, and that is key because Maruti is very cost efficient in terms of margins. So we saw a 20 basis point impact because of higher commodity cost, largely attributed to steel is what the company said. We also saw marketing cost because of the e-Vitara launch as well as Bharat Expo by roughly 30 basis points. We also saw an increase in depreciation by 30 basis points because of the depreciation of the Kharkhoda plant. We also saw the share of SUVs falling in this particular quarter, and that had a 40 basis point impact on margin. And finally, in terms of the other expenses were higher by 90 basis points, and these include digitization among others, as well as R&D and repair and maintenance as some of the key aspects. Now, what were the 7 key highlights from the conference call? The first one was that export volumes is expected to grow by 20% at the time, but the company has mentioned that domestic volumes will be almost flat again in FY26. Last year, they grew by just 3% in FY25. The second key point, they are expecting e-Vitara and a new launch of ICE SUV as well in this particular year. That could boost, in terms of sales growth going forward. The third key point is that the e-Vitara, which is the electric version of SUV, is expected to start production in the first half of FY26, likely by September. This will largely be an export product, and they've said that the fourth key point, that this will have a volume of about 70,000 units in the first year of production itself, which is FY26. The fifth key point, they mentioned they've taken a price hike in April of 2025. That was to offset some of the regulatory costs in this particular quarter and should see some impact positively on margins in Q1. Sixth is that inventory at 28 days is lower than the industry. And finally, management expecting the policy on CAFE norms to come into effect in the next 2 months, at least in terms of the draft regulations to come out. And the key highlight is that most brokerages have also maintained their view while largely maintaining some key points. JP Morgan has a target price of 12,800 on Maruti Suzuki. They mentioned that FY26 could be a year which is weaker than FY25, something that most brokerages are penciling in. They've actually cut their EBIT estimates by 6 and 3% for the next 2 years. Goldman Sachs actually cut its target price to 12,000 rupees from 12,000 8,300 earlier, and they said the small car segment recovery growth is still not visible, and that's a key negative. And finally, in terms of BOFA, they maintained a target price of 14,000 rupees per share and mentioned that margins drag in Q4 could had some impact in Q1 as well of FY26. So overall, few negatives in terms of margins as well as growth, and that could weigh on valuations of Maruti Suzuki going forward.
Well, thank you, Puneet, for all the details. Gaurang, FY26 is expected to be weak compared to FY25. Just wanted to have your view on Maruti. How are you seeing this stock?
Near-term headwinds are definitely there. There is no denying. But my sense is that new launches going into the whatever remains of calendar year 25 and early part of 26 will definitely have more excitement. We are positive on Maruti. Let me give you a disclosure. We have target somewhere close to about 13,000 from a long-term point of view.
Got it. The next company that we are going to focus on is an Ultratech Cement. It's going to post its results today. Now, as per consensus estimates, revenues, EBITDA and net profit all are expected to rise 12% on a year-on-year basis, while margins are expected to be flat at 20%. Brokerages do, however, expect double-digit volume growth. Kotak expects Q4 volumes to rise 15% year-on-year and 36% Q-on-Q. Systematics Nuvama in the range of 12.7% year-on-year and 9% Q-on-Q, and this is mainly on the back of the inorganic capacity additions as well as seasonal tailwinds. And we also expect an EBITDA per ton to rise sequentially. This is because of better price improvements as well as lower cost. And that's what we are expecting out for Ultratech. However, it's trading slightly under pressure, down about 1%. Gaurang, I'll come to you. What are your expectations for Ultratech today?
Well, so first, let me give you a feel about what we feel about the entire cement sector. And, Mika, this is not a sector that is largely spoken about, despite the fact that this is, which we believe, of course, I hope we are right in understanding that it is insulated from the tariff war. It is more of a domestic growth story, cement sector. Consumption is quite steady and is growing compared to what we see last year. This year, we expect more cement bags to be consumed. Price upward movement of cement bag is expected by the time we say goodbye to this calendar year 2025. At least that's what the voices on the streets are telling us. Input cost, which was a concern, has gone down, and of course margin improvement is likely to boost the profitability as far as the bottom line is concerned. So we have more than half a dozen names in the cement sector, including Ultratech, which is the largest manufacturing capacity, if I'm not mistaken. 13,000 around is the target for Ultratech from a long-term point of view.
Right. Thank you so much, Gaurang Shah, for joining the conversation. Good to have you. Viewers, this is all the time we have in this edition of Profit Top Trades. Stay tuned for India Market Close.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
.361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
the last 1 month, if you see the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Jaggi brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board.
Hello and welcome to India Market Close. A very good afternoon to all the viewers. I'm Heeral Dadia and with me is Soumit Sarkar. Clearly an interesting day of trade. If you can just quickly pull up Nifty 50, 1.2% is the kind of gains we are holding absolutely steady with gains of around 300 points coming in there. 24,334 is what you're tracking. Overall, outperformance slightly in terms of the Bank Nifty, and what's contributing is your HDFC as well as your ICICI and a Kotak Mahindra Bank as well. Overall, 1,000 points up move on the Sensex as well. 80,266 is what you're looking at. Let's quickly pull up the sectoral heat map, because what was interesting is that it was mainly the IT sector that was ruling under pressure, and that's what continues. That has also recovered to an extent. If you put up an intraday chart of Nifty IT, it was down around 0.6%. Currently, it's seeing cuts of almost 0.2%. There you go, almost near the day's highest levels as we speak. I mean, is the kind of gains that you're seeing, cuts that you're seeing 0.2% lower now. Moving on, come back to the Nifty, the heat map. There you go. Defense 4.5% up move is what we are seeing currently as we speak, and that's on the back of the meeting that the defense minister has been having as well to form up a strategy with regards to where Indo-Pak goes, and that's probably what is keeping the defense counters afloat. Oil and gas 3.5% up move, and that's mainly led by Reliance Industries in trade today on the back of earnings. The PSU Bank Index, Infra, Healthcare, Pharma seeing a good day of trade. FMCG to an extent. Consumption is again 0.6% higher. Auto 1.2% up move. and this is led by Maruti as well as M&M in trade today. In fact, this week you have the auto sales numbers that will trickle in as well, so watch out for this space pretty closely. Let's look at the Nifty 50 heat map and then the contributors as well in trade. There you go. RIL 5.5% up move there. Bharat Electronics, SBI, Sun Pharma, Cipla, Axis Bank and a Tata Steel. Strong moves there. Shriram Finance is an interesting one post numbers. The commentary with regards to brokerages is something which is putting Shriram Finance under pressure. Ultratech will be reporting numbers today, 0.7% kind of cuts coming in there. You have a HDFC Life, Wipro, Infosys. These are the ones. But what's standing out apart from the top gainers, ONGC is a good one to watch out for. M&M 1.5% up move. Trent will be reporting numbers tomorrow. 1.5% up move on Trent as well. And a Maruti, which is seeing gains of nearly 1%. So that's with regards to your large cap space, Somit. Broader markets, when we started off the day today, I mean, pretty much in line in terms of the mid cap and the small cap index, but it's a lot of stock specific action that you're seeing.
Well, yes, a lot of stock specific action. In fact, it's the small cap index which is underperforming the benchmark, that is Nifty 50. It's up just 0.8% in trade, while the Nifty mid cap index, that is outperforming the large cap, gaining around 1.7% in trade. Stock specific action we are seeing in L&T Finance after the reports suggested that there could be some changes in the loan recovery part of in Tamil Nadu state. Apart from that, it's JK Cement, L&T Tech, JSW Energy, Syngene International, which are down around 2 to 3% in trade. On cash side, it's Tejas Network, which is down around 11% after a weak set of numbers. SML Isuzu after the M&M deal was announced, where M&M was acquiring stake at a price which is much lower compared to the current market price of the stock. On the gaining side, it's Premier Explosive gaining around 12% in trade. Barbecue Nation, that stock is up. At one point of time, it was up around 15%. Currently, it's up around 9% in trade. RBL Bank up around 11% after 4 brokerages nearly upgrade their rating on the stock to buy from earlier rating of hold. Apart from that, it's Paras Defense, AGI Infra, DCB Bank, Garden Reach, Apollo Pipes, which have been gaining more than 8% in trade. When it comes to F&O names, the top gainers include Supreme Industries, Hindustan Aeronautics, BPCL, Lupin, IGL. In fact, IGL gained after the company revised, or not revised actually, gave the strong guidance for FY26, where they're expecting their medium-term margins to be anywhere between 6 to 7 rupees per SCM, as against the Q4 margins of around 4.3 rupees. So that's what broadly we are seeing on stock specific names. But let's also welcome in Akshay Bhagwat, the Senior VP with JM Financial. Akshay, when it comes to Nifty Bank and Nifty 50, for Nifty 50, if you look at specifically 24,300 seems to be a resistance at this point of time. Do you see a breakout from this level anytime soon?
First of all, good afternoon. Well, yes, the technical setup of the market for short term continues to be positive. Even if you look at the rollovers data for May, it was positive. The FII positioning in index futures was positive. The only slight blip in the trade was Friday's trading session, where there was some bit of uncertainty in trades being carried forward because of some the Indo-Pakistan tensions escalating. That was primarily reason why you had some pressure or volatility. But today things are back to normal. Although the sentimental fear still exists, the technical setup is suggestive that the Nifty is most probably in all probabilities heading for 24,700. That is the target we look forward to. Right now, 23,850 is an important support. Till we trade above the support, it is positive. Now, the question is whether 24,400 zone will be taken out or not. Yes, in all probabilities, within this week for the weekly expiry, there is a very good chance that this support should be broken. Bank Nifty has good strength, mid cap is coming back, and Reliance is leading the index. So overall, the way the market breadth is, the chances are that Nifty should break out of 23,350, 400 zone and ultimately head for levels of 24,700.
So 24,700, Akshay, is what you're watching out for in terms of Nifty 50. What is the strategy with regards to Bank Nifty? Because the clear understanding or the clear expectation was that Bank Nifty probably will be in a range-bound trade with the next couple of trading sessions. There could be some bit of consolidation that could be happening as well, but you have no stopping with an HDFC and an ICICI Bank. So levels that you should be watching out for in terms of Bank Nifty and your top picks from the banking space.
So yes, banking is one of the stronger indices, and till now, if you have seen the journey of Bank Nifty, it's been a one-way rally right from 49,500 to 56,500. So the last 3-4 sessions is more of a cool-off period, which I believe where prices typically get into a sideways consolidation zone. This is more of a temporary breather which the bank index is taking before the next round of momentum kicks off. So Bank Nifty continues to be the stronger index. The range which we foresee right now is the support of 54,000 and the resistance of 56,500. You can expect some intermittent choppiness in between, but clearly it's going to be a mix of PSUs and the private banking which are going to save the day for banking index. And overall, ultimately you should see the bank index heading for levels of 57,000 odd levels. So that these are the levels you should be looking for in the bank index with a positive view. As far as the stock specific recommendations, if you were to pick up in the bank index, well, State Bank of India is a good pick in the PSU banking space. An inverse head and shoulder breakout, which we noted a few trading sessions back, is still active. We got a re-entry opportunity on Friday. Today, the stock is back strongly in the green. And the way the setup is, in all probabilities, 875 is where the stock is heading for. So this is one of the best bet in the banking space, State Bank of India, for targets of 875.
Apart from the PSU banking names, what are your other topics?
Yeah, so the other topics I've selected is Reliance Industries. Now, Reliance is an obvious pick for today. The reason being that the quarterly results have been done and dusted. If you look at the price action, this stock had been range bound for almost 5 months. Now, today's trading session has seen a strong technical breakout of this range bound price action. That is just the first trigger for the momentum to pick up in for Reliance, which puts the stock on a very firm footing. Possible targets of 1427 are in the making. Stop loss should be 1347 for short-term trading purpose. Other stock is Tata Motors. Now, this is a beaten down name in the auto space. Most of the stocks in the auto space are recovering hard, and Tata Motors also has had its fair share of recovery from 550. We believe that a short-term bottom is in the making. 550, 575 is the overall bottom area, and Tata Motors should be positioning itself for targets of 800 in the next 1.5 or 2 months. But from a trading perspective, you can look forward for targets of 702 with a stop loss of 645.
Right, so that's with regards to Tata Motors and the Reliance Industries, which become Akshay's top picks. Akshay, how are you looking at Dr. Lal Path Labs post the numbers? And apart from that, anything that looks interesting from the diagnostic space right now?
Well, Lalpath Labs, the volumes have been pretty strong in the last or the prior trading session. A small trend is slowly building up in the stock, although the broader term trend is still neutral. What I understand is that the right now the momentum has legs to take the stock right up till 3100. So it is more of a short term trading momentum based counter. If one is okay with 3100 targets, one should look forward and position themselves on the buy side. Short-term moving averages point out for a possible support around 2650, below which you need to keep a stop loss and target 3100. Now, in the diagnostic space, if you were to look at any other names, somewhere Divi's Lab is one name which is seeing a strong accumulation since the last many months. I think 5-6 months have been in a range. It is trying to stage a breakout above 6300, but strong resilience is met. This is more of a buy and hold count of a counter where with a time horizon of 2 to 3 months, I'm expecting 6300 to be broken and 7000 should be the target in the making. So Divi's Lab is the name, but you can have on your watch list, but buy this with a medium term perspective is what the recommendation is.
Right. On that note, let's move to our first management conversation. Dr. Lal Path Labs reported a strong set of numbers in the fourth quarter of FY25. Let's listen into the conversation with Ved Goel, the Group CFO and CEO of Dr. Lal Path Labs.
Mr. Goel, the highlighting factor when it comes to Q4 FY25 numbers is the margins. So good uptick in margins. So what are the reasons? Because I believe we have not taken any kind of price hikes, so considering no price hike taken, how should we look at margins? Number one, and are they sustainable considering the digital investments that the company has been doing?
Yeah, no, thank you. When these margins are increased, there are a couple of reasons. One, of course, the geographical mix and test mix, which definitely helped us to improve the margin. And in that, if you see our SwasthFit, which has now contributed 26% of the revenue in this quarter. This is also, helping in improving margins. And overall, if you see Q4, generally, we have higher margins as compared to, let's suppose, Q3. But overall, I think going forward, I would say these margins will be in the range of 27% kind of margins, which are more sustainable, more standard, which is somebody should take this going forward.
Okay, so company won't be seeing 28% margin, but 27% of margin are kind of sustainable. But any reason for 100 basis point decline in margins?
So that is where you yourself said, because we are investing in the business. What is happening right now? We are going deeper in our core geography. We are expanding our footprints in our south and west, and that is where if you see in this year also we have opened net 18 labs, and going forward also we are saying we are in the process of opening 15 to 20 labs in this coming year as well. Along with that, there are investments which is required in terms of technology, in terms of automation, more spending on A&P because we are going newer geography. And there are, investment which has made in the past is still not matured. They will take 12 to 18 months to mature. So those are all investment which is, starting this year and coming year. So that is where I think these investment will require some bit of profit, which will take. That's why I'm saying 27% is the more sustainable margins going forward.
Okay, understood. Now coming to the revenue growth, revenue was up 10.5%, which is ahead of the industry. But Mr. Goel, there was a time when a company used to see 12, 13, 14% kind of revenue. Now, can you get back to those growth levels, because the kind of investments you're doing, or the kind of expansion that the company is being doing, and taking the specialized test into consideration, can we go to that 13, 14% level? If yes, what are the initiatives that the company has been taking?
Yeah, definitely. I mean, if you see last year to this year, there is definitely an improvement. If you see last year, FY24, we grew about 10.4%, in which there was a price increase of about 3.5%. And from there, if you see 10.5% this year without any price increase has itself has improved by, let's suppose, 3%. Going forward also, whatever we are investing in the business, we are very confident that we should be doing better than this year, FY25. And I'm not putting any number, but definitely we are confident that without any price increase, we should be doing better than this FY25.
Understood. So you are saying in FY26 also you won't be taking any kind of price hikes?
I think right now we are not looking any price hike. That doesn't mean that we will not take any price hike. It's a strategic decision we are imposing on ourselves. It's not like we can't take price increase, but same time, unless until I'm facing any pressure on my margins or costs which I can't absorb in the system. So I don't think we will take the price increase. Same time, if let's suppose price levels or competition which are taking price and I am not, so those are the decisions right now. It's not clear, but going forward, this price decision is open. Right now, we are not factoring any price increase in this performance, but if required, we can take price increase in the future.
Okay. Also, the growth that you saw this year was, volume-led growth. So, would you please update what was the volume growth that you saw in this quarter?
So this quarter volume growth is 3.8%, full year is 4.2%, and if you compare from FY24, it was 2.7. So there has been improved. This is patient volume growth. But let me also take this, because this is not only volume where we are also looking sample growth, and which is 9.5% in this quarter and full year as well. So I think mix of patient and sample both put together is where we are looking, because this patient growth is a visit which patient is doing us, and more test in the same visit is happening. And that's where, if you see, our sample volume growth is in line with our top line growth. Going forward, I think this, which is right now 4.2% for the full year, I think going forward, this patient volume growth will also improve. In my sense, 6 to 7% patient volume growth will be there, and rest will be from the mix and without any price increase. So the benefit of test mix and geography mix will still be there.
Okay, so 6 to 7% of patient volume growth that the company is expecting. Got it. Also wanted to have a sense on the competition, sir, in the industry. Some of the pharma players are actually getting into, diagnostic industry. For example, Lupin is getting into this industry. So now, how are you viewing this? Will this be good for organized players? So will increase in the number of players will be good for the industry?
I think so. I mean, more and more organized players will come. I think it will be good for the industry. The reason for that, right now, you have competition, and competition is always in this industry. If you see, this industry is very fragmented, unorganized. And if more and more branded, organized player comes in this space, I think that will help the overall industry, and it will be level playing field for us as well, because right now the competition is with small lab, but if somebody is like organized player is entering, so it will be good for the industry to have that kind of competition. And industry is so large, I think it has a space for everyone, especially for the large players or branded players.
Okay, got it. And considering the cash you have, any inorganic opportunity that you are considering? Because I believe that Dr. Lal, as a company, you're very good when it comes to north and west. So any acquisition that you're trying when it comes to south?
Yeah, I think this is what we are stating for a couple of quarters, that now after Suburban, we have now Suburban is settled, integrated, and now the West is the only part where we have little less footprint in terms of B2C, and there we are open to have inorganic, organic both together, and that's why we have cash in hand. We are keeping this cash as a war chest with us, and definitely south is one area where we are open to have inorganic as well.
Got it. And so my last question for you is, what's the capex plan by the company when it comes to FY26?
So our maintenance capex is roughly 70-80 crores, which includes new labs opening and some investment in digital IT. So I think in next year also it's a similar kind of thing where 70-80 crore kind of capex will be there. It doesn't include any, let's suppose some M&A tomorrow we'll do. It is not included in this.
Well, that was the management of Dr. Lal Path Labs, but KPIT Tech is one stock that remains in focus. The company came out with its numbers some time back. The net profits were higher by around 31%, revenue was higher by around 3% on a sequential basis, EBIT increased by 4%, while margins remained stable at around 17.3%. In fact, the stock prices had hit a day's highest point at around 1,200 80 at one point of time, but it crashed from there, and this is largely on the back of the fact that in its presentation the company has refrained from giving any guidance, and that is the major reason why we have seen such a sharp fall in the share prices. Akshay, coming to you on KPIT Tech, how's it looking like on the charts? Do you see any reversal that could happen anytime soon?
Well, if I were to look at the short-term charts, there has been some recovery in the last week-on-week action. For the past 3 weeks, the stock has recovered from 1,050 support to 1,232 where it stands. Obviously, the stock is now digesting the quarterly numbers, and somewhere it is trading flat as we see it right now. It's more of a short-term trade because the broader trend is still weak. There is a very strong resilience which I see at the levels of 1,350, 1,360 zone. So at this current juncture, we would recommend to go step by step. It's more of a trading upside bet which you can look forward to. 1,300, 1,320 is the upside one can work with in the given scenario with the support of 1,100. So it's more of a neutral setup. 1,350 and 1,150 is the range one should consider for KPIT Tech.
With KPIT Tech, how are you looking at the other IT majors? Are you seeing any short selling opportunity there, taking into consideration that the pressure has continued?
Well, I think IT as a pack is coming back, and it's coming back pretty hard. If you look at the total open interest positioning in the derivative segment, I think majority of the stocks had severe short rollover bets been taken forward since the last 3 to 4 months. It is just that in the last few trading sessions, maybe 7-8 trading sessions, that things are reversing for the IT pack. A lot of short covering is what I see rampant in most of the IT names. Many stocks like Infosys, TCS, Tech Mahindra are sharply recovering from their lows, forming bottoms. So I think, yes, if you're planning to short, it's more of a trading bet you can look forward to. But if you want to position yourself broadly for the month of May series, the way the rollover data came out, I believe there is some more upside room left in the IT majors, and Tech Mahindra, HCL Tech, Infosys and TCS are the 4 big names you can be with for short-term trading gains on the buy side.
Okay, so that's with regards to where your IT majors are concerned. Let's look at a SBI. I mean, a good move that's coming in on an SBI. The stock is up nearly 3% in trade near the day's highest levels. The company is yet to report its numbers. Akshay, your view in terms of SBI and anything else that looks interesting from the PSU banking space?
Oh yes, absolutely. I'm very bullish on the banking pack because on technical parameters, your bank nifty is was at its all-time high levels. It has shown a very strong recovery lately, and in the PSU banking space, SBI, State Bank of India, is one of the charts which has strong technical short-term trading patterns. Now, as I mentioned on the show a few minutes back, an inverse head and shoulder breakout in SBI was what we noted 5-6 trading sessions back. That is a very strong bullish pattern which possibly is signaling for a probability of 875 levels to be tested on the upside. So those are the targets one can work with. We are at around 820. So before results, I still believe 50 to 70 rupees still upside targets are pending in State Bank of India. A strong support base of around 780, 790 zone where this breakout was seen is the support. And with this support in mind, stop losses below the support, one can work for targets of 875 in SBI.
Right, so that's with regards to where SBI goes. I missed hearing Akshay Bhagwat's top pick was also an SBI. But let's quickly slip into a short break. Stay tuned for lots more on NDTV Profit, and we'll thank Akshay Bhagwat as well for all his top picks and views so far. Up next, we'll bring you all the chatter behind the dealing room in our segment Heard on the Street. But as we slip into a break, please hear out what the management of Shriram Finance also had to say.
There were some elevated delays by the customer in the third quarter, and fourth quarter it continued. There is no significant change. But in our segment, where most of the lending is against secured assets like vehicle, machinery, property, etc., we are able to manage and control things within the limits. So overall credit cost for is very important. Last year, when we look at, we found certain weaker geographies, especially in the central part of India, borders of UP, MP, and Jharkhand, etc. There were the isolated spots where the credit cost went up to a certain extent, but it is recovering there. Overall, the Rabi crop being good, I think the rural economy is improving. So it is getting addressed, is what we believe. And I don't really see extended challenges as far as the credit cost is concerned.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Welcome back. You're watching India Market Close, but let's quickly pull up IDBI on the screens and see what that stock is doing in trade. Your asset quality absolutely stable, and Harsh was just mentioning to me that that's what it is going to look like. The stock is spiked and it's at the day's highest levels as we speak. Your net interest income has seen a downtick of around 11%. That number has come in at 3,290 crores versus a 3,688 crores. I will go to Harsh as well in a short while for his expert view in terms of IDBI Bank, but the NPA, the gross number is at 2.98, which has improved as well on a sequential basis. So asset quality overall remains absolutely stable so far. In terms of the NI, a downtick of around 10.8% is what you're looking at. What's the positive over here is going to be interesting because the stock is seeing a spike. Harsh, any quick call in terms of what's happening with the IDBI Bank, because it's climbed to the day's highest levels. Asset quality has remained stable. Your net profit has seen a growth of around 26%. At 2,051 crore is the kind of number. So is the number seeing an uptick on the back of the profit?
I think my larger concern would be the net interest income number,
which has dipped,
which clearly seems to signal that there is some bit of pressure with regard to margins, which IDBI Bank is likely seeing. Mind you, these are just preliminary numbers and therefore just preliminary thoughts. We yet await most of the numbers because those will come out only after the PPT comes out or the investor presentation comes out for an IDBI Bank. But
okay,
for the
what
moment,
would be the key that you would be watching out for now?
So I would definitely be looking at the margin number. are margins going down? What's the pressure like on margin, if there is any? And this is one of the first PSU banks to come out with numbers as well. So does this have a spillover impact on other PSU banks is the other big question.
I think, and that is going to be key as well. Let's just quickly pull up the stock once again. There you go. 2.3% is the kind of move that you're seeing in terms of where IDBI Bank goes. But we're 1 minute delayed on the special segment on the show, which is Heard on the Street. My colleague Somit Sarkar joins in with all the chatter from the dealing room. Somit, what are the key things that you are picking up today? Because I think the street always anticipates that 2 to 3 days in advance with you telling them.
Well, thank you for that. But yeah, first stock that has been on the list is Tata Technologies. Now the share price of Tata Tech are up around 2% in trade after the company reported a strong set of Q4 numbers. But dealers are indicating that there are large HNIs who have been selling this counter on anticipation of some potential block deals that are expected to come in going forward. Another stock on the list is, it's Bandhan Bank. Dealers indicate that high net worth HNIs have been taking positional sell trades on this counter ahead of their Q4 numbers, which is expected to come in on April 30th. So keep an eye out for that counter as well in trade. And then there is Eternal, which is earlier known as Zomato. Now share prices are under pressure. Dealers are indicating that there are selling pressure continues on the FII desk for Eternal as well, and that could continue for quite a few sessions. And lastly, it's Divi's Lab and JSPL which are in focus. Now both these counters, dealers are indicating that domestic DIs, that is domestic institutional investors, specifically mutual funds, have been buying into both these counters, and we can expect a delivery based buying on the higher side for both these counters, that is Divi's Lab and JSPL as well.
Right, so these are three interesting names that one should be watching out for. Thank you Somit so much. So Tata Tech, Zomato, Bandhan Bank, and from the pharma pack you have a Divi's Laboratories, and you're seeing a JSPL as well, where you're seeing some buying flows coming in on the DII desk, as Somit was mentioning. Let's also welcome in our guest Jay Bala, from Cash the Chaos. Jay, good afternoon and welcome to the show, and a pleasure to speak to you as always, speaking to you as well after a very long time. From the 4 to 5 stocks that I mentioned and the Heard on Street that Somit mentioned about as well, anything that looks interesting to you?
Yeah, I'm bullish on Tata Technologies. I've been waiting for the stock to bottom, and it's completed an important, probably something could be even a long-term bottom. But at the moment, I'm taking this as a short to medium-term bottom. As long as the stock stays above 597, this has potential to reverse the decline that it saw from December to April. So that's something like a partial recovery of 1135 to 597. So the 50% of that comes to about 866, 61.8 comes to about 929. So these are the markers I'm looking at for Tata Tech at the moment.
Right, so that's with Tata Technologies. Jay, your view in terms of Nifty as well as Bank Nifty, let's talk about both of it, because the clear picture with regards to Bank Nifty was that you could see some bit of consolidation, and it is going to be a range-bound trade. That's what the street has been looking at. The kind of breakout that you're seeing in terms of the private banking space, and you have a SBI which is seeing some good moves in today's day of trade. How would you look at both these?
Yeah, when it comes to Nifty, after several months, I've actually turned bullish on the Nifty. In fact, or I would say, slightly bullish on the Nifty. If the Nifty manages to take out 24,858, it's all clear for the bulls. Right now, there are still some hesitation for the bulls. I want the market to pull back somewhere closer to 23,000 and hold above the gaps that it registered in April. So if it manages to do that, that'll be very bullish, and a case can be made for a medium to long-term high. Take out the 26,277 high registered in September 2024, and possibly looking at 29,000 minimum. So still a little bit of short-term price action to complete, but the markets have developed a bullish potential. And the bad case is that the market should not decline below 22,321. Right now, for what's favoring the bulls, Reliance, which was an underperformer for several months, is actually breaking out significantly. The important level for Reliance is 1421. If it manages to stay above that, once again, that'll reiterate the bull case. When it comes to the banks, HDFC Bank is the key. It's registered a fresh record highs, but it's come to a very important resistance. it shouldn't drop back to the previous range of about 1888. If it does that, that'll be a slight negative. But as such, the banking index as such, I'm anticipating it to clock fresh record highs closer to about 58,500.
Right. Jay, your top picks for today?
I like two stocks. One is Sun Pharma. Sun Pharma from the pharmaceutical space, obviously the leader there. The stock is doing pretty well. It's breaking out of an inverse head and shoulders pattern today. And the stock is likely to touch fresh record highs closer to 2050. A stop loss of 1682 is a must for it. And the second one is from the small mid cap space, as a new stock called Optimus Infra. So basically, this stock is probably not completed a major top at the 2023 high. So the recent move from there is a corrective move. So as long as the stock can hold above 410, this can proceed towards 700. Maybe later on, a few months down the line, target the all-time highs.
Right, Jay. It's also time where we take our stock of the day, and RBL Bank surely on the list. Hard to ignore today after the kind of move the stock has made and after the kind of numbers posted as well. It's a very, very decent set. Now, I'm going to break down two things. We've looked at the numbers, of course, through the day, but let's look at what commentary is coming through from RBL. What they're suggesting seemingly is, so these are key takeaways from the earnings. The quarter was better than what was anticipated by most brokerages. Credit costs have come off when you're looking at it on a sequential basis. Slippages are also lower, and therefore you're seeing credit quality improve. Recoveries have improved is what management indicated, and they're expecting a decentish kind of growth starting FY26. So the question remains, is the worst really over? And let's have a look at what the management has said. They've given us a loan growth guidance of 16 to 17%. They've said OPEX growth will be at roughly 10%, so operating leverage will likely play. The cards business, now this is important because unsecured has been under pressure, but cards business to grow at mid-single digit. So at least there is some amount of growth expected there. Cards and MFI portfolio in the book to be around 33 to 35%, so a taper down with regard to that. And you're expecting NIM pressure, but you're expecting NIM pressure only up to H1 FY26. Thereafter, you're expecting a possible recovery in margins. So that's possibly even a positive. The other piece that they highlighted is there's been near zero credit cost in secured retail and wholesale in the last 8 quarters for an RBL bank. The provision coverage ratio against the MFI NPA is at 100%, so likely lesser drag going forward, and they're expecting normalization starting Q2 FY26. Now on the back of this, Motilal has upgraded the stock. They've hiked the target price and they've hiked EPS estimates more than that by around 12% for FY26 and 27. Business growth gaining traction is what they say, and slippages to normalize by Q2 FY26. So positive on all of those counts. Back to you, Hiral.
Thank you, Harsh, for getting us the details. So that's an interesting one. And I think MOSL upgrade as well with regards to RBL Bank is a strong one, a 220 kind of a target price. Jay, what are charts indicating with the RBL Bank for you?
Yeah, the stock price movement is quite interesting. It's consolidated between 178, 145 for the last couple of months. And then it saw a breakout in April. So while the very short term, the stock is a bit stretched, but pullbacks somewhere closer to 185 to 170, maybe it will hold above 180. So 185 will probably be a shallow pullback for the stock. If it does manage to hold that, I think there is more in store for the stock.
Right, so that's with regards to where RBL Bank goes. In the last 3 months, 31 to 32% is the kind of gains that you've seen today as well. 9 to 10% are the kind of up move that is on the cards. But let's also now welcome in Siddharth Khemka, Head of Research Wealth Management at Motilal Oswal Financial Services. Siddharth, good afternoon and welcome to the show, and a pleasure to speak to you as always. We've been talking about the direction that the markets have been taking currently and the impact probably the Indo-Pak situation could have. Now, yes, there is not too much worry that we are seeing with regards to fund managers. However, there is that little bit of nervousness amongst the retail investors, because everywhere you talk to retail investors, it's like probably that this is the best time to just sell and get out and sit on cash. What is your view? What would you advise?
Yeah, hi, good afternoon, Hiral. Glad to be on the show. I think you rightly said, yes, I think there is some concern with regards to retail investors, with regards to the ongoing tensions between India and Pakistan. So far, we had seen geopolitical tensions globally, plus we had the concerns with regards to the tariff war related economic slowdown. So far, we had seen that India was largely remaining on a steady path with a strong economic growth. You can say, in a way, the domestic market and the domestic demand and consumption was driving the economic growth. But with the geopolitical tensions coming within our own borders, I think that has led to some concerns. And after the sharp rally we saw in the Nifty of almost 12% in the 8 to 10 trading sessions, retail investors are taking some profits and wanting to remain on the sidelines to see if there is any impact on the markets. So what we believe is that there could be a sentimental short-term blip. However, in the long term, Indian economy is neither dependent on Pakistan nor J&K to that extent contributes meaningfully to the overall country's economic growth. So to that extent, we don't see any large impact if the tension escalates. Nonetheless, it remains to be a sentimental negative whenever there is an escalation or there are skirmishes at the border. I think that is where we are also seeing some sectoral rotation, and today for that fact, I think defense is being lapped up by the market.
Right, so that's with regards to overall view coming in on Nifty as well. Siddharth, I think one stock I want to discuss with you that Harsh was just talking about is the RBL Bank. You have a Motilal Oswal as well, which has come out with their report on it. How are you looking at the numbers? Because the stock is up nearly 8 to 9%, not too far from Motilal Oswal's target price. Are you looking at it as a further re-rating candidate from here on?
Yes, Cyril, I think finally the numbers have been on a positive surprise. Earnings would recover, and we believe that it would be a gradual recovery. Things have turned around, but to upgrade it further, we'll have to wait for the next quarter earnings. And again, I think that could lead to further, if the results are better than expectation, that could lead to further positive change in our estimates as well as outlook. But I think definitely a commendable thing coming from a bank like RBL. Consistently, they had been reporting weak numbers, but I think with beat in earnings, margins remaining broadly stable, and we are expecting slow and steady growth going forward. Plus, if you look at the bank, expects about 10% OPEX growth driven by operating efficiencies. Margins are likely to improve in the second half, so it is expected to remain flattish in H1 and then improve in H2. So any further upgrade, I think, would take at least 1 or 2 more quarters. We had been neutral on RBL for a very long time, but now I think with the improved earnings and the estimates, we saw a 12% upgrade in our estimates that led to the 17% upside. Obviously, of that, 8 to 10% is moved up today itself, but I think it's a positive development for RBL.
Right. Hi, Siddharth. Good afternoon. Harsh also joining in. Now, wanted your quick take. You know, you've had a bunch of these NBFCs which have come out with numbers. So that is one part of it. And I'll spell them out: Chola, Shriram, L&T Finance. So maybe those three. And then you have this Tamil Nadu overhang, which is starting to emerge, at least basis news reports, that you could see some bit of a drag with regard to collection efficiency within the microfinance basket, especially. Does this at all, one, concern you? And second, how do you read some of the numbers of these Shriram, of course, Nifty 50, but outside of that, even Chola and L&T Fin?
So yeah, Harsh, I think definitely there's a concern on what Tamil Nadu has done. So right now maybe it is just one state, but if other states follow the same, I think that could lead to a lot of pressure, especially on the unsecured lending, where obviously you have the microfinance being on the top. But I think it is negative for across the unsecured lenders or the small retail consumer lending as well, where it is difficult to repossess the assets and then recover your money. So sentimentally, it's a negative step for NBFC specifically, but I think even banks, wherever they are doing the unsecured lending, they would feel the pinch or pressure. In terms of results, I think Shriram Finance definitely weaker than expected numbers. So basically, NIM compression due to excessive liquidity, credit cost has risen on a sequential basis. So overall, I think not that great number. But what we see is that on an operating performance, numbers are good as we see healthy growth in AUM as well as disbursements.
Right. So that's sorry to cut you short on this one. Got your view in terms of Shriram Finance. But very quickly, let's just pull up all your defense companies as well. And you have a HAL that is in focus because today India and France have gone ahead and signed a mega 63,000 crore deal. And this is to buy 26 Rafale Marine aircrafts for the Indian Navy. Now, the Indian side was represented by Defense Secretary Rajesh Kumar Singh, by Navy Vice Chief Vice Admiral Swaminathan was present as well. So that's with regards to where the deal goes. HAL, that is going to be a stock that is in focus. In fact, the entire defense pack is up in trade, specifically the shipbuilding companies also. Very quickly, Jay, anything that looks interesting from the defense pack, specifically taking into consideration the up move, should you buy the momentum?
For the short term, probably it's Hiral. See, when we discussed shipping stocks in November of last year, I had mentioned that Masgo on docks is one that hasn't probably completed its move at the July 2024 highs. And I had mentioned that it's likely to find support somewhere about 4,000 to 3,800, the pre-split price, and it's come very close to that, and it's recovering from there. It's all near its all-time highs. So I think Masgo on docks is a good short-term momentum bet, but you might want to keep your position sizing quite small because the move from sub 2,000 has come. It's already clocked about 20% here. So you might want to consider that in your equation and position size accordingly. But yeah, fresh all-time highs at you, like I said in November.
Right. So that's with regards to where your defense pack is concerned. But moving on, let's pull up a Chennai Petro. That stock is in focus as well in today's day of trade, and that's mainly on the way earnings have panned out. The stock is down nearly 1.8%. Let's quickly look at what the numbers are looking like as we speak in terms of Chennai Petro. I'll just quickly take you through. The profit number is coming at 450 odd crores. The revenues have grown around 34%. Margins have come in at 4.6% versus 1.9%. Now, mainly the higher capacity utilization as well as the inventory gain and higher, and you've seen higher gross refining margins as well. In fact, let's welcome in Mr. H. Shankar, Managing Director at Chennai Petro. Mr. Shankar, good afternoon and welcome to the show, and thank you for speaking to us at NDTV Profit. With the kind of growth that we've seen with regards to margins and the profitability, is this an exception, or do you think this is the kind of growth that is expected to continue in the coming quarters?
Good afternoon. Yeah, nice to be here speaking to you about the performance of CPCL. In fact, I would not say it's an exception because if you had looked closely at our Q1 figures, we have done better than the Q1 figures, and we are now, I should say, after a sedate Q2 and Q3, we are actually coming up with the correct figures that CPCL is capable of doing now. And this mostly, I would say, it is on the back of some good cracks that we had, and also after having gone through a shutdown cycle that we had between the Q2 and Q3, we are now operating at a very high level of 115% the capacity utilization, and we have done a lot of tweaking in our operational areas so that the efficiencies with regard to some of the major parameters. For example, the capacity utilization is number one. Number two is about the fuel and loss, where we have achieved the best figure in Q4. We have done extremely well in the distillate yield also. So these are the operating parameters which are very important to sustain this level of operation. So I would not say it is a one-off condition. It is something that we have done close to this in Q1, and we have done better off in this Q4.
So, Mr. Shankar, my second question to you would be, how are the product cracks in the near term panning out? Because that is what has supported this quarter. And secondly, the revenue growth and margin target for FY26.
Right. First, about the cracks about this particular year, I would say over the full year of 12 months, we have seen the cracks around, for diesel, for example, the cracks have been around $8 to $12, $9 to $12. We have seen the MS also close to $8 to $12, and we have seen ATF also in this range. We have been almost in this range we have been operating. Although at certain periods of time, we have seen the cracks dipping very below also. For example, the MS has seen $1 per barrel. Also, HSD has seen $5. These are all kind of up and down we have seen. But on an average, the quarters have been yielding almost at the rate of 8 to 12 or 6 to 8% on the MS, $6 to $8 on the MS. So I would say it's a very stable scenario as of now, but for those occasional ups and downs. So if we continue to operate in the same level of these cracks, I think we should be able to sustain good operating level in the coming period also.
Mr. Shankar, you didn't mention about your FY26 guidance, but if you talk about your Singapore GRMs of late, they've started to improve from $3 per barrel. It has increased to $5 per barrel in the first quarter of FY26. So are your product margins also improving? And if so, can we expect the first quarter to be better than the fourth quarter?
See, if you look at the Singapore margins, you can say that Q4, we have done a GRM of about 6.6 and 6.6. At the same time, the GRM of Singapore level was about 3.1. That was what in Q4 that Singapore GRM was, and we have done almost double the Singapore benchmark. And also on the annualized basis, you can see that our GRM was 4.22, while the Singapore GRM was around 3.7. So I think if we compare CPCL performance with respect to the Singapore benchmark, I think we are always doing better than that. We need to do much more than that in light of the current operating levels that we are able to achieve.
And Mr. Shankar, Harsh also joining in. So what's the revenue growth and margin target which you're expecting for FY26? What's that number looking like?
See, revenue growth is a direct, I would say it is related to the kind of operating levels that we can achieve. See, in the last financial year, 23-24, I mean the previous year, we had achieved a financial capacity of almost 11.6 MMTPA. Whereas in the last financial year, 24-25, because of the turnaround cycle that we had to maintain for the health of the units, we have achieved 99.6%, which is close to my the nameplate capacity. But if you see, in spite of having a turnaround of critical units, we were able to achieve close to 100% of our capacity utilization. So looking forward, I think we have one more shutdown, which is coming up in the month of August, September. Nevertheless, we have set ourselves a target of more than our nameplate capacity, so that the more the capacity utilization, our revenue figures should also see a jump in the overall final figures.
Okay, and sir, what's the capex guidance like for FY26? And also, if you can give us some perspective with regard to Cauvery Basin Refinery, the capex plan was hiked, or there was an escalation there. What's the update there as well? If you can give us both of those.
Okay. Initially, first I'll talk about the Manali refinery, which is operating at 10.5 on a nameplate basis.
Sure.
Here we have a capex of, normally we do around 400 to 600 range of crores per year. That is the normal range where we operate. This is mostly with respect to our revenue requirements that we have this capex coming in. But at the same time, we have a couple of projects lined up. We are having a lube oil expansion project, lube oil LOBS, which is called the lube oil base stock project, which is coming up, which is close to the final approval stage. So with that coming in, our capex figures should also be able to see much higher figures than the 400 to 600 that we normally operate in the range of. So that is one side. Looking at the other value additions that we have in mind, for example, last financial year, we introduced a new product called the Pharma Grade Excel. So we are constantly innovating, and then we are coming up with new products which are suitable for the market that we are looking at. And those kind of small innovations add a lot of margin to the bottom line, and we are able to maximize those returns. And on the Kaveri Basin, as you very well know, that the project was conceived as a joint venture between CPCL and IOCL. And right now the project has been put up for the approval, necessary statutory approvals. Once that comes in, that will also be a substantial capex induction will be required. And over a period of 39 months, we would like to go ahead with the project after the statutory approvals are in place.
Right. So those are going to be interesting moves, that one should be watching out for. Thank you, Mr. Shankar, so much for speaking to us. It's a pleasure to speak to you as well. But we'll quickly slip into a short break. Lots more lined up on the other side, and we will get you your top buy today and sell tomorrow picks as well. Please stay tuned to NDTV Profit.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The
Welcome back. You're watching India Market Close here on NDTV Profit. Let's look at the top 3 stocks on our radar today. Of course, there are plenty which are buzzing, but Varsha here with our top 3.
Well, thank you for that. Let me start with, Avental, which is under pressure on the back of Q4 earnings. Let's see what are the key highlights, when it comes to the numbers. So the EBITDA margin, so there was a revenue growth of almost 18%, but there was an EBITDA margin impact. So if you see, EBITDA is down 36%, margin is at 23% versus 43% last year. Now the EBITDA margin impact that you're seeing is led by changes in inventories, and this changes in inventories has led to cost of materials with respect to revenue at 27% versus 3% last year. So big jump when it comes to cost of materials. materials of goods sold, which is actually impacting the EBITDA margin. The signal processing products grew 18% year on year, while their healthcare segment grew almost 2x. Next on my list is Lloyd Metals, wherein again, if you see the company is under pressure because of the Q4 numbers. They've reported lower volumes for Q4 FY25. Volumes fell by 16% year on year, and the lower volumes that you're seeing has led to subdued EBITDA margins. So just to speak about EBITDA margins is down, which this is on the back of lower volumes. Now company is expected to raise funds of up to rupees 5,000 crores. Next, last on my list is Tejas Network, wherein the revenue is up 43%, but if you see EBITDA is down 60%, margins at 6% versus 23%. Now, the net loss that you're seeing is due to one-time charges in inventory and R&D expenses that the company has been doing, and the order book, if you see, for the company stands at around 1,000 crores.
Thank you so much for that, Varsha. Interesting that some of these stocks are buzzing, especially something like a Tejas Networks, which is down 12.5%, Hiral, on the back of those numbers. Siddharth, any view that you may have with regard to a Tejas Networks?
Unfortunately, the stock is not under coverage, so I will not be able to give a view.
Okay, and Lloyd's Metal also, Siddharth, would that be?
Again, not under coverage.
Okay, point taken. Jay, would you have a view from a technical standpoint on a Tejas Networks, 12.5% move?
Yeah, it's looking good in the medium to long term, but the very short term, the recent low registered at 636, it looks like an incomplete move. For the correction that began in the middle of last year, the stock needs to go below 636 to complete the correction. So when it comes to Lloyd's Metals and Energy, the stock is meandering between 1450 and 1000. So not a clear direction over there. So I'm unable to take a very clear stand over there in Lloyd's Metal. But whereas Tejas Network, there's a short-term downside. When it comes to medium term, there's probably a potential upside to work with.
Ultratech's numbers flashing at the bottom of your screen as we speak. Revenue just about in line with what we were anticipating. 23,000 crore odd is where that top line number has come in at, but profits look slightly on the softer side. I wouldn't call it a miss just yet, but it's slightly on the softer side. We'll await that margin number because that'll be crucial, Hiral, to determine whether this is a hit or a miss. But
yeah, because clearly over here the key was even in terms of where the volume growth was concerned, because the volume growth was expected to rise 15% on a year-on-year basis and 36% on a sequential basis, and that was the expectation from a Kotak, whereas 12 to 13% was what Systematics and Nuvama were expecting, and a 9% sequential growth is what they were expecting as well. Now, it was mainly the inorganic capacity addition and the seasonal tailwinds that were expected to aid the volume growth. But if you talk about 2,482, that's the net profit number versus an estimate of 2,538. So that's a slight bit of a miss coming in terms of where the bottom line goes. And I think that's one of the reasons why the stock is seeing some bit of cuts. In fact, the downtake has continued. It's nearly at the day's lowest levels, not at, but near the day's lowest levels, I could say, in terms of Ultratech Cement. So net profit, a slight miss coming in terms of the bottom line. If you talk about the revenue number, it's pretty much towards that inline number in terms of the revenue number. Margin was expected to remain flat at around 20.1%. So I think that should be the number we should be watching out for. And the overall EBITDA number was at 4,615. That was the expectation. We'll wait out for those two numbers calculation as well. But the stock is seeing cuts of around 0.8 to 0.9%. Siddharth, very quickly, your view with regards to Ultratech Cement, taking into consideration the profit number is below what the street was estimating. The revenue number has come in line with what the street was estimating. What would your call be?
Yeah, Hiral, I think most of the street expectation are in sync. So we were expecting organic volume growth of 8%, inorganic included 19% growth. EBITDA for us also stood at 4,610 crores as an estimate, and net profit of 2,440 odd crores. So I think more or less, I think the volume growth, if it is in line with our expectation, I would be gradually or incrementally turning positive towards the entire cement space. The other fact that the realization has been a major concern, and we have seen how that has been under pressure, but recent channel checks are suggesting that things are improving on ground, and with demand improvement, now companies are able to take that price hike going forward. That should lead to improvement in margins. Also, a big factor is that the fuel cost as well as the transportation cost has come down in the last 1 quarter, and that should again lead to improvement in profitability going forward. So net, I think an inline number, but overall view remains positive on Ultratech.
Siddharth, what are your top picks within the cement space?
So within the cement, what we like Ultratech, which is our top pick, followed by a Dalmia Bharat, where again we have a buy rating and a target price of 2150. We are expecting an improvement in profitability going forward. For the quarter, we are expecting a 10% growth, but going forward, we see much better growth going forward. And finally, JK Cement within the mid cap cement space. So these 3 stocks are our preferred picks.
In the cement space, Avinash, in fact, let me welcome in Avinash Gorakshakar as well. Avinash, how are you looking at the Ultratech numbers? Because if you have to look at the street estimates, it's pretty much in line across parameters. Your view?
Yeah, good afternoon, Hiral. My sense is that numbers are in line with expectations. I think the market was not expecting any major fireworks because we saw last week numbers from ACC. So I think in terms of the profitability, my sense is that the next quarter, that is April to June quarter, could be much better. The volume growth is also going to pick up because, as we mentioned to you earlier on your channel, that the April to June quarter and the July to September quarter are going to see a large amount of government infrastructure projects spending, and this is going to definitely make cement demand grow much faster. So I think Ultratech should show better numbers. In fact, once one looks at the India Cement numbers also, I think a certain amount of volume growth could come in, from that acquisition also. So I think on a standalone basis, the Ultratech numbers are in line. My sense is that whatever correction has happened today is just a fallout of the numbers, immediately. But I think the markets would realize it once we get some more management commentary on the kind of outlook the management would share for the coming financial year.
Stock at the day's low, down 2%. Jay Bala, what would your call be with regard to an Ultratech?
Yeah, if you recall our conversation a few months back, I asked to avoid ACC and Ambuja, and I was bullish on Ultratech. Ultratech has come to record highs. Right now, it's come to very record highs, and the current support is about 11,600. I don't believe the move from the recent swing lows that it registered at the beginning of this year or late last year, that looks got at least one more higher highs to come through, but it's a little bit late for a trader. So as long as 11,600 is protected for the stock, I would anticipate one more higher high to come through.
The stock is now at the day's lowest levels. It's starting to see some bit of a correction in spite of the numbers being in line. I think the key would be to look at the EBITDA per ton that would be coming in, because the expectation was in that range of almost 1,000 to around 1,200 rupees. So that's the number we should be watching out for. Siddharth, very quickly, what is the number that MOSL would be tracking on Ultratech if you have to look at the EBITDA per ton, for the stock to see this kind of a reaction right now?
Yeah, I think so. Our expectation for Ultratech EBITDA per ton is at 1104 on a console basis, and on a like-to-like basis, I think we are at 1201 compared to 1173 in the same quarter last year, and on a sequential basis, a 951 rupees per ton. So we are expecting at least some improvement on a sequential basis, both on a console as well as on a standalone basis for Ultratech EBITDA per ton.
Okay, and overall, Avinash, at your end, with regards to the stock seeing a correction right now, 1.7% lower, how are you looking at the EBITDA per ton to pan out? Because as compared to a sequential basis, the expectation was that it will be lower. So how are you looking at it?
No, I think broad numbers, that is EBITDA per ton, have been, expected around 1200 to 1210 per ton. But I think, if you look at the correction in the stock still trades at fairly, fair to expensive valuation. So, these kind of high stocks, Hiral, whenever there's a negative surprise on the margins or the profitability, I think for a few days the selling pressure continues, but I think then the stock settles. So I will not be surprised that maybe after the next couple of days, some buying would definitely come in. So I think, we have been telling our clients to actually look at Ultratech, but with a longer term view of at least 12, 18 months. And it should be a buy on decline, not at the current level.
Okay, so a buy on declines. Thank you so much, guys, for breaking this down for us. Siddharth, we'll actually let you go on that note as well. So thanks for joining in this afternoon and giving us all of those views. A couple of stocks which have been in focus at least today on the back of earnings were something like a Tejas Networks. I want to quickly take in a view. Avinash, your view with regard to a Tejas Networks in terms of how the numbers panned out?
I think Harsh, numbers have been disappointing, and I think if you look at the margins or if you look at the profitability, I think this is a order book driven business, so it's a bit lumpy. Maybe this quarter has not been good in terms of execution, but the company has a very large order book in terms of 5G equipment. Plus, I think clearly other projects which the company is working on. So I think clearly, for longer term investors, this could be a good opportunity because, these are very select companies operating in a very niche space. A lot of marquee investors have entered this stock. Funds are also liking this stock. So I would presume that, the correct correction of 10-12% could possibly stabilize in the next few days. And I think somebody who's looking at the next 12 to 18 months, one could look at accumulating the stock on decline. But yes, numbers have been pretty disappointing. We'll have to hear the management commentary as to what exactly happened and whether the execution in this quarter was a little weaker.
Okay, all right, so that's the view coming in with regard to our Tejas Networks numbers, but stock down 13%. So, I mean, opportunity or otherwise for those looking for one. Today, bull versus bear. We put the spotlight on Maruti because auto stocks again in focus are Maruti and an M&M. We first specifically focus on a Maruti stock. The decent-ish kind of 1% kind of gain that we're seeing today's steady state. Automaker reported a muted Q4, brokerages largely positive. Puneet joins us with a bull versus bear case with regard to a Maruti.
Well, thanks for that. So definitely results weren't much to speak about, Harsh, as you rightly said. But definitely I think one of the key numbers was the export number that the company has given, and that's a 20% growth that they're estimating in FY26. For context, FY25 they did a 17% year-on-year growth in sales for exports, coming at 3.32 lakh units, and that's one of the first bull cases that we have. Now, the key to note, and the key aspect is that the incremental sales of roughly about 70,000 units odd that they are estimating will largely come from the electric vehicle launch which they have, which is the e-Vitara. So essentially the existing portfolio might not grow as much. That's what the numbers are indicating, what the management has given, and hence a flat growth of the existing portfolio in the export market is something that could be a potential bear case going forward. The second bull and bear case, of course, is the higher SUV sales percentage. Now, new launches are expected in this year. The e-Vitara is one. They're also expected to launch one more new SUV in this particular year, and that will likely aid some margins going forward. Currently, margins have been under pressure because of a multitude of reasons, and that has been because of a 190 basis point impact in Q4 because of course, commodity costs, as we mentioned, but they also had an impact of lower share of SUVs in this particular year by 40 basis points, 90 basis point impact on other expenses among others. So overall, commodity hasn't been its friend, and the impact of higher competition and higher promotional expenses has been the other key aspect. And finally, in terms of valuations, currently trading at roughly about 25 times price to earnings, the current PE of the company. The last 2-year average has been around the 32 times. So definitely a stock that's giving some favor in terms of valuations. FY26 as well, companies trading at 21 times price to earnings. So definitely some value there, but it has come out and mentioned that they are not seeing too much growth or absolutely no growth in FY26 in the domestic market at least, and it is at a decent base in this particular year. So that is something to watch out for investors, because on the other hand, you have options such as something like a Tata Tata Motors that's corrected much higher than something like a Maruti, more than 47% from its highs. And on the other hand, you have Mahindra, which is, valued at 24 times price to earnings, but showing higher growth. So that's a call that investors have to take. But for today, while the results weren't too much to, speak about, the export growth percentage might be something the market is rewarding in trade today.
Okay, so export growth likely in focus, but we also spoke to, thank you so much for that, Puneet, first off, but we also spoke with R.C. Bhargava, the chairman of the company, regarding the reason behind the price hikes and if further hikes are on the cards. Here's what he had to say.
The April price hikes were entirely related to the extra cost of meeting the new environmental and safety regulations. There's no price increase other than that. Because as a policy, we had decided that we will not take any price hikes, but we have to pass on to the customer. For example, all our vehicles are now being fitted with 6 airbags. This is a government requirement. They add to cost. We have to increase prices if you add on 6 airbags. And that's been one of the factors which has affected price rises.
Right, so that's the comment coming in from R.C. Bhargava as well. Avinash, how are you looking at a Maruti? Because, a couple of interesting points over there with the growth story they're expecting on the back of SUVs, new launches and the export market versus the downtick that you're seeing in the domestic market. And the point in case that Puneet made to us as well between the bear and the bull case, where would your bets be on a Maruti if you have to compare the other passenger vehicle makers?
I think clearly, Maruti would definitely be looking forward to better numbers from the electric e-Vitara. I think that is definitely something to look forward to. And most importantly, hopefully we have a very good monsoon. So rural demand could actually trigger a good kind of demand, for the domestic market. But I think in terms of incremental upside, I think definitely Maruti is well positioned. I would say that, some investor who's got a slightly longer term horizon could actually look at levels of 11,500 or 600. That could be a good opportunity to accumulate. But see, within the auto pack, we are more positive on Mahindra and Mahindra, which we believe is a combination of utility vehicles and tractors, and plus their electric vehicle ramp up also will start in the first quarter of this financial year. So I think both M&M and Maruti, hopefully we are looking at better rural demand to actually give a better fillip to domestic demand. And obviously the electric vehicle market is doing well. So if the product is well positioned and well accepted by the customers, then you could see a good run up in both Mahindra as well as Maruti.
We are at it, Avinash. Quick take with regard to this SML acquisition. Of course, from a valuation standpoint, looking decent, but what's the sense like? How quickly can M&M leverage on this acquisition?
No, I think, Harsh, first of all, I was surprised when the market price is much more and the offer price is less. So I don't know how many people could tender their shares, for SML issue. But I think clearly, this is a company which has a very large exposure in the bus segment, especially the school bus segment, and where possibly I think Mahindra and Mahindra wants to make inroads. Plus, they have a very good, 3-ton and 5-ton kind of category vehicle lineup for light commercial vehicle trucks. So I think definitely it could be complementary to Mahindra, and I think the kind of price they have been paying is not a very exorbitant one. So hopefully they manage to take over, all the, shareholding. I think it should fit into their long-term plans very well. But I think we'll have to look at the overall picture, at least for the next 6 to 8 months before we could see that the integration is really working out well for Mahindra and Mahindra.
So that's with regards to M&M and SML Isuzu. But let's quickly slip into a short break. Our producers are actually behind us to take that quick one and come back shortly.
stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
Welcome back. You're watching India Market Close. Let's quickly pull up a TVS Motors on the screens. Revenues up 16%, 11,542 odd crores is the number that you're tracking on the top line. The profit has seen a jump of nearly 60%. The stock has spiked to the day's highest levels with gains of around 4% coming in there. 648 odd crores is the number that you're seeing in terms of TVS Motors. Let me quickly pull up if there were any estimates on the on a TVS Motors as well, but no major tracking on that one. But clearly, a 67% up move in terms of the top line. Revenues have seen a growth of 16%. Let me see if there is any exceptional number that has bumped up the profitability this time around. But till I see that, Avinash, very quickly, your view in terms of the two numbers that are flashing, 648 crores in terms of the profit and 542 odd crores in terms of the top line.
I think numbers appear to be pretty in line and quite good. Hiral. I think I would look at more, numbers like operating EBITDA and the margins. I think that would give a clearer picture. But I think overall, the market seems to have liked these numbers. My sense is that we would like to hear the commentary, from the management, because within the two-wheeler pack, TVS Motors has always been an outperformer. They've always done better than players like Hero Motor or Bajaj. And I think clearly with a fresh, brand new, kind of product lineup expected very soon, I would say that the markets would be very keen to know what kind of product development the company has made and new products expected to be launched. But these numbers are definitely on the face of it looking good. I think operating EBITDA number would be very close, would be very important to watch. I believe that, the margins could have improved because commodity prices have been soft. So some improvement even on the operating side, if it has come, that would be an added plus for the company.
Very quickly, Jay, what are charts indicating? The stock is seeing gains of around 3%. A good buy call still today for tomorrow's trade?
Yeah, within the auto space, Mahindra and TVS are the strongest. And so I wouldn't be surprised if the stock crosses all-time highs past 2,900, 33,000. And the current support for the stock is about 2550. Against that, this can be bullish. But when it comes to a BTST call, I have Sonata Software. So I'm possibly heading to 394 tomorrow.
Right. So that's with regards to where TVS Motors is concerned. In fact, we're just looking at, there's no other income this time around. The cost of raw material consumed, that number on a consolidated basis is at around 6,933 crores versus a 6,056 crores. No major uptick in terms of the finance cost as well. Your other expenses are seeing a marginal uptick, so that should not be making a major difference on that front. But overall, a strong set of numbers. If you talk about any exceptional item, nothing seems to be coming in on that front as well. So that is interesting to watch out for. If we can just have the EBITDA and the margin number, that's what the street will be waiting out for as we speak. And as even Avinash was mentioning so far, But if I'm looking at any of the...
So the standalone profit...
I think the operating margin, what I'm seeing right now as a part of the turnover is around 12.4% is what I'm reading. But I don't know from the release if this is the same. But clearly a strong set of numbers. I think let's move on till we get something more on that front. But a strong set of numbers, a good spike coming in terms of the stock, and
the expectation
is also positive.
On a standalone basis was around 731 crore. The profit after tax has come in at 852 crore, as you can see on your screen. Versus the expectation, that's a sharpish spike up. We'll have Puneet come in and give us perspective on that number. Of course, we also await the margin number. There you go. The EBITDA margin is up 44% at 1332 crore. The expectation was 1169 crore. So there's a decentish uptick with regard to the margin as well.
And yes, standalone 13.95 is the margin number versus the 11.29 as per the calculation. So it's an uptick of around 265 basis points. Profits are up 75% on a standalone basis. We were talking about the consolidated numbers that were flashing on the screens, and the revenues is up around 17%. In fact, Puneet is there. Puneet, if you could decode for us as to what has worked this time around, because the stock is at the day's highs.
Well, definitely, it's a stellar set of numbers to say the least. You guys have mentioned the numbers. It was expected a 731 crores on a standalone basis. It's come in much higher than that. This might be the first time the company's actually touched any time close to 14% in terms of margins. So it's definitely a lot of factors that has contributed to this. Definitely on the PAT, it's a big beat on a standalone basis, as we can see as well. And while we can decode, commodity cost was one of the key things that has impacted the passenger vehicle makers, but that's not something that TVS has been impacted by in this particular quarter. And we have been seeing, in terms of the cost of materials as well, it's not increased as much as revenue has. So that's a key benefit. The cost of materials in this particular quarter coming in at 6,790 crores versus about 5,988 crores, and that's one key aspect. Employee benefit expenses also not inched up, just about up 7% in this particular quarter compared to the same time last year. Again, revenue growth has been much higher, and that was led by the company's, essentially the sales in this particular quarter. We've seen a tectonic shift essentially in the two-wheeler space, where scooters are outperforming the motorcycle market, and there TVS is in a very sweet spot because they have brands such as the Jupiter that are doing very well for the company. Apart from that, the iQ, which is the electric vehicle scooter brand, has again been transmitting the growth, and it's become profitable, at least in terms of the margin. So it's not diluting margins anymore, at least in terms of the numbers for something like a TVS, and that's one of the key aspects reflecting in the EBITDA margins. Similar trend we've seen essentially for something like a Bajaj Auto as well. That's one key thing. The sales, as we mentioned, overall two-wheelers and three-wheelers was up 14% in this particular quarter, while the scooter sales were up 27%, and that's helped the margins. So overall, a big beat. We have scheduled the conference call at 4:30 today, so a lot more on the demand environment for the domestic two-wheelers will be seen. Something that's negative for Bajaj as well as Hero, but a stellar set of numbers for TVS today.
Thank you, Puneet, for getting us the details. So TVS Motors, an interesting one. I think brokerage calls will be awaited on this one as well. But very quickly, one other stock that we should be taking a call on is the Reliance Industries. Jay, your quick view on a Reliance Industries?
Yeah, this is adding Phillip to the bulls, and it's just taken out resistance at 1362. The next resistance comes about 1421. So the underperformance of the last few months from July to April is probably signaling this. It's come to an end, and the support for the stock is about 1300 to 1280. If you can manage to hold 13 to 1280, it'll probably aim for 1420, the next resistance.
Okay, thank you so much, gentlemen, both Jay as well as Avinash, for joining us this afternoon, giving us all of those views. 40 seconds to close. TVS truly looking like a good set of numbers. We'll have better perspective, of course, very, very quickly, but let's look at markets first. The Nifty has had a very decent outing today. We're above the 24,300 mark. We've had a decentish kind of day. Can we pull up the intraday chart aided by the Nifty Bank? And that's how the intraday chart looked like. From the bottom, which is at the start of the day, we recovered over 300 points and closing very, very close to the day's high. In fact, 24,355 is the day's high, so just about 40 points away from that. So it's been a good day of trade overall. Let's look at the heat map as well on the Nifty, and that kind of gives us a good glimpse as to the breadth as well. You have decentish heavyweights which have contributed well to the day's gains. PSU banks were one pocket which was doing very, very well through the day today. But auto in focus with M&M, Tata Motors also having a good day in the field. Even an M&M doing well, 2.3% higher, that acquisition aiding M&M's number, of course. And Maruti, despite not enthusing the street with its numbers, also was up 1% or thereabouts. What didn't do well was a Shriram Finance, again on the back of numbers. It's a number dominant kind of day, as has been the case at least for this earnings season. So that's how it's playing out. Now we'll await the numbers of Trent, because they will declare numbers and we'll have better perspective tomorrow on those numbers. But yes, that's how it shaped up, with good breadth overall as well. Let's look at sectors, and within sectors as well. You saw the defense sector doing extremely well in trade today. There was some buzz. PSU banks were the other pocket which did very, very well for itself, 2.5% higher. Pharma was silently up 2% as well. So that's the other pocket. The Nifty Auto Index, after everything that's happening in auto, and plenty happening, 1.6% higher on the Nifty Auto Index as well. The Nifty IT is probably the only index languishing in the red. But outside of that, we've had a good day even sectorally. Let's look at the advanced decline and the breadth of the market, also positive in that sense. Just about positive. So we've had a kind of a tough day with regard to the volatility here, as you can see. But nonetheless, we've closed in the green where the breadth is concerned. Let's pull up the Nifty mid-cap and small-cap indices and zoom in as to how that's played out. 1.4% higher on the Nifty mid-cap index. The Nifty small cap index around 0.5% higher. Less movement here with regard to this one, just about 250 points odd in terms of the rise from the lows. So decentish kind of move on the Nifty small cap as well. Broadly, we've had a good day. Let's look at what to look for tomorrow, because there are certain plays where we'll have to keep our eye out on. Indian manufacturing production, Indian industrial production, two data points that we look for on the macros. In terms of interim dividend payout by 361 WAM, that's the other one which will be in focus. Niva Bupa 1% lock-in expiry, and Godavari biorefineries, that's 5%. Keep your eye out on both of those, because those might well buzz on the back of that anchor lock-in expiry. Those are all the stocks that you want to keep on your radar for earnings between today and tomorrow. So a lot of those may well be in focus on the back of both commentary as well as numbers, and we're buzzing today as well. For example, a 5-star, a Jana, there was plenty of buzz on some of those. The two big boys will be Bajaj Finserv and Bajaj Finance. Both of those numbers well awaited in just post-trade likely tomorrow. So something to keep our eye out on. But with that, from all of us here, thank you so much for tuning in. That's all the time we have. We'll let you go on that note. More action on the other side of this break. Stay tuned.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The last 1 month, if you see, the share prices of Gensol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Jaggi brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias.
To India specifically, I really think India has
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. US benchmark indices end higher. The Nifty 50 and 30 pack Sensex ended 1% higher today. Broader markets mostly had a mixed day with the Nifty Mid-Cap 150 posing more strength than the small cap space. Reliance, Axis Bank, ICICI Bank, SBI and HDFC Bank contributed most to the overall gains. Ultratech is in the focus. The company posted its quarter four results. The net profit of the company is up 10% and stands at 2,482 rupees. Revenue is up 13% and stands at 23,063 crore rupees. EBITDA is up 12.3%. Margins remain flat. And big news from the auto industry. Mahindra & Mahindra is acquiring a 58.96% stake in SML Isuzu for 650 rupees per share, including 43.96% from promoter Sumitomo Corporation and 15% from Isuzu Motors. M&M will also launch a mandatory open offer for up to 26% more. Now, this move aims to boost M&M's light commercial vehicle market share from 3% to 6%, with plans to reach 10 to 12% by FY31 and over 20% by FY36. Gensol Engineering shares hit a fresh record low on Monday, locked in the lower circuit for the 13th consecutive session. The stock has fallen below 90 rupees for the first time. The stock has been sliding consistently since 24th of February, reaching multi-month lows after ratings agency flagged concerns over delays in servicing term loan obligations. Now, allegations of data falsification have further weighed on the sentiment. Ramkrishna Forgings held a conference call to discuss an audit committee meeting revealing irregularities in the inventory recording, a first in the company's history. So, a preliminary assessment identified that the issue, and two reputed audit agencies have been appointed to investigate a submit the report. Now, irregularity could impact the financial reporting, potentially affecting investor confidence in stock performance. Now, the final report will be critical for assessing the financial impact and any systematic issues. The stock may face short-term volatility pending clarity. L&T Finance's Q4 FY25 earnings con call highlighted challenges in the microfinance sector with a strategic shift towards the prime and near-prime customers. The company utilized 400 crore rupees of prudential provisions in FY25 with 575 crore rupees unutilized for the FY26. Now, collection efficiency and rural microfinance book are expected to stabilize by Q2 of FY26. Now, the NBFC faced stress in microfinance due to over-leveraging leveraging and external factors like floods in key regions. Now, the 575 crore buffer strengthens resilience, but analysts note that potential margin pressure if microfinance recovery lags. Sigachi Industries subsidiary signed an MOU with CZEC-based Respilone Group on April 24th of 2025 to collaborate on nanofiber-based drug delivery systems. Now, the partnership leverages Respilone's Nunex technology to develop innovative solutions like the invisible patch and powder-based formulations for non-invasive, precise drug delivery. The deal has boosted Sigachi's stock, with shares surging on the announcement. Now, however, challenges like regulatory approvals and market adoption may impact the timelines. Apart from information technology, all other sectors recorded losses, ending the session in the green territory. Defense, oil and gas, PSU Bank lead the sectoral pack towards the end of the day. The market breadth stood equally distributed between the bulls and the bears. TVS Motors in focus. The revenue of the company is up 16% and stands at 9,550 crore rupees. EBITDA is also up 44%. Net profit is up 75% and stands at 485 crore rupees. Vodafone Idea launched 5G services in Chandigarh and Patna on April 28th. Following its Mumbai debut in March, the rollout offers unlimited 5G data on plans starting from 299 rupees, targeting high-demand areas. With Samsung's energy-efficient infrastructure and AI-optimized networks, Vodafone Idea aims to expand to Delhi and Bengaluru in May. The company reported 70% adoption among the eligible Mumbai users, with a 50,000 to 55,000 crore rupees capex plan for over 3 years. Vodafone Idea targets 90% 4G coverage by June 2025 and aims to compete with Jio and Airtel, potentially with 15% cheaper plans. Manorama Industries share price jumped over 10% on April 28th after stellar Q4 FY25 results. The company reported an 80% year-on-year revenue surge to 232 crore rupees, a 208% EBITDA increase, and a 238% PAT rise to 42 crore rupees, with margins expanding significantly. Now, the FY25 guidance was also exceeded, and FY26 revenue is projected to cross over 1,050 crore rupees. Also, while FII and DI stakes increased, promoter holding dipped to 54.4%. Now, the stock trading at a P of 89 reflects high valuations but strong growth prospects in the food, confectionery and cosmetic sectors. Servotech Renewable Power System incorporated a wholly owned subsidiary, Dream League of India, on April 28th, with a paid-up capital of 10 lakh rupees. The move aims to diversify Servotech's portfolio potentially into sports-related ventures, leveraging its renewable energy expertise. Now, the Servotech has also seen strong growth, with Q1 of FY25 profit up 9% to 4.48 crore rupees and sales rising 41% to 112 crore rupees. The incorporation of Dream League of India suggests a strategic expansion, possibly into the cricket-related events like the T10 leagues, aligning with India's sports market growth. Tejas Networks share price plummeted 14.3% to 735.5 rupees on April 28th, hitting a 3-week low after reporting a 72 crore rupees net loss in Q4 or FY25. Now, the loss was driven by 117 crore rupees inventory write-down and a sharp drop in EBITDA to 21 crore rupees from 306 crore rupees. Now, the inventory write-down reflects strategic adjustments impacting margins. Posts on social media highlight investor concerns over a shrinking order book and rising borrowings. Despite recent PLI incentives and BSNL 5G contracts, volatility and working capital issues weigh on the sentiment. Morgan Stanley maintains an overweight rating on Shriram Finance with a 750 rupees target price, expecting a share price rise within 60 days. Despite post Q4 results sell-off, the views reaction as overblown, citing better than expected results. Now, Shriram Finance's Q4 FY25 results show a 20% year-on-year PAT growth of to 2,094 crore rupees, with AUM up 20% to 2.2 lakh crore rupees, driven by commercial vehicle and SME loans. Now, the stock fell after results due to a 70 basis point quarter-on-quarter rise in the credit cost to 2.7%. But MS argues that this reflects prudent provisioning. MS sees limited downsides as 2,800 to 3,000 level supported by strong rural demand and disbursal growth. The entire defence pack continued to be under pressure since Friday when all the 16 constituents of the Nifty Defence Index declined. Garden Reach, Shipbuilders and Engineers, DCX Systems, Idea Forge Technology, Cochin Shipyard and Zentech were the top losers in the segment, each falling over 3%. Nifty Defence was also down nearly 3% today. Lloyd's Metals and Energy share price dropped over 6% on April 28th after Q4 FY25 results showed a 27% year-on-year decline in the consolidated net profit to 202 crore rupees from 277 crore rupees. Revenue fell 23.5%, EBITDA slumped 44% and margins contracted to 21.2% from 29.1%, reflecting operational challenges. The weak performance was driven by lower sponge iron and steel sales compounded by falling iron ore prices and higher input costs. Lloyd's announced a 1 rupee per share dividend, but investor sentiment remains cautious due to a shrinking order book and rising debt. Shares of Reliance Industries surged 3.35% to a 5-month high on April 28th after Q4 results showed a 5% quarter-on-quarter net profit increase to 19,407 crore rupees. Revenue grew by 9% to 2,61,388 crore rupees, but EBITDA remained flat at 43,832 crore rupees, with margins contracting 148 basis points to 16.8%, the sharpest drop in 10 quarters. The profit growth was driven by strong performances in Geo and retail, though refining margins weakened due to lower cracks. Now, O2C segment faced headwinds from the global oversupply, while upstream oil and gas production rose 11%. However, posts on X highlight concerns over high debt and margin pressures. Analysts see a 1,500 rupees target if refining recovers, but near-term volatility persists. Sonata Software announced a $73 million 5-year AI-led digital modernization deal with a major US-based technology, media and telecom company on April 28th. The partnership involves establishing an AI-enabled modernization engineering center in India to drive platform engineering, cloud transformation, enterprise systems, cybersecurity and modern application development, enhancing the client's scalability and innovation. Now, this is Sonata's second largest deal, reinforcing its position in the modernization engineering with a focus on its Harmony.ai platform for responsible AI adoption. Motilal Oswal upgraded RBL Bank to buy from neutral setting up to 20 rupees target price, implying 70% upside after hiking FY26 to FY27 EPS estimates by 12%. Now, the brokerage see business growth gaining traction, with slippages normalizing by Q2 of FY26. Now, cost-to-cost income ratio improving to 61% by FY27. Loan growth is guided at 16 to 17% for FY27, with NNPA at 0.3% and stable net interest margins. Indus Towers board is set to meet on April 30th to explore shareholder return strategies, including a potential share buyback, bonus share issuance, or dividend payout. The announcement drove a 4% stock price surge on April 28th, fueled by improved cash flows from Vodafone Idea dues recovery and expectations of 15 to 20 rupees per share dividend or the company's first ever bonus issue. Morgan Stanley maintains an equal weight rating on Apollo Tyres with a 503 rupees target price, seeing limited earnings impact from its strategic moves. Now, the brokerage highlights Apollo's focus on sustaining margins and free cash flow, viewing recent actions as positive, though near-term closure costs may pressure margins. IndusInd Bank's board-appointed investigation by Grant Thornton confirmed incorrect accounting in the internal derivative trades, leading to notional profits and a 1,960 crore rupees financial hit in FY25. Now, the board is fixing accountability, realigning senior management roles and strengthening internal controls, with the impact to be reflected in FY25 earnings. Commerce Minister Piyush Goyal begins a 5-day Europe visit on April 28th, covering London, Oslo and Brussels to advance trade ties. In London, he'll push to finalise the India-UK FTA, now in its final stages. In Oslo, he'll focus on operationalising the India EFTA TEPA signed in March 2024. Now, in Brussels, he'll drive India-EU FTA talks targeting a year-end deal amid global trade uncertainties. Brent crude oil prices erased early gains, dipping 1% to $67.05 per barrel on April 28, as US-China trade tensions fueled investor concerns. The US claimed trade talks with China were underway, but Beijing denied any negotiations, highlighting conflicting statements. Fears of escalating tariffs and weaker global demand pressured oil prices. The Tamil Nadu government introduced the Money Lending Entities Bill 2025 to curb coercive loan recovery practices, potentially targeting microfinance institutions but exempting RBI-registered NBFCs and banks. Now, Tamil Nadu, with 50,750 crore rupees MFI assets under management, is the second largest state for MFI exposure after Bihar. A similar Karnataka bill led to collection efficiency dropping below 90%. The Central Board of Direct Taxes has rolled out an aggressive action plan for the fiscal year of 2025-26 aimed at tightening the net around black money and tax evasion. With the first of its kind move, it plans to set an ambitious target of unearthing 2.4 lakh crore rupees in undisclosed income, according to people familiar with the matter. As part of the internal strategy, the CBDT has directed its investigation wing to prepare focused data-backed reports on select high-risk sectors in a stipulated time period. India and France signed a 63,000 crore rupees agreement on Monday for the procurement of 26 Rafale marine fighter jets for the Indian Navy. Defense Secretary Rajesh Kumar Singh represented the Indian side at the signing ceremony, with Navy Vice Chief Vice Admiral K. Swaminathan also present. Now, the deal is part of India's efforts to strengthen its naval aviation capabilities. Now, India is procuring the jets from French defense major Dassault Aviation for deployment on board aircraft carrier INS Vikrant. Now, under the terms of reference, the delivery of the jets will have to start around 5 years after the signing of the contract. Now, sealing of the mega deal came 3 weeks after the Cabinet Committee on Security headed by Prime Minister Modi cleared the procurement. Gold surge past 1 lakh rupees per 10 grams is reshaping buying patterns in India, with more shoppers recycling old ornaments and opting for lighter pieces as they adapt to record prices. A chart tracking retail gold prices in Mumbai over the past century says, please don't stop your wife from buying gold ornaments. Gold prices in retail markets across the country surged to a historic high of more than 1 lakh rupees per 10 grams last Tuesday, driven by strong safe haven and investment demand for the yellow metal. Now, despite some easing a day later, prices are expected to remain elevated. The Mumbai Municipal Corporation has approved a fare hike of Brihan Mumbai Electric Supply and Transport buses in a move that is expected to generate additional revenue of 590 crore rupees annually for the financial capital's public transportation provider. Currently, the minimum fare for travelling in a non-AC bus is 5 rupees and the maximum is 20 rupees, while for AC buses, fares range from 6 rupees to 25 rupees. After the proposed hike, the minimum fare will double to 10 rupees for non-AC buses and 12 rupees for AC buses. Following the revision, the fare of the non-AC buses will range between 10 to 35 rupees, while AC bus fares will be between 12 rupees to 40 rupees. Consensus estimates by an analyst projects Vedanta to post a muted set of earnings in the fourth quarter of financial year 2025. The diversified commodity-based company's net profit is expected to rise 2.6% quarter-on-quarter to 3,456 crore rupees versus 3,456 crore rupees bottom line reported by the company in the previous quarter. Now, while consensus estimates may be skewed to Vedanta posting a rise in EBITDA in fourth quarter due to Hindustan Zinc's strong numbers, brokerages like MK, Novama and Kotak Securities expect weakness in the company's aluminium segment. The Supreme Court on Monday observed that all OTT and social media platforms have a social responsibility to appear before the court as the bench was hearing a petition seeking directions to the centre to ban the streaming of obscene online content. Sending a notice to the centre, social media platforms and OTTs, the court observed plea raises important allegations regarding objectionable, obscene and indecent content on OTT platforms and social media, while adding the Solicitor General fairly states that content go to the extent of perversity. The petition further demanded that the court form a national content control authority to oversee content regulation and frame guidelines to curb obscenity on platforms like Facebook, Instagram, YouTube, Netflix, etc. Acting on the recommendations of the Ministry of Home Affairs, the centre banned 16 Pakistani YouTube channels, including some leading channels like Dawn News, Sama TV, Ari News and Geo New on Monday for airing provocative content and misinformation on India. According to reports, the decision was taken on the back of the terror attack in Kashmir's Pahalgam that killed 26 people, and recommendations were made by the Ministry of Home Affairs. Now, all these 16 channels have 63.08 million followers. Viewers, with that, it's a wrap on Market Express, but please stay tuned to NDTV Profit as there's more lined up ahead for you all on the other side.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Junkie brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias.
Benchmark indices kickstart the week on a strong note. The Nifty ends above the 24,300 mark, whereas the Sensex jumps over 80,000 levels. Broader markets fare mixed. All sectors, barring IT, lend support. In a bid to crack down on black money and tax evasion, the central body for direct taxes launches an aggressive plan to target 2.4 lakh crore rupees in undisclosed income. The first-of-a-kind move aims to focus on high-risk sectors and bring informal economy into mainstream tax net. This is an NDTV Profit exclusive. Delhi Chief Minister launches Ayushman Vandana Yojana for senior citizens, offering free healthcare worth up to 10 lakh rupees for citizens aged 70 and above. At the NDTV conclave, CM Rekha Gupta talks about Delhi's air pollution plan aimed against end-of-life vehicles, misprayers and smog guns on high-rises. India has signed a major defense deal with France's Dassault Aviation to acquire 26 Rafale marine fighter jets for the Indian Navy. The deal comes with the total cost of the agreement estimated at around 62,000 crore rupees. Defence Minister Rajnath Singh and PM Modi review security preparedness after Pahalgam terror attack. India bans 16 Pakistani YouTube channels and warns media outlet BBC over misleading content on the matter. This as the area continues to grapple with cross-border firing along the LOC. M&M shifts gear to acquire controlling stake of 58.9% stake in SML Isuzu for 555 crore rupees. With this, M&M plans to piggyback SML Isuzu for its truck and electric bus segment. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, benchmark indices staged a sharp rebound today with ICICI Bank's share price leading the rally. The Nifty ended at 24,300 levels, while the Sensex surged nearly 1,000 points. All sectors except IT closed in the green, with metal, realty, oil and gas, pharma and PSU banks seeing gains of 1 to 3%. Now, to give us a detailed market roundup, my colleague Harsh is joining us with more details there.
Well, it's a good day to start the week off. You know, markets were up. There was decent buzz with regard to where the Nifty was. The breadth on the Nifty was extremely strong. So positive across the board. All sectors traded in the green. You had earnings dominating the way in which stocks were moving, even on the Nifty. 5% up on a Reliance. Shriram Finance was the one stock which took a bit of a hit on the back of its numbers. Both margins as well as asset quality, or rather provisioning or credit costs were a bit of a miss. When you're looking at the overall picture with regard to how the advanced decline panned out, it didn't look as bright. So the breadth of the market largely 1:1. But the Nifty mid-cap, small-cap indices traded very well. 0.5% high on the Nifty small cap, 1.5% on the Nifty mid cap. So some bit of zing on some of those counters. Even within the large cap basket, the PSU banking index did very well. SBI was up 2+%, and along with it carried some of those PSU names. And again, there was some bit of outperformance in that pocket. The other one was the Nifty Defense. There was significant outperformance there, 4% higher, the top sectoral gainer for the day. The Nifty IT was probably the only one which was languishing in trade today. The Nifty Pharma also was up around 2%. So decent-ish kind of day with good breadth. Now, we spoke with Lawrence Blanco earlier today, listening to a slice of that conversation on what he believes with regard to markets.
Yeah, look, we've been positive on the Indian private banks through the fourth quarter of last year and continue to remain that way. Banks, the broader banks index in the Nifty has been a leadership sector since September last year. So even through the sell-off, the private banks fell less than the broader market. And in the rally that we've seen from the March lows, they've outperformed. And HDFC and RCRCI have been two stocks that we continue to sort of flag. RCRCI has been more of that consistent trending stock, where HDFC, having done nothing from 2021 through to late 24, has finally broken out of a multi-year trading range. And we think there's still significant upside and re-rating for HDFC Bank. So we think any pullbacks in those two names, you want to keep on accumulating. The longer-term trends for RCRCI is intact. From the fourth quarter of last year is that we thought that private banks relative to PSUs made an important low, having underperformed the PSU banking sector for the past 4 years. And we only, we think in baseball terms that, we only in the first few innings of that rotation trade. So from a longer term aspect, I still think private banks over PSU banks. And if you wanted to look on the infrastructure side, but again, this falls back to the PSU, something like NTPC has based out, it's broken the downtrend from the September highs, but, I'll put that in the PSU bucket anyway.
Now to an NDTV Profit exclusive. The Central Board of Direct Taxes has set a target to uncover 2.4 lakh crore rupees in undisclosed income during FY26. Now, the sweeping crackdown on black money and tax evasion is aimed at addressing systematic loopholes and bringing the informal economic into the formal tax fold. Now, Shrimi is joining us with more details on this significant development.
The direct tax apex body CBDT has recently outlined an aggressive action plan for the current financial year in order to crack down on undisclosed income with a target of 2.4 lakh crore. Now, sources tells us that the CBDT has actually disseminated and instructed DGITs, the investigation head across the jurisdiction, across the country, to actually prepare an extensive report on sectors which are mostly in the informal economy. So the move is to kind of bring informal economy under the tax net. Now, what all these sectors could be, according to sources, it says that select sectors could be, manufacturing, services, agriculture, mining, international trade, hotels, retail trading, scrap dealing, hotels, healthcare, etc. And in fact, this says that the report should comprise of important key details, which includes, business landscape and key players, merger and acquisition, bulk deal, any investment trends which been seen in that particular sector in the respective company, any shareholding changes, any plans of IPO, any delisting which is happening in that sector. In fact, CBDT also clearly said that financial metrics, for example, advanced tax, how much advanced tax is coming from these informal economy sectors, and what is the input and output cost. In fact, they are also giving a lot of weightage on the tax related issues. So, for example, is there any cross-border issues related with that sector and company, and what is the future risk and outlook as far as these sectors are concerned. And in fact, they have given a very tight timeline also there. So if you see, sources tells us that the identification of sector will be done by the end of next month, which is by May end, and then DGIT is supposed to have a report by December end, and the final report will go to CBDT by February 2026. And in fact, all jurisdiction will have a target to have at least one major search and seizure action starting from July 31st and two major search and seizure action between August and March 2026. And in fact, it's very interesting here that out of this 2.4 lakh crore, Mumbai has been given the highest target of 60,000 crore, followed by Delhi 45,000 crore, and Bengaluru and Ahmedabad 20,000 crore each. So clearly it's an extensive plan to crack down on the informal economy, at the same time plugging the loopholes of the system and to bring more such sectors under the tax net.
Thanks, Shrivi, for that. Now, New Delhi is coming up with new health scheme for the elderly via Ayushman Bharat Vay Vandana Yojana, offering free healthcare worth up to 10 lakh rupees. At the NDTV's Emerging Business Delhi chapter conclave today, New Delhi Chief Minister spoke about the government's drive to end the pollution menace with new announcements. Listen in.
जो इसके कंपोनेंट है एयर पोल्यूशन के, चाहे वो आपकी डस्ट हो, क्योंकि आधे से ज़्यादा शहर तो आपका ओपन है, वहाँ पे ना ग्रीनरी है ना आप वो सीमेंटेड है। दूसरा इसमें व्हीकलर पॉल्यूशन कि आपके जो व्हीकल पूरे शहर में चलते हैं उसका पॉल्यूशन होता है। और ये जो डस्ट पार्टिकल एयर में रहते हैं ये कोई 2 महीने के लिए नहीं आते, ये साल भर है। वो आज गर्मी के मौसम में भी है, वो सर्दी के मौसम में भी है, हर समय है। तो हमने आते ही जितनी योजनाएं बनाई, हमने वाटर स्प्रिंकलर्स थे, हमने जो स्मोक गन्स थी, पूरा साल भर चले एक्सेप्ट मानसून मौसम, क्योंकि उस टाइम तो ईश्वर बारिश कर रहा है। तो पूरा साल भर स्प्रिंकलिंग हो, पूरा साल भर स्मोक गन्स चलें ताकि जो एयर पॉल्यूटिंग कंटेंट हैं वो बैठ जाएं। ये साल भर की योजना बनाई, डिटेल्ड बनाई कि आपके अगर दिल्ली में 250 वार्ड हैं तो उन 250 वार्डों पे 4-4 मशीनें उनको अलॉट करनी है। उसके लिए बजट क्रिएशन किया, उसके टेंडर लगे और अब वो जनता के बीच में आने की शुरुआत पे है। आपकी किसी तकलीफ में, आपकी किसी बीमारी की स्थिति में सरकार विल टेक केयर ऑफ़ यू, आपकी पूरा ध्यान रखेगी, आपका इलाज कराएगी, आपकी टेस्टिंग्स, आपका हर वो मेडिकल एक्सपेंडिचर जो आपको अपने बूते पे करना कई बार डिफ़िकल्ट हो जाता है, कई बार आपके बच्चे भी उतना सपोर्ट नहीं कर पाते, कई बार सिचुएशंस बड़ी ऑड होती है। ऐसे में सरकार जो अपने सीनियर सिटीजन्स की केयर टेकिंग कर रही है, ये ना केवल दिल्ली के लिए, मैं बताऊं पूरे विश्व में आप कोई देश उठा के देख लीजिए, ऐसी योजना आपको मिलेगी नहीं। ये पूरे वर्ल्ड के लिए एक विजनरी योजना है जिसमें आप अपने देश के, अपने शहर के 70 साल से ऊपर के बुज़ुर्गों का इलाज करा रहे हैं डिस्पाइट ऑफ देयर इनकम स्टेटस। उनका धर्म, जाति, स्टेटस कुछ भी इसमें काउंट नहीं करता। आपके पास उस शहर का आधार कार्ड हो, आप वहाँ के लोकल रेजिडेंट है, दैट इज़ एनफ।
The conversations at NDTV Conclave event was around small and medium enterprises. Chairman of the Finance Commission, N.K. Singh, spoke about the biggest challenges faced by the MSMEs in the country. You can catch the entire conversation with him at 5:30 p.m. today.
So access, assured access and bridging the credit gap is one very big overarching issue. The second very big overarching issue is how to enhance its ability to upgrade its productivity and upgrade its skill. And skill and productivity upgradation remains a challenge. Third, of course, is the access to marketing and growing technology changes. And the last, of course, is its important contribution to the GDP of the country as a whole and enhance its contribution to India's export effort.
Viewers, India has finalized a 63,000 crore deal with France for 26 Rafale fighter jets, including 22 single-seaters and 4 twin-seater trainers. Now, deliveries are expected by 2031. The agreement covers fleet maintenance, logistical support, personnel training, and the local manufacturing of components under offset obligations, boosting the Atmanirbhar Bharat initiative. NDTV's Vishnu Som joins us with more details.
Well, this is a huge development. India and France have signed the 63,000 crore Rafale deal. This is for Rafale M fighters that you see over here on your screen. These will be for India's aircraft carriers. Let's bring you a couple of important details about this. Firstly, it's a 63,000 crore deal for 26 Rafale M fighters. 22 of these are going to be single seat, 4 are going to be trainers. This has now been cleared. It has just been signed within the last few minutes. So that's what it's all about. Let's move to the next page, bring you a few more details on this particular deal. These will be deployed on INS Vikrant and INS Vikramaditya, India's 2 aircraft carriers. Let's bring you more details. Let's go to the next page. The Defense Secretary has now signed this deal with representatives from France, primarily the Dassault company, which manufactures the fighters. The aircraft which are to be procured by the Indian Navy will be one of the most advanced of their types in the world. Indian missiles will be integrated, perhaps the Astra missile system, because we made a great deal of developments over there. The first jets should start coming into India in a couple of years from now. The entire tranche of aircraft should be acquired by approximately 2031. Remember, the Indian Air Force already operates 36 Rafale fighters. All of this is a boost for Indo-France strategic ties. In simple terms, the acquisition of this platform greatly enhances the capability of the Indian Navy. These fighters can deploy anti-ship missiles, cruise missiles, long-range air-to-air missiles, and a lot more.
Viewers, as tensions between India and Pakistan soar following a brutal attack which killed on 25 innocent tourists and a local in Pahalgam, Defence Minister Rajnath Singh met with PM Modi at his residence today for a key meet. Now, Defence Minister Rajnath Singh briefed the Prime Minister on the security preparedness following the Pahalgam terror attack in the 40 minutes closed-door meet. NDTV's Aishwarya joins us with more details there.
Well, it was a complete closed-door meeting, a briefing that was done by Defence Minister Rajnath Singh to Prime Minister Narendra Modi. Remember, it was yesterday, all three service staffs along with the CDS met Defence Minister Rajnath Singh, and it was a day before as well when NSA Ajit Doval met Mr. S. J. Shankar, External Affairs Minister of our country. Remember, it is for the last 4 days what we are witnessing along with the LOC is a ceasefire violation by the Pakistani troops, and India in retaliation had given a swift and effective response to that. It is the briefing that was given by Defence Minister Rajnath Singh that what actions our Indian armed forces are taking against Pakistan on every front possible, be it from the Jammu and Kashmir, Rajasthan, Punjab and on along the LOC as well. The meeting lasted for 40 minutes as Rajnath Singh just left Prime Minister's residence here at 7 Lok Kalyan Marg, where we are reporting from, but it is very crucial at this point of stage when Prime Minister, in his own words from the soil of Bihar, stated that there will be an unimaginable action against terrorism, and India will identify and will take action against the perpetrators who are sitting across the border. Now, at when and what time this action will take place is something that is very sensitive. The government is keeping very close, but series of meetings are taking place day after day. It's been 5th day of the the meetings that we are witnessing on higher levels. Home Minister to Defence Minister to External Affairs Minister, all doing their due work, their diligence as far as the entire meetings are concerned to take envoys as far as S. J. Shankar is concerned. We saw how different countries of envoys were called at the MEA. They were briefed about the developments as well. It was S. J. Shankar who met NSA Ajit Doval, and now yesterday after those crucial meetings with the CDS, with NSA and the armed 3 service staffs, it is today Defence Minister Rajnath Singh who briefed Prime Minister Narendra Modi about the latest development. The meeting lasted for almost 40 minutes at the 7 Lok Kalyan Marg.
Thanks for that, Aishwarya. Even as leaders discuss India's retaliatory options on ground, the situation remains tense. Pakistani army continues to violate ceasefire along the LOC, marking the 4th such violation since the Pahalgam terror attack. Now, this time around, firing occurred in Kupwara and Poonch districts, to which the Indian army said that they responded swiftly and effectively. This was also the first time that Pakistan army violated the ceasefire in the Poonch sector. My colleague Shivarur, who has been reporting from Kashmir, brings us the latest from Ground Zero.
So for the 4th night in a row since the Pahalgam terror attack, ceasefire violations by the Pakistan army along at least 27 different army posts, mostly in the Kashmir sector of the line of control. But the big development since last night is that there's been a big ceasefire violation also south of the Pir Panjal range, which separates the Kashmir Valley from the Jammu division. There was a ceasefire violation for the first time since Pahalgam in the Poonch sector. And this clearly shows that the Pakistan army is not only increasing the intensity of these ceasefire violations, but also expanding the scope and the length strength of the LOC, where these escalations are taking place, it's very clear that this isn't a one-off. This is not speculative firing. These are targeted use of medium machine guns and light machine guns at Indian Army posts. Bullets have actually hit those Indian Army posts. Obviously, the Indian Army has responded very, very effectively. There is no word on whether there are any casualties on the Pakistan side. None on the Indian side, thankfully, so far. But if things escalate further, if these, sort of sporadic tensions on the LOC restricted to the night for now escalate beyond a certain level, then you're likely to see much more damage on either side going forward. If you remember, ceasefire escalations in the past have generally taken a pattern of escalation where heavier weapons suddenly come into the mix, including things like field guns, artillery, mortars, rocket-propelled grenades, anti-tank missiles, and that kind of thing. All of that, has been in the picture in the past. So we'll have to see whether that takes place. What appears clear, however, is that the Pakistan Army has a clear leadership directive to conduct these ceasefire violations as an instrument of distraction, as an instrument of provocation, trying to trigger some kind of a bigger response from India in order to preempt something else that the Indian government and Indian military may be planning. We can't speculate on that, but it is very clear that this is a kind of tactical curtain that the Pakistan Army wants to pull over the many embarrassing things that have been happening to it. And I don't say this lightly, from the Pakistan Army chief embarrassing himself with a communal speech to the Pakistan Army losing many soldiers and officers in attacks from Balochistan to Khyber Pakhtunkhwa. So this is a historic low as far as the Pakistan Army is concerned, and escalating tensions on the LOC is one of the ways it is trying to sort of radiate strength and suggest that all is not lost.
Absolutely, Shiv. Viewers, that was the situation on ground. But to intensify the crackdown on terror, the centre has banned 16 Pakistani YouTube channels for disseminating provocative and communally sensitive content. The centre has also accused these channels for spreading false and misleading narratives against India. The army and security agencies, all these 16 channels collectively have a 63.08 million following. With the centre's action, people in India cannot view the content of these channels. Amongst the channels that have been banned are Dawn News, Sama TV and Geo News are some of the prominent names. Now, India's index of industrial production data is out for the month of March. It rose by 3%. Key sectors showed mixed performance. Mining output edged up by 0.4% year-on-year, while electricity generation surged by 6.3%. Capital goods production also grew by 2.4%, and infrastructure goods saw a robust rise of 8.8%. Notably, consumer durables increased by 6.6%, highlighting steady demand trends across the economy. In a major move to boost its commercial vehicle business, M&M is set to acquire a 58.96% stake in SML Isuzu in a deal valued at 555 crore rupees. M&M already has market leadership in multiple segments. My colleague Tushar interviewed Anish Shah, Group CEO and MD at Mahindra Group. Let's hear from him on why M&M is making this deal now and what exactly it means for them.
Let's first talk about the rationale behind the deal. Why now, and what is the play that you're making in the CV space?
So let's look at our auto and farm businesses. We have market leadership in multiple segments. SUVs, we've grown from 12% to 23% market share. In tractors, we have a 43.4% market share, which is 4 or 5 points higher than where we were 5 years ago. In LCVs, we have a 51.9% market share. In electric three-wheelers, which is a business we really had a single-digit share in ICE three-wheelers at one point and nothing in electric, we today have a 43% market share. So we've been able to take segments and really do very well in those segments. We're now looking at the next one, which is greater than 3.5 ton commercial vehicles, and not as much in the MHCV space, but in the intermediate space between that. And we have a 3% market share today. With this acquisition, with a company that has done very well, that is positioned very well in the market, that takes our share to 6%, and we have a target then to go to 10 to 12% in the next 5 years, and then to 20% plus in another 5 years after that. So this is something that we feel positions our trucks and buses business very well, and allows us to play in this segment in a manner that is consistent with how we play in many other segments in this space.
Viewers, now let's look at the story that's making headlines in the nation. Reports indicate that Rapido, the ride-hailing platform, is preparing to launch a food delivery pilot in Bengaluru in the upcoming weeks. Now, backed by Westbridge Capital, the startup is engaging with major restaurant chains, including India franchise operations of McDonald's, KFC and Pizza Hut, along with other quick service restaurants and cloud kitchens known for high order volumes. Mumbai residents will soon have to pay almost double the fare for using the best buses, as the BMC has given the nod to increase the fares, with the final decision left to the state government. Now, this marks the first revision since 2018. Non-AC fares will rise from 5 rupees to 20 rupees to a minimum of 10 rupees, while AC fares will also go from 6 rupees to 25 rupees to a 12 rupee minimum. Now, monthly passes will also become more expensive under the new pricing system. Union Commerce Minister Piyush Goyal embarks today on a significant tour of London, Oslo and Brussels, aiming to accelerate 3 major free trade agreements with these regions. Now, this visit coincides with India's ongoing efforts to secure greater technological access from the United States as part of broader trade negotiations. The London leg of the trip holds particular importance, as discussions on the proposed free trade agreement between India and the UK are advancing steadily. Well, with that, viewers, it's a wrap on Profit 360, but there's more lined up ahead for you all, so stay tuned to NDTV Profit.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
.361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have 2 credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Jaggi brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias,
India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system.
Hello and welcome. You're watching KYC. We're today going to talk about Hindustan Zinc, and first off, I'm going to talk about why. Hindustan Zinc has literally supplies 75% of India's zinc production and caters to nearly 75% of India's zinc needs. So in that sense, it's a critical company with a very high free cash flow. It does free cash flow of roughly 15,000 crore, and there could be an upside bias to this. Why would that be so? Two reasons. One, you're expecting cost of production of zinc to continue to compress. They've done that in FY25. Likely, it's possible that they could do it in FY26 and beyond as well, which could healthily add to the free cash flow number that Hindustan Zinc does. The second reason is zinc prices. Of course, that element is a little more variable, a little more outside Hindustan Zinc's possible control, but it's the world's second largest zinc producer, and therefore, in that sense, controls some bit of that. So those two positive tailwinds could well lend a push to the numbers for Hindustan Zinc going forward. Last 3 to 4 year numbers, etc., we'll of course discuss, but let's first talk about the company. And let me bring on board Mihika Barve as well, because she's going to help me do that. Yeah. Welcome, Mihika. Good morning. So I'm going to first start off, Mihika, by probably breaking down the company. It's engaged in mining and smelting of zinc, lead, and silver. It's the world's largest integrated zinc producer with the lowest cost of production. 77% of domestic primary zinc market share is directly owned, controlled by Hindustan Zinc, and it's India's only integrated and listed silver player. So some of those factors. Mihika, what about commodity prices? What can you tell us about that vis-a-vis Hindustan Zinc?
Yeah. So when you look at a Hindustan Zinc, its earnings and thereby its profitability is dependent on three factors. The first factor is your commodity prices, and the potential earnings depend on how the movement in zinc and lead prices as well as silver prices move in. Now FY25 earnings were supported by a 16% year-on-year rise in the zinc prices, and the company had a strong set of numbers for the same. And the company does expect resilient prices in FY26 despite globally a zinc and lead surplus vis-a-vis the demand. They do expect stable pricing for the next 3 to 6 months. Now, FY25 average price for zinc was $2,800 per MT. The expected price as per the company stands at $2,850. Now, this is obviously the average price that they expect in FY26. There could be volatility during the financial year. For lead, from 2013 odd levels to $2,025 per MT is what they're expecting. Now, 10% rise to the commodity prices was when you compare to the FY25 average. For zinc, it leads to a 1900 to 2000 crore positive impact on EBITDA. For something like lead, it leads to almost 300 crore EBITDA addition, and for silver the range is between 550 to 575. The next thing that we need to look at when you have your you have your commodity prices stable, Harsh, is production, how much they're producing. Now, year-on-year growth for mined metal, it's been a very steady uptick, but they do have certain small growth projects into stream, and their target for FY26 stands at 1,125 kiloton per annum. The same thing for refined metal stands at 1,100 100 kiloton per annum. And for silver, which is a byproduct of all their mines, and they are, and all depends on the kind of grades of silver you're getting at the mines, is expected to see a further uptick in the range of 700 to 710 metric tons. And lastly, you have to look at, like Harsh mentioned, cost of production. FY25 zinc cost of production stood at a 4-year low, and the company has reduced their cost of production by $300 per ton if you look at their peak level. And their FY25 zinc cost of production stood at $1,052 per ton. This is lower than what we saw in FY24, and their target ranges between $1,025 to $1,050 per ton in FY26, but it may be lower if the company has more renewable power in their power mix as per management. Lastly, a 5% fall in the zinc cost of production has around 425 to 450 odd crores of benefits for the company's EBITDA, thereby helping its profitability. So Harsh, when you look at what the earnings and the profits of Hindustan Zinc matter on, these three factors are the ones that you need to watch out for.
Perfect. And you know, maybe to contextualize this a little bit more, we spoke about how Hindustan Zinc's EBITDA is roughly 15,000 crore. If all of these factors were to play out, you could likely see at the same volume level an EBITDA rise of 20% this year, which is FY25 versus FY26. So keep that in mind. Of course, this is subject to all of those factors playing out. 10% rise in commodity prices, 5% fall in zinc cost of production. And there are large downside risks to both of those playing out. So something to keep in mind. But if it were to play out, it could be a large positive as well. So something again to keep in mind as we analyze Hindustan Zinc. Let's talk about the factors that we'll look out and we'll try and assess as we break this company down. We look at income statement, balance sheet, cash flow, as well as return ratios. We'll also look at shareholding, street cred, street coverage, and valuations. So we'll look at those 8. Let me start off with the income statement. The revenue FY25 versus FY24 has gone up 18%, but the 3-year CAGR is just 6%. A lot of this in terms of top line, just for context, is determined by pricing and volume, both of those. So you will see plenty of variability with regard to the top line number, and let me try and demonstrate this. So FY23, the top line number was 34,000 crore rupees, FY24 was 29,000 crore rupees, and FY25 went back to 34,000 crore rupees, just for context as to how the variation is. In fact, even FY22 was around 29,500 crore rupees. So that variability largely driven by prices, by commodity prices, and very little by volumes, because the kind of inch up we've seen in volumes has been steady, but just maybe 2-3% inch up with regard to volumes. So not so much volume growth, more value growth is what you have to look for in the top line, and that's what we've seen. In terms of EBITDA as well, there's a clear flow through. So your EBITDA margins are quite healthy at around 56% odd, but they tend to fall as well. So we've seen that EBITDA margins can fall if there is pressure with regard to cost of production, and therefore you will see that variability even with regard to EBITDA margin, as you can see on your screen. So something to take care of. But again, over the year-over-year period, we've seen a solid EBITDA growth. From the 19,000 crore number, EBITDA has inched, or rather from the 15,000 odd crore number, it's inched up towards 19,000 crore. And another 3 to 3,500 crore could lead to an expansion of around 15% odd to that EBITDA number, if that were to translate, of course, the 3,500 crore that we spoke about in terms of lowering with regard to cost of production and increase in terms of commodity zinc prices globally. So you could see some of those variables happen. Now let me try and go a little more granular here, because on the 19,000 crore EBITDA, 2 costs majorly are incurred. One is an interest expense of roughly 1,000 odd crore, and second is a depreciation expense, which is a non-cash expense of around 3,500 crore.
That's how you land at a profit before tax, roughly, of around 13,500 crore. And thereafter, the profit after tax is roughly 10,300 odd crore, which has gone up well when you're looking at it on a YOY basis. It's also the increase in the interest expense and the increase in the depreciation, which has led, or rather increased the net profit a little bit more. So that's how it's played out, at least the profit after tax. Let's now look at the balance sheet. Now, in terms of the balance sheet as well, fairly healthy in terms of capitalization. But what we've seen is a sharp increase with regard to debt. So FY22, the debt was sub 3,000 crore. Even on a console level, including short-term liabilities, etc., was roughly around 10,000 odd crore. Now, with the standalone borrowing number is roughly 11,000 crore. And with other liabilities, it's coming.
But it's key to know that FY25, the company was full in 2 growth projects.
Yeah.
And they were investing heavily. And these will be commissioning in FY26, one in Q1, one in Q4. So that's where you're seeing an uptick in debt.
Perfect. So that's the reason why there's an uptick, but there's an uptick nonetheless. And therefore, you've seen interest cost also rise gradually over the last 2 to 3 years. So something to keep in mind. But when you're looking at the overall market capitalization of the company, and let's try and contextualize this a little bit more. So you've got 10,000 crore of debt, but the profit after tax of the company is 10,000 crore. So in that sense, it's well protected. Second is the EBITDA of the company is roughly 18 to 19,000 crore, 15,000 crore over the last maybe 3-4 years if I take the average, 18,900 odd crore if you're looking at the current year. And therefore, it's very, very well covered from an interest cost perspective. There's no concern there. So your balance sheet seems to be well protected. For a 2 lakh crore market cap company to have an 11,000 crore debt is okay. But when you're looking at the debt to equity, it's even Steven, it's almost 1:1. And therefore, slightly on the elevated side, the debt, but no concern per se, because of all of the factors that I highlighted. Profitability with regard to market capitalization, when we compare it, the debt looks fairly okay. Also, something to note that a lot of the capital of the company is legacy capital, something that has been invested over the last 20-25 years. And therefore, those costs and the costs today don't really align. And we'll see that in the return ratios. But that's how really the balance sheet is panning out. No real concern on with regard to the balance sheet. Now let's look at the cash flow, and that's where the position starts to change, and you'll see that improvement. The cash flow has roughly been 14 to 15,000 odd crore over the last 3 years, 13,500 crore in FY24, and now 15,000 crore, fairly steady, right? If you just take the 19,000 crore EBITDA, reduce the tax and maybe an element or two of interest, then that's where you're landing up in terms of cash flow. So fairly healthy in that sense, but there's no inch up. There's no growth which is visible in the cash flow at this point. So again, something to be kept in mind. We'll give this a neutral with regard to the cash flow, Mihika. But at least these are the 3 parameters that we've looked at. Mihika, you want to take us through return ratios?
Yeah. Interesting set of numbers here, because you've seen the return of equity of this company in FY25 be 72.6%, and it's been a steady growth from FY23, from 44% to 55% to 72%. But when you talk about return on equity, you need to know that they have certain assets that have been on their books for years, and they were capitalized a while back. Even if you look at the return on capital employed, which basically kind of helps you gauge how much profit or cash the company has been generating on the capital that it has been investing. So generally a higher ROCE does suggest that the company is better generating profits from the capital that it is infusing into the company. Return on capital employed has been growing from 39% in FY23 to 43% in FY24, and then to FY25 at 52%. Key to know that FY25 the company did have some growth projects going on, and the capitalization for those would come once they have been commissioned in this financial year, which is FY26. And then you have return on assets, which has seen a steady decline from 26% to 22% to 20%. However, it's key to note that Hindustan Zinc has been operating for a long time, and it has dated assets. So when the depreciation in certain fixed assets become older, the kind of efficiency you're going to get from certain assets, or even from certain of the mines that we've been investing, which is what we've been seeing in the company's silver mines, this tends to kind of steady slowly, and then it depends on the company when they want to get and explore new assets and when the returns from those newly coming in assets do come on the books. But it's still a thumbs up on us for the key ratios of the company, because they stand high and we've seen a good growth over the past few years. Next up, I also want to talk about the shareholding pattern. Now, they have a strong promoter holding. It's Vedanta, which is the promoter, and Hindustan Zinc is a subsidiary company of Vedanta. Vedanta has sold some stake over the years, 64% to 63% when you look at from March 23 to March 25, but it's a strong ownership nonetheless. You also have a stake of the government of India in something like an Hindustan Zinc, which has been steady in the 27 to 29% range. And it's actually domestic institutional interest that has grown from 2.95% at the end of FY23 to over 4% in FY25. So you've seen that traction coming in, and the traction is not only domestic, it is also from foreign institutional investors, like you can see on your screen, 0.8% as of the end of FY23, and now it stands over 1.4%. And then when you look at individual retail participation, it is fairly small when you compare to all the other shareholders, but you've seen that grow as well from 1.8% to 3.1% over the last 2 years. So it's a thumbs up on the shareholding pattern. And then I want to talk about the street cred. Now, in terms of the performance of the company in the past, the stock is up over 2% today, but in the past 1 month, it's down about 4%. If you look at even the year-to-date performance, it's fairly flat, but it's key to note that it's not been a steady downtick. When you look at the year-to-date performance, you've seen a volatile stock movement. Like, for example, the entire month of March, the stock was gaining, but it was after April 1st week that we saw the stock declining. And the one-year gains, it's 4%. If you count today's gain, the stock is up 7%. But yeah, it's key to note that the stock is down around 40% from its peak levels. It's, even its year range stood at around 800. Life high actually stood at around 800 odd levels. Currently, the stock is trading around 455. But if you look at a long-term period, the stock has given returns. Your 5-year period is at 154%. That means the stock has doubled, and this is despite it being 40% lower from its highest point. So we've given a neutral rating on the street credential for this counter. But Harsh, how is the street viewing the stock?
Well, yeah, so we have 5 buys, 3 sells, 7 holds, so fairly balanced in that sense. The return potential is extremely muted on this one. So clearly not a thumbs up, but we'll give it a neutral, flattish kind of return expectation. But again, a decent dividend yield. It gives around 7% in terms of dividends annually. And therefore, maybe something to look out for, that while the return potential may be muted, you might still make a decent amount in terms of dividend. And that also brings me to valuations, right? The current price to earnings is roughly 18.5 times. The 5-year average price to earnings has been around 23 times. So slightly cheaper on that note, despite the return potential being muted as per analyst expectations. Again, the dividend yield at around 7% is slightly on the lower side, given the fact that over the last few years, we've seen very, very heavy dividend distribution. Now, in terms of, I'm just talking from FY21 to FY24, in those 3 years, FY22, FY23, FY24, and FY21, the company has given a dividend of over 50,000 crores cumulatively. This is a 2 lakh crore market cap company, which has given out nearly 50,000 crore plus of dividend distribution.
But it's key to know that most of it is going to the promoter and the government of India.
So if that is the requirement of the promoter and of the government of India, then the shareholders are inadvertently beneficiaries of that Mihika. And therefore, my view is that the free cash flow which comes through will in any case flow through shareholders, whether you are whether you are Vedanta as the shareholder or Government of India.
And if you see, we were discussing earlier, this last 10 years, 6 years, the payout ratio was above 100%. So that's
Correct.
something to look at.
Absolutely. So, maybe that also to be kept in mind, that pretty much all of the EBITDA coming in is going out in dividend payments, which is something to keep in mind. In fact, the payout ratio is also extremely high, as Mihika obviously highlighted. So again, something to keep in mind. So we're going to give this a neutral as well in terms of valuations, just comparing it to 5-year averages, because there's not too many companies in the space, Mihika, which has a 75% market share in a commodity play like zinc, and therefore it's an interesting one. Let's take our final ratings and cumulatively let's stack it up. The income statement, no real growth. Balance sheet, fairly placed because debt is low in comparative terms. Otherwise, debt to equity is 1:1, if you remember. Cash flow also no growth there, and therefore we've given it a neutral, but very strong cash flow overall. Whatever is coming in the P&L is going straight into the cash flow statement and going out as dividend. Return ratios is a thumbs up because all of the legacy equity is now giving decent returns with regard to how it's playing out and will continue to do so. I'm not sure how much on incremental investment, Mihika, they're going to be making with regard to the return ratios. So something maybe we need to keep in mind. Shareholding is a thumbs up, street cred is neutral, street coverage is neutral, and valuations are neutral. That's how it stacks up. Let's go though, dip into that conversation with Arun Mishra, who's the CEO and whole-time director at Hindustan Zinc. Mihika spoke to him. Here's what he had to say about the company's play on pricing as well as capex guidance going forward, because those are going to be variables which could alter cash flow both from a dividend standpoint as well as from an EBITDA standpoint, and alter valuations as well. So listen in. Interesting conversation.
First of all, congratulations for a strong Q4. Let me start off this interview by asking your view on how the quarter went by.
No, the quarter, as we have demonstrated, we have got more than 1.2 million ton mined metal production capability. We have remained almost at a Q3 level of finished metal production, but year on year we have scored a good. Overall, if you look at cost, we have produced in the Q4 $994 per ton, one of the lowest ever cost that we could produce. Of course, it is for Q4 because of the high grade of metal and all that, we could get such a lovely cost. So overall in the year, we have almost close to our guidance as far as mined metal is concerned. We are almost same as on the cost guidance is concerned. Gives us a lot of satisfaction. And of course, nothing is more satisfying than generating a profit after tax of 10,353 crores, 33% increase year on year, which should make everyone happy.
Next, I want to focus on pricing. There's a lot of global uncertainty and domestic factors at play. How are you viewing pricing for zinc, lead and silver to be in the first half of FY26?
The first part is the uncertainty. It was more uncertain maybe a week back. Slowly is becoming certain that the tariff trade war does not benefit anyone. That realization is sinking in, and I am sure the whole thing will be resolved in 3 months to 6 months time. So hence my prediction is next 3 to 6 months, don't expect much movement in the price. It may remain range bound between $2,600 to $2,750 per ton. But once everything re-establishes, we know now the likely growth in GDP, because in many places GDP has shrunk. So we'll have to look at where all the GDP will expand, and that I can expect only increase in prices of Q4 of this fiscal. That means Jan to March of next year, not before that.
So with no significant change in pricing for the next 3 to 6 months, how is demand looking like? What cues have you been seeing so far in Q1 of FY26?
See, right now, the US consumes about 700 KT out of the 12 million tons of production globe does. In spite of tariffs, supposing the demand shrinks in US, but it cannot become zero, it remains as say 350, 400 KT. So all that remains is imbalance of 400 KT metal to be shipped from one geography, which is Canada, Western Europe, to rest of the world. So that's not going to upset the equation so much. So all producers will first make an attempt to satisfy their local market. And that will not allow them to increase the prices beyond the range. So everybody will stick to this number and try to push as much of sales in the nearby vicinity as possible. The supply chain is most uncertain now. So after 6 months or so, I guess the supply chain will be streamlined, and then you can expect slowly the prices to correct going into January to March of next year, maybe around $3,000 per ton.
Got it, sir. So amid all of this, do you expect muted realizations for your volumes in H1 of FY26?
See, we are a domestic driven company, and the prices in India will remain very stable. Domestic demand will remain to be high. We are the only producer, so we have to manage our cost even better, because at 27, 28 and 26.50 to 27, we need to ensure that we have a further cut of $50 to $75 per ton in our cost. That is visible to us how to do that, both in terms of increasing renewable power mix in our operations, also managing the grade of ore that we mine. We will do all the actions necessary and ensure that we remain in that cost leverage of about $1,000 to $1,052, so that we can keep getting this benefit.
I'm glad you mentioned your cost of production. FY25 saw zinc cost of production at a 4-year low. What's your target for FY26, and what is going to help you take it there?
No, we are still keeping it at 1,050 only, but if our renewable power mix increases sharply, we could achieve up to 15% in Q4, total 13% this year. Next year, we want to exit at 30%, but if we are able to bring this project faster, we will get a faster cut in cost. At the same time, if we can really strike a good amount of silver in our SK mine, of course, it will impact our earnings and profitability.
Sir, I also want to ask about silver. Your FY26 guidance shows a 3 to 5% uptick in mined as well as refined metal. But silver growth is rather muted. Can we expect an uptick in this segment soon?
There are two things. One, silver is a byproduct. It depends upon the grade of ore that we mine, as well as what is the production strategy. So this year we have taken entire 12 months. We will be running in zinc plus lead mode that will focus on maximizing metal production. And whatever silver we get as a result of it, we should be happy with that. And to that account, I won't call it a muted number, as a more realistic number.
So now coming to your growth projects, the 160 kiloton per annum roster is set to commission in Q1 of FY26. What kind of benefits will this be bringing into the company?
It will straightway add another 45 KT of production. So like last year we finished at 1,052, we should be doing 1.1 million ton metal next year.
And I also want to talk about the 510 kiloton per annum fertilizer plant that is set to commission by the end of FY26. Does the company, it mentions that DAP fertilizers will fetch the right margins. What kind of revenue contribution and margins can we expect?
We are not looking to fertilizer business to compete with zinc business, right? Fertilizer business is more from one, de-risking our operation, because we are handling huge amount of 98% strong concentrated sulfuric acid. And so we are always under the pressure of dispose it off and get it sold and all that. Of course, it brings us some money. As long as fertilizer brings us profit over and above what we used to make with acid, we are happy. This is more for catering to the farmers in Rajasthan and western part of Orissa, western part of India, where they are forced to buy imported DAP. If we can supply them DAP and then help them to grow their product well, and we get a fair margin, not an exceptional margin, we are happy with that. We are not really factoring in a large profit from fertilizer business.
So coming to CAPEX, what's the overall FY26 CAPEX guidance and how will it be allocated?
Absolutely. So what we have done, the currently guidance is very minimal, $225 to $50 million is minimal, which is tapering of the earlier growth projects, be it fertilizer, be it roaster, and some amount of replacement equipment, debottlenecking projects, things like that. But wait for a month or so, then we should make big announcement on our next growth plan, and that would be the real capex. So it is not in the guidance, but it will get added later on.
Lastly, sir, I know you can't give exact details on these new announcements coming in, but what areas will these growth projects be focusing on?
Another 1 million ton metal, similarly, so roughly about 0.8 million ton of additional zinc, 0.2 million ton of additional lead, another 600, 700 tons of silver. It's like doubling of Hindustan Zinc. So we should do that.
Okay, so that's an engaging conversation with the management of Hindustan Zinc. But for the moment, from Mihika, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
Hi, we're talking about Your Money Matters on NDTV Profit. My name is Alex Matthew. This show gets you actionable insight on everything personal finance related. We've got a great show lined up for you. First up, we'll talk about finding buried treasure. Not exactly, well, it's kind of like that, because we'll be talking about how you should react if you find physical share certificates that might have belonged to your parents or your grandparents, whether you can convert that into dematerialized shares, how to recover that. Second, we'll talk about what your grandparents used to do that you probably are not money-wise. And ultimately, there is a bit of a digital divide that is being created between the current generation and those that are super seniors right now. We'll also get you an update on how your taxation is treated if you are non-resident Indian, particularly if you are selling assets. And finally, we did a social media poll to ask you whether the RBI's move to allow minors above the age of 10 to have their own bank accounts is a good move, and the outcome of that poll is quite interesting. But my guest today in studio is Harshvardhan Rungta, who is the co-founder of Rungta Securities. Harsh, thanks so much for taking the time.
My pleasure, Alex, always to be on the show.
And happy birthday. Thanks so much for joining on your birthday.
Thank you so much. Thank you so much, Alex.
I feel special, and thank you so much. Let me ask you about the first thing, which is the idea of finding buried treasure. It's effectively that, because a share certificate means that you had these certificates much before dematerialization. What is the implication of that, first of all?
So you're right, Alex. I mean, post SEBI coming out with these guidelines that shares cannot be transferred in physical form. So earlier there was a provision that you had shares in the demat form, or you owned shares in physical form. If you wish to transfer, okay, the first thing that SEBI closed down was that you cannot sell your physical shares through the exchange. However, there was a provision that you can transfer shares between two individuals in the physical form. So if I owned physical shares, I am not allowed to sell on the exchange, because the exchange would not handle physical shares anymore. But if I wanted to transfer these shares to somebody, okay, one to one, I could do that. And the registrar would happily transfer the shares.
Okay.
Then came further guidelines saying that physical shares cannot be transferred at all. So now if I'm owning physical shares, I have to compulsorily get it dematted. Only then can I either sell them on the exchange or I can transfer to somebody else. So post that regulation coming out, we saw so many investors going and digging up their, the wardrobes and finding that there were physical shares lying with them. So the first step, of course, was to get them dematerialized. So that process is fairly simple. It's not as complicated. Where the complication arises is in case the owner of those shares, like as you mentioned, that if they were in your grandparents' name, if they were in some other family member's name who are deceased, then there is a complication which possibly needs to be handled. However, if you own shares in your own name and they are in physical certificate form, it's fairly simple to
So let's talk about that first before we get into how to manage shares that were owned by somebody who's no more. So if you're the owner of the shares, which I think we've heard a couple of our viewers have also reached out to say that we have these old share certificates, how do we demat it? What is the process?
So the first step, I mean, if you have shares of say XYZ company, you look at the name combination that is there on the share certificate. Okay, so if it's the first name is yours and second name is that of your wife or some other family member, ensure that you open a demat account in the same combination.
Okay.
So if you own shares in a joint name, do not just open a demat account only in your single name, because the shares will not get dematted.
Okay.
Okay, so you'll have to open a demat account in the same combination, and then you submit a demat request form. It's a DRF form. You submit that along with your share certificates.
To whom?
To your depository participant, where you opened your demat account. So to your DP.
Okay.
So you submit those forms to them along with the share certificate, which will be then processed.
A copy of the share certificate?
The original share certificates need to be given.
Okay.
So you will need to give that, and then the DP will forward that details to the company. The company will verify it, confirm it, and the shares will get credited in a demat account.
How much time does that normally take?
So about a 15-20 days is something, working days, is something that you should very comfortably assume that it's going to take. It could take sometimes even longer. Okay, now here also you could have one bit of complication, wherein your name is, suppose you're the first holder, and the second holder is deceased.
That's what it's going to come to, yeah.
Yeah. So in this case, you are the first holder, but the second holder is deceased. So you can then submit a death certificate for the second holder.
Okay.
But open a demat account in a single name, because now you cannot open the demat account in joint names, because the second holder is no more. And you submit documents of the deceased, as in the death certificate, etc., and then you can process for dematerialization. So there is a way.
But what if you're the second holder and the first holder is deceased, then what?
No, so then you have to basically claim, it's like the holder of the shares being deceased, and then you have to process the transmission in the form of whether there is a nomination or not.
Oh, so that's the second level. We'll come to that. We'll come to that. Before we do, now here's the interesting thing, right? Because there are so many of those legends, pretty much, right? If you say, oh, you bought 20 shares of Infosys in 1993,
correct,
it's now worth this much money.
Right.
Effectively, that's because there are bonus share issues, there's so many corporate actions, there's splits of shares that take place.
Correct.
So effectively, if we're talking about a share certificate, it existed maybe before the turn of the century, right?
Correct.
So in that time, how does all of that corporate action get accounted for?
Yes. So now again a scenario where there is a corporate action. So first we spoke about a scenario, plain simple, you had shares and you just went and dematerialized them. Now if you believe that there has been some corporate action, so which means there is bonus, split, there is merger, acquisitions, there could be so many other things. So the first thing is you have to get your entitlement from the company. So you write to the company, say I want the updated share quantity that I have. So this I'm talking about a scenario where you are the owner and you're alive, and you are processing your application. So that's fairly simple. Now you have to check whether the records with the company. So hypothetically you own shares and 10 years ago, and you've not given them your updated bank details, you've not given them your updated address. Now the company has announced dividends and they have sent it at some address which you were living in, say probably 10 years ago.
Right.
They send you dividend checks,
right,
okay, which you've not encashed.
Right.
Now if you've not done all this for 7 years, 7 consecutive years, that money, then that shares along with the dividend and all other corporate actions get transferred to the government under the Investor Education Protection Fund.
Right.
So that is the first step that you have to first check.
To recover that money.
No, that's another process altogether.
Oh, okay.
So there are two legs again to this.
Okay.
So say suppose 10 years ago, you have not updated details. The company tried to reach out to you, but because they did not have your correct address, they did not have your bank details, etc., the dividends did not get credited in your bank account.
Right.
So they were unclaimed for 7 years and beyond. So that money then has gone to the Investor Education Protection Fund of the government.
Right.
Then there is a recovery process to do from there. The other scenario is that you have been getting your dividend warrants and you've been cashing it.
Right.
So then it is still lying with the company. It has not gone anywhere. So now in this case, you will have to write to the company and take an updated share entitlement. So suppose your shares from 20 shares has become say 200 shares now. So first you get that entitlement, you write to the company that, okay, now this is my KYC updated. Okay, give me all the shares that are in my name now.
Is this before or after you dematerialize?
This is before.
Before you dematerialize.
Because how would you dematerialize the number of shares?
You need to have the exact value, correct.
So then you write to the company, get your entitlement. Now in this case, the company will not issue you fresh equity shares. So they'll not send you a share certificate.
Sure.
They'll send you a letter, okay, which confirms your entitlement, saying that, okay, this is the quantum of shares that you're owning after all corporate actions. Now this confirmation letter has to be submitted along with the DRF form, the demat request form, because now you don't have the updated share certificate, and the companies cannot issue any more.
Right.
So they'll give you a letter, confirmation letter.
Right.
That letter you attach, the original letter, you attach with your demat request form and you submit it to the deposit to your DP,
right,
who will then dematerialize it. So you don't need the fresh certificates of the correct amount.
Okay.
You just need that entitlement letter.
Okay.
That has to be done within 120 days
of the issue of that letter.
Issue of that letter. Say for example, you do not have a demat account, but you had some shares allotted to you. You write to the company, you get everything processed. The company says now you have 200 shares, and this is a joint holding. Suppose first holder is X and just say first holder is second holder is Y.
Yeah.
So they give you 120 days that you open a demat account also, right, in that combination. So you open a demat account and there you submit that.
And then it takes 15 days.
It takes 15-20 days, whatever it takes.
Yeah.
Now scenario one, wherein the owner is deceased.
Right.
So now you're making a claim on that share saying that, look, I am the legal heir of this person. These were the shares allotted to my grandfather. I found these share certificates, but the person is no more. So you apply to the company. Company says, look, hey, you didn't come to me for 7 years. As per the regulations, I've transferred the money to IEPF.
Sure.
So then that process starts with IEPF.
Okay.
Now you're within 7 years. Okay. So hypothetically, you're within 7 years, scenario 1. So the shares are lying with the company. The corporate action, everything's with the company. They still haven't transferred to the IEPF. So your process to claim those shares will be with the company alone.
Okay.
In this
but you have
case.
to prove to them that you're the legal heir.
Yes. So then one is, was there a nomination?
Affidavit then is required.
So affidavit, indemnity, all that will be required. So that is in case there is nomination.
Sure.
In case the value of those shares is nominal, so it's not say if it's say 2 lakhs or 5 lakhs, each company has different, it's essentially say 5 lakhs. If the value of those entitlement is 5 lakhs and below, then the company might just simply ask you to give an affidavit, indemnity, etc., NOCs from the other legal heirs, and they process it. In case the value of the shares is more than 5 lakhs, then there is a court involved in it, wherein the succession certificate or will probate.
Which court?
So you'll have to go to the local district high court, or no, sorry, not district, but the city high court.
Sure.
And you'll have to prove whether, how am I claiming this? Suppose a person goes to the company and the shares worth say 7 lakhs and says, give it to me.
You have to prove.
You have to prove. So there has to be a succession certificate, or there has to be a will which has to be probated. There has to be a process wherein the company needs to identify you to be the legal heir.
Yes.
So the courts get involved. If it's below 5 lakhs, then the companies would have their own system of things to do, wherein they would say, okay, give me an indemnity bond with an affidavit.
Is it difficult through the court proceedings and all of that?
So one is that as a legal heir, you're claiming yourself to be a legal heir of the deceased.
Sure.
You make an application to the court saying that I am the sole legal heir, or I am a legal heir along with somebody else. So all those people make an application to the court saying that we are the successors of this deceased.
Yes.
The court has this process of verification, and then they give you a succession certificate.
That can take time?
I think minimum 1.5 years you would wait.
Probates itself take time.
So will being probated or a succession certificate, if there is no dispute at all, then the normal process would take about 1.5 to 2 years.
Sure.
If there is a dispute, wherein you go and claim saying that I am the legal heir, and there is somebody else also makes an objection to that application, then it'll go on for decades, because there's going to be argument, there's going to be all of those things happening. So that will go on for decades. But if there is no dispute, the normal process in a court will take about 1.5 to 2 years. So it depends on the value, it depends on whether there is a nomination or not, and all of those processes, and then you'll be able to claim your shares.
And if there's no will, then?
So succession certificate comes into picture. So the legal heir will go and make an application to the court saying that we are the legal heirs. We are the successor of this particular person.
And then how do you recover from the IPF, which is the investor protection
so
fund?
that's where it gets very complicated, because now now in this situation 7 years have elapsed and there has been no communication. So the company says that we cannot identify who the shareholder is. So as per regulations, I'm transferring this the shares and the dividends, unclaimed dividends, everything. It goes to the government under the Investor Education Protection Fund. This falls under the MCA, the Ministry of Corporate Affairs. Okay, now, so if you now realize that, okay, I am the one who's entitled to these shares, then I have to first go to the IEPF website, first check whether the shares have gone there. So there is a search, there under the head services, you'll find a drop-down menu where you can go and search with your name, folio numbers, if you know the details. Otherwise, just write in your name and just try and search. So there, the shares will reflect, saying that
the name of the holder,
the name of the shareholder, the deceased shareholder in that context. So they will show what shares are lying with them. Now with this, now you have to go to the company, the issuing company, the share issuing company. You have to go to them, and then you have to process the entire set of documents to say, look, I am the person who's legally succeeding this person, so succession certificate or the affidavit, indemnity bonds, etc. You have to process that everything with the company. The company, if they're satisfied with all the documentation, will give you an entitlement certificate. So they'll tell you, okay, now fine, I've identified you to be the legal heir after completing, whether through court or otherwise. We've identified you to be the legal heir. Now take this entitlement certificate, go to IEPF and tell them, look, I'm entitled to these shares, give it back to me. So now you go back to the IEPF, there you fill in the form 5, you fill in all those details saying that I am the claimant of this particular share, please give it to me. Now, after you filled in the form 5, everything, you go back to the company, the nodal officer of the company, and then you submit all those documents again to them, and then they'll give you a letter. The
updated letter.
They'll verify it. They'll verify everything, and that verification will go back to IEPF to say, look, now everything is verified. This person is the claimant of these particular shares, so give it back to them. So then IEPF will process and give you the shares back. Now it sounds very simple.
No, it's not. No, it does not sound very simple, Harsh. Let me be very frank with you. Yeah.
Okay, so process-wise, there is a process laid down.
Sure.
There is a timeline laid down as well.
Yeah.
But that is all theoretical in nature. When you go into the details of the list of documents, you're back and forth communicating with two entities. One is a company, one is IPF.
Yeah.
It is going to take time. And then there are complications of what set of documents.
Sure.
And there are legal heirship. There could be more than one legal heirs. So a consent affidavit of the ones of the others. So it's a bit of a complicated case.
So it's complicated. Now, just to close out this conversation, I heard of a case, it was pointed out by somebody that said that somebody was offering to do this or to facilitate this, but was saying 30% of the value of the shares you need to give me. Is that weird? Is that too much?
So every time there is something required to be done, there will be somebody helping you to do that.
Sure.
Like even the smallest of things in India, when you have to get smallest of things done, there'll be somebody helping you to do that, right? So yes, there are norms, because there is a process. Now somebody has to do this documentation. Somebody has to be, so you're appointing somebody to represent you to do this work for you.
Sure.
Okay, so there's nothing to do with IPF, nothing to do with the company. You're on your personal level, appointing somebody else to help you with this documentation.
So it's a fee that you determine between the two of you.
So generally the market trend would be 10 to 15% to 30%, depending on the complication of the matter, depending on the value of the transaction, depending on several other factors. So it's about you finding somebody who can do it at a cheaper price for you. Somebody could be charging you a fixed fee, somebody could charge you 30% of the value, somebody could charge you 5% of the value. So you just have to find somebody who can help you do that. And there are a whole set of people who made this full-time business.
Okay.
So, there are few people who are doing this as a full-time basis, as a proper business.
In your opinion, what is the outside limit of time that you should expect if it is not a very complicated case, if it's a slightly complicated?
Let me put it like this, the minimum time that you should take in mind.
A couple of years?
It's at least 1 year, if everything goes smoothly.
Okay.
If not, it can drag on for as much.
So I'm glad that dematerialization has happened. And
so I think, I always say this in all forums. SEBI has been one of the finest regulators. They have been very proactive with anything that the market requires. They very quickly come out with regulations. Let me point out one thing that they've done. So there was a Carvi case where shares were transferred off market in their private account and something like that. That thing had come out.
Yeah.
SEBI instantly came out with a regulation saying that there has to be a two-factor authentication. So anytime the shares are getting transferred off market, there has to be a OTP-based approval from the shareholder, from the account holder. So I think the rise of the capital market has been because of the efficiency of SEBI. So having stopped physical share transactions, having stopped transfer of physical shares, I think they were all very positive in having regulatory framework in the best possible manner.
So speaking of physical transactions and physical transfer of shares, it brought me to the second topic that I wanted to discuss with you, which I think is very interesting because I was thinking about it. My grandfather is close to 90 years old, 89 years old. And I think a lot of the things that he does and did, we don't even contemplate now, Harsh. And we're kind of in that middle generation that has seen that transition. I think a lot of kids that are starting to earn these days are saying, passbook? What passbook?
Absolutely.
So what are those things that maybe your parents or my grandparents, our grandparents did that we will never do?
I could talk about something as recent as what we've also done in my office. We had a fax machine. We don't even see
you still have a fax machine?
No, I don't. We had a separate number allocated for a fax machine, right? Because they sent a physical letter. We had to fax it to somebody else. Now it's scan and email. Is that kind of thing. So I think using a fax machine with a thermal paper and then all those things.
Yeah.
That has gone out of the picture. Landlines, I think, are now going out of picture. I don't think people are going to use. Now, coming to passbook update, yes, I have done passbook updates on my own accounts, which I don't see a reason to do things now.
And you'd get a horrible look from the teller to say, you spent too long, you've not updated your passbook. There's a fine now, you have to pay the fine.
And the second part is that if there's no updation and you landed up, that's even worse.
You wouldn't want to be standing in that line, your ears would be burning. Right. But yeah, so there's passbook, there's checks, which people don't use very much.
I think, the usage of check has come down, and I think it's only going to just go down even further. I'm afraid the banks will start charging you exorbitant amounts for issuing a check to somebody. I think because if the checks come in for clearing, it's too much of work for them now. So I think yes, things have moved very quickly, and thanks to this digitalization, that we are very, very efficient in our money transfer. You're buying groceries, and now it's like a Paytm or something like that.
So the point that I wanted to raise with you is, of course, we are working towards, and the system is working towards efficiency and making everything faster. But are we leaving a generation behind is the question, and it's not really something that I guess we can come to a conclusion with right now. I guess there are still people that facilitate those transactions, right? You'll have old clients of yours that will insist on sitting down with you and doing things that somebody else would want to do on a phone.
Absolutely right. So, I mean, and we need to be mindful of their requirements also. So, talk about people who are 60 plus or 70 plus. I mean, 60 plus are also pretty okay now with the digitalization, but 70 plus most certainly are not comfortable. So, we do be very respectful of their requirements, and I think banks need to have an infrastructure set for them.
Yeah.
Invariably, walk into a bank branch today, you'll have to search for somebody helping with banking transactions. Because there are a whole lot of people wanting to sell ULIPs and mutual funds and whatnot to you. But if you have a banking requirement in a bank, you possibly may not find many people helping you with that. So there has to be an infrastructure very sensitive to senior citizens, because they're not conversant with online things.
To that end, and we've had conversations on this program as well with representatives of the cyber cell in Mumbai, where you have more instances of people falling prey, particularly of that generation, falling prey to scams. If you have people listening, I'm sure you have people listening about their parents and they're concerned about that, what is your opinion on how they should safeguard them?
So yes, I mean, the older generation who are not savvy, technologically savvy, digital savvy, I think they need support. And somewhere you will need to be involved with them. As far as possible, I would say, if you're living together, try and avoid any digital logins on their mobile. Yeah. Okay, because they're vulnerable. They are sensitive. I mean, they are susceptible to somebody threatening them online and saying that, okay, I've sent you a link, which is, there is one scam where they say that I've mistakenly sent money to you. Yeah. So give it back to me.
Yes.
So these things they are very sensitive about. I mean, they could simply they may land up doing that. So if possible, avoid any digital transactions or logins on their phones. That's the first step, because if they do not have those logins, there's nothing that you can do. But if you're going to not give them that facility, then you might as well be around for them.
Yes.
Right? You can't say that I'm not giving you the facility and at the same time I'm not around.
Yeah.
So please spend some time with them. They're very vulnerable in that times. I mean, emotionally and financially for that context. So be around with them. Avoid any. So for example, I don't have GPay on my phone. Quite honestly, I mean, even I don't have GPay just because I'm not too comfortable with it. So, but if I need to do GPay or something, then I look for somebody to help me do that. The question is, if you're not comfortable with something, you don't have to jump the bandwagon. Sometimes convenience has a cost to it, and that cost could be in the form of making mistakes online, right? So I think you just have to be a little sensitive to the requirements. You have to have an infrastructure which allows them to operate in the way that they are comfortable. If they want cash, please let them give and take cash. If they want to issue checks, please respect it, take the check, give the check. So I think organizations also have to be banks have to be a little sensitive. Because there are a very small number of people anyways.
Yeah.
I'm more concerned about people who are living alone.
Yeah.
Of 70 plus living alone. How do they manage their things? So somebody has to be, helping them, and the closest that they can ask or trust anybody would be their own bank.
Yeah.
Right. So I think that's the place where managers would need to be sensitive, would need to allocate some resources, like a person helping them.
Which is why, if you like it or not, actually, the old PSU culture is actually something that benefits a lot of people.
Yes, so
because those relationships last years. Right?
Exactly. So State Bank of India, for that matter, has been known for a senior citizens get-together place, where everybody gets together over there for passbook update and all those things. So I know many senior citizens who say nothing to do, let's go to the bank, passbook update karenge, we'll sit there, chat along with people, with others who come there. So I think that ecosystem is fine, but so that's the banking system will need to have some mind onto this category of people. Help them with physical KYCs, help them with those things, which I think is been missed out, because that segment of people do not contribute too much business. So allocating resources for them is not profitable for these banks. But they would need to have somebody, one person at least in the bank, having the patience to deal with them, because they can be very unreasonable in their questions also. And their demands, but which is fine. I mean, I think we should all take it with a pinch of salt.
No doubt.
And support them as far as possible.
Yeah, and it's been a very insightful conversation as always. Thank you so much for joining us,
My pleasure, Tom.
Now, I do want to talk to you about one more topic, which is the tax treatment on non-resident Indians. And there are a few question marks about this, especially if you're selling shares or mutual fund units. And my colleague, Mahima Vachajani, has this report.
Right, so in terms of NRI taxation, let's first understand as to who an NRI is. A person who is staying in India for less than 183 days will be considered as an NRI, or a person who has stayed in India for less than 60 days or less than 365 or more days in the last 4 previous years. Now, in terms of how these capital gain taxes arise, any capital gain on transfer of a capital asset situated in India will be taxable, plus any income that the person makes from selling or buying the property which is situated in India will be taxable. Of course, capital gains on investments like shares, mutual funds, securities will also be taxable in India. In terms of debt funds, well, I've divided the entire capital gain tax into 3 different categories. The first one is debt funds and other capital assets, where long-term capital gain is considered where the security is held for more than 24 months. Here, the tax rate will be 12.5% if the amount exceeds 1.25 lakh. For short-term capital gain, of course, if the security is held for less than 24 months, the overall income will be integrated in the individual's taxable income and will be taxed at the slab rate. For capital gain tax on shares as well as equity mutual funds, long-term capital gain will arise if the security is held for more than 12 months. Tax rate again will be at 12.5% if the overall tax exceeds around 1.25 lakh rupees. And a 10% TDS is also applicable in this case. In terms of short-term capital gain, it will be considered as a short-term capital asset if it is held for less than 12 months. And here the short-term capital gain is taxed at 20% plus a TDS of 20%. Lastly, in terms of sale of property, in terms of long-term capital gain, a flat 12.5% rate will be applicable without indexation. But for immovable properties before 23rd of July 2024, taxpayers have an option either to pay tax at 12.5% without indexation or at 20% with indexation. In terms of short-term capital gain tax with respect to where properties are concerned, it depends on security transaction tax. If STT isn't applicable, tax is applicable at normal rates. But if security transaction tax is applicable, it will be paid at a rate of 20%. Now, how can an NRI save long-term capital gain tax arising on his particular sale of property or income arising like that? In terms of this, there are 3 different sections available in the income tax. Section 54 applies to long-term capital gain for NRI from sale of residential property. They can reinvest the overall long-term capital gain amount in another residential property in 3 years or construct a new property use amount of that LTCG overall. The next is Section 54 EC, which applies to long-term capital gain from sale of land or building or both. Here they can invest in specified tax saving bonds such as REC or NHI bonds within 6 months of that tax long-term capital gain tax arising. The last one is Section 54F, which applies to long-term capital gain from the sale of any asset other than residential property. Here you can reinvest the overall long-term capital gain amount in another residential property within 2 years or build a property in the next 3 years. So this is everything that one needs to know where NRI, long-term and short-term capital gain tax is concerned.
Alright, that should give you some clarity if you are a non-resident Indian. Now, at the end of this program, I want to draw your attention to a poll that we ran on social media. It turns out that the Reserve Bank of India is contemplating allowing banks to have minors above the age of 10 have their own accounts, not with supervision. And we asked you what you think about that. And nearly 60% of you thought that it's a good idea. 26% thought that it was a bad idea though. And 15% of you thought it was an unusual idea. Now, by the way, we're going to talk about how children should be taught how to manage money on MoneyWise later in this week. Do tune in for that. That brings us to the end of this edition of Your Money Matters. Thanks so much for watching. This is NDTV Profit.
stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The
Hello everyone, and Mr. N.K. Singh is a veteran Indian policymaker and the chairman of the 15th Finance Commission. He's seen as one of the most foremost voices when it comes to policy formulation in India, and hence for all the youngsters out there, you must listen to this conversation because it will give you insights that you would have never got before. Mr. Singh, Dr. Singh, thank you so much for your time here on NDTV. Sir, the nature of this conclave and the title is Emerging Businesses. And in the emerging businesses domain, MSMEs, that is the micro, small and medium enterprises, they form 90% of the businesses and employ nearly 3/4 of workers in emerging markets and developing economies. And hence creating jobs and better jobs depend on them. The recent World Bank report, as we were discussing over the weekend, sir, highlights the gap challenges. How do you think we as a nation and you as a policy maker who gives vision and options to the government of India can achieve the goals that have been set by the government, and also how can we harness the challenges being highlighted by that report?
Well, thank you very much, Maria. It's always a great pleasure to be at the functions of NDTV. And you have, of course, been one of the great anchors which followed your transit from one vantage point to another. Your question today has 3 dimensions. You have sought to focus on the MSME. Now, you know, it's true that I pointed out to you just 4 days ago that the annual spring meeting of the IMF and the World Bank, which has just concluded day before yesterday, each spring meeting has an annual document. The last year's spring meeting had the document seeking a new roadmap for the World Bank and the IMF. Last year's document was shared poverty, shared prosperity in a livable planet. This year, the document is about jobs, and in the jobs, the World Bank group has assigned an important place to the role of the MSME. Now that in itself signifies the high priority. Not only that the jobs are necessary, because we realize that this is one of the very serious global problems. The issue of how to harness technology productively with creation of value-added jobs. This is a challenge which the society in general is facing all over, harnessing technology and gainful employment. In this context, the World Bank report has suggested a number of steps and the important role that the MSME can play. In India, which you correctly pointed out, 30% of India's GDP comes from the MSME. And out of the MSMEs category, particularly the micro sector constitutes 90% of this category of MSMEs. The problems that I can see, which that report has brought out in encapsulating in a sentence, is one, on the access to credit, assured credit. Right now it looks as though something like 25 lakh crores is still the remaining credit gap. The formalization of the sector itself is far from complete, and only 14% of the MSME sector has been formalized. The last report, which you know, was done by a colleague of mine, UK Sinha, who did that report to say that a very small percentage forms part of the formal sector. So access, assured access, and bridging the credit gap is one very big overarching issue. The second very big overarching issue is how to enhance its ability to upgrade its productivity and upgrade its skill. And skill and productivity upgradation remains a challenge. Third, of course, is access to marketing and growing technology changes. And the last, of course, is its important contribution to the GDP of the country as a whole and enhance its contribution to India's export effort. All these are quite symmetric to India's own vision of 2047, and in that vision, the integral role of the MSME remains a very, very important critical component.
Dr. Singh, since we are talking about the World Bank report, you have worked and led multiple financial institutions world over. In terms of best practices around the world, what can we learn from other countries?
It's a nice question, because I could turn the question, Maria, the other way around. That as I looked at the typology of progress and the overall architecture of the progress done by other countries, not only what we can learn, but there's an enormous amount that others can learn from us. We have indeed, on every important parameter, take the big parameter of what is talked about, the great Kenyan example, or the South African example, or the Brazilian example, or the Vietnamese example. What do they relate to? They relate to three important factors. They relate, if you sum it up, one is enhancing access to formal credit. I just mentioned to you that that's work in progress. We have done a great deal. The South African example is about vocational training. We have skill development programs. It can be, of course, significantly improved, enhanced, and be aligned to technology. There are these examples of Vietnam on developing labor-intensive export hubs. We are doing that in some measure. That, of course, needs to be greatly enhanced. I mean, we have begun the obvious ones where the labor-intensive components are critical, namely on textiles, on toys, and leather, and so on. And that's one example. We have the use of our digital stack is something which the world has been taken aback. In fact, we have as much to learn, and we must always recognize that we have a lot to learn, but the world recognizes that they have a lot to learn from our own experience, which has been a very positive one.
Dr. Singh, since you spoke about certain countries, my next question would be around these countries and what about developed nations? What are they learning from India? Many would say that our digital payment infrastructure is everybody's envy. Now they look towards us and they keep wondering how did India achieve so much, particularly to do with UPI and the digital payment. And it is all a phenomena in the last 10 years. It is of the Modi era.
Well, certainly I think that the world is quite a bit in awe of our digital stack. They recognize that in terms of the matrix of government, that the way in which, for instance, and this is repeated, Maria, very frequently, India was able to deal with the pandemic is quoted as a global example in terms of the way in which food supplies, vaccines, healthcare, best examples. We made the fullest use of technology. That suggests to the world that India is more than ready to be in a position to be an important shaper of improved governance models, because the use of digital technology is an improvement on the governance variables which we have, and far from government coming in way, I think that we have had a lot to learn. Now, let me tell you, where I feel we still have to learn a great deal, as two factors, Maria, has really troubled me. One is that the complexities of our compliance regulations, far too many compliances, far too many rules, far too many draconian rules. I think this is recognized when the Prime Minister has announced some time ago that he is seriously thinking of a deregulation commission. The Finance Minister recognized this in the light of the economic survey that we need to get out of the way. Get out of the way is, if you look at it, the number of compliances beginning from the third tier of government to working up to state level to multiplicity of organizations and entities at the state level, and then of course the central government, the various departments of the central government. The burden of compliance is quite high. We need to certainly give that a priority. The fact that the Finance Minister mentioned this, and there is already a group working on how to improve and bring down the total number of compliances, led by the Cabinet Secretary, is a positive thing. But the Prime Minister has gone a step further in mentioning about not a compliance, but a deregulatory commission, suggests that India over the period has become mature enough, and many of these rules have become handicaps. Rules are necessary because the rules are necessary to ensure that appropriate conduct and compliance with the broad framework has been done. But when the rules do not serve the purpose, but serves a purpose which is entirely different, has become a handicap to creativity, to growth, to productivity, to employment, and indeed to the growth strategy. I end by saying that, these rules are hurting India's investment climate in general. Take, for instance, two areas on the rules. I've often felt that the entire legal rubric and the entire legal framework has remained substantially unreformed. The world recognizes that India has one of the most transparent legal systems, but they often joke with me that that's true, Mr. Singh, but when do we see the end of the interlocutory processes, hopefully they believe, in the lifetime of this project. So I think that India's legal complexities is one area which requires a fundamental change and a restructuring of the entire legal architecture to serve the broader objective of societal necessity in terms of conformity to law and order, to security, to the basic principles of the rule of law. That's not questioned. What is questioned is the cumbersome systems which have got accumulated, which have debted against speedy dispersal of a just and free system about which we are rightly proud of and which the world upholds.
And now I'm coming to a question which is very close to my heart, and this is with regards to women-led enterprises, women-led governance. There's the statistics which has, of course, been shared by the World Bank report that women-led enterprises represent 23% of all MSMEs, but they account for 32% of the financing gap. When informal enterprises are included, the finance gap actually rises to almost $8 trillion. And this is linked to women enterprises, women-led development. Besides, we have often seen women as the beneficiary of the government schemes and policies, and particularly coming from the state where both of us come from, in Bihar, women have always been seen as a captive vote bank because of them being beneficiaries of the state. How do you mainstream gender in MSMEs?
Well, I think that it's a very important question. Certainly the World Bank report which you point out has highlighted that the financing gap is disproportionately higher in the case of women-led enterprises than in respect of the other categories. And I think that requires to be redressed in very special ways. First and foremost, of course, we know that there is budgeting, gender budgeting for government initiative needs to be intensified, needs to be closely monitored. The credit availability given to women entrepreneurs, and we did talk about the fact that out of the great number of MSMEs which exist, 90% of them are micro ones. A very small percentage of it is really in the small and then in the medium ones. So I think we especially need to refocus programs for closing the gender gap in terms of the availability of funding, and to at least let us take upon ourselves the target that in the next 12 months or so, in the next update that the World Bank does to this report on employment, the issues of the gap, financing gap for the women-led entrepreneurs would have been substantially closed and come in at footing with the normal amount of finances available for the rest of the sector. The second is that they require special help in technology, skill upgradation, and becoming part of the value-added chain, marketing issues, and becoming part of the value-added chain in this country. I'm not even talking about global value-added chain, but becoming integral to the value-added chain for India's supply factors would be a very, very important thing. So I think we need to harness this great untapped potential. Just as we look at Viksit Bharat, we expect that instead of 30% coming from the MSME, it should be 40%. That as far as exports are concerned, a very substantial increase of export capability from the MSME sector. We look equally to the women entrepreneurs playing a more important role in this entire process as the MSME sector become integral to India's quest for a Viksit Bharat.
Since we are talking about Viksit Bharat, let's look at India's quest for becoming the third largest economy and a developed country. What role do you think MSMEs can play in a broader context?
So for India to get to by 2047, we need to sustain at least about 8% GDP growth in real terms which hoping inflation to be around the inflation band, 11 to 12% sustained growth for the next several decades to bridge the income gap. We need, first of all, policies which will enable this growth rate to be sustained, reforms to be sustained, which means continued reforms of the factors of production, land, labor, capital, significant improvement in the infrastructure, a significant improvement in India's export capability to sustain really the current account deficits to be more or less in the same region, to have the continued symmetry on the macro policies between monetary and fiscal policies. These are, of course, to be taken for granted. Now, your question was, what can the MSME sector, the important role they can play? I did mention that if today they constitute 30%, I think that the targets which have been laid down by experts and expert committee reports is to take this 30% to 40% coming from the MSME sector for India to become a developed economy for 2047. Equally, in terms of the women empowerment, since that was a subject we talked of earlier, taking it significantly upwards from the current about 30% or so to about 45-50% coming from women entrepreneurs, since we are talking in terms of micro and medium enterprises where it's very easily possible. Considering the skills in the labor-intensive sector, some of which are also export sector, which I have mentioned, women can have an increasingly important role to play. So the role of MSME sector in India becoming a developed economy is not only a supporting productivity role in terms of improving the capital output ratio, total factor productivity, but becoming really a higher proportion of the GDP coming from this sector, with an increasingly higher proportion of women making an important role to play. Women's and the full empowerment of women is one of our secret weapon, apart from the harnessing of what technological capabilities in terms of leapfrogging technology and blending it with the availability of higher value-added employment. And technology and women empowerment would be two of our very important instruments for enabling us to reach what is our legitimate quest of making India a developed economy by 2047.
So put women particularly up right there at the center of the development story of India. Thank you so much. And of course, along with technology. Dr. Singh, always a pleasure speaking to you. Thank you so much for this fascinating conversation. Thank you, sir.
We're joined this morning by a very special guest, Lawrence Belanco of CLSA. Lawrence, thanks so much for taking the time. Unprecedented uncertainty on the global stage. At this juncture, what we're focused on, we're most interested in is your latest note in which you're saying that there's a return of TINA and that India is looking more attractive than it has in the past. What are you seeing that is encouraging, and why are you saying there's a return of TINA?
Yes, I mean, if I look at the India price action in particular, there's been a few improvements, not just the past week, but if we go back just over a month ago, we had our first breadth thrust signal for the Nifty. And what that means is we look at the percentage of stocks setting new 4-week highs. And when we get above the 55% threshold, that triggers that breadth thrust signal. So we actually had that develop through March. And with the tariff sort of headlines that you had at the start of April, we obviously saw a pullback in the Nifty. But interestingly, that Nifty pullback just retests the March lows to give us this double bottom pattern. And then since then, we've broken above the 200-day as well as the March highs to confirm this basing process for the Nifty index. And that breakout gives us an upside target of 26,000. So that's in a nutshell what we're looking at from the Nifty. But it's not only India that we've seen breakout recently. We look at Brazilian small caps, we look at Brazil itself, as well as Mexico, and we use the ETFs to put it in dollar terms. We've also seen base breakouts in those markets too. So selectively, we started to see breakouts in other emerging markets.
Right. This is Hiral on this side. When you're talking about Nifty moving above the 26,000 mark, on a technical basis, 26,333 is what we are watching out for. Would it be right to say that, number one, the worst is over for India? And two, if you have to compare India to China, where would you put your bets on? Where is it? I mean, which market is attracting investors currently? Because one, we're talking about valuations. Secondly, the impact in terms of the US-China trade war as well. So a lot of external factors for both these markets. So one, factors that would lead India beyond 26,000. And secondly, India versus China.
Yeah, so from a longer term side, we've had a long-term upside target for the Nifty of over 37,000. So we think from a secular bull trend side that the Indian market, despite the pullback and correction that you had from the September 2024 highs, remained intact. And, the double bottom pattern, the breadth thrust signal that we've seen through March and April does give us evidence that the decline that you've had of the September 24 high has bottomed, and we should look for continually rating back towards the highs that you made in September and likely higher. From a longer term aspect, we think we trade, through that high and ultimately by the end of this decade, that upside target of 37,000 plus is still our longer term profile. Now, the India-China relationship, if we go back 2 years, was very much a cyclical trading range that we had these periods of India outperforming China. But what we've seen over the past 3 years is actually India relative to China ratio broke out of that 10-year secular trading range pattern. So again, just with that longer-term structural breakouts and uptrend in the Nifty to 37,000, while we will see India on occasions underperform China, from a longer-term basis into the end of this decade, we think ultimately India outperforms China in relative terms at least, with periods of China coming back with rebounds that we obviously saw late last year as India pulled back in China rally. There will be bouts of that, but just from a longer-term angle, the 37,000 plus upside target for the Nifty, as well as the more cyclical range that we've seen in China, should see India outperform.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two
सबसे पहले तो मैं आपका धन्यवाद कर दूं मुख्यमंत्री जी, आपने समय निकाला आपके व्यस्त शेड्यूल से एनडीटीवी के इस कार्यक्रम में आने के लिए। थैंक यू वेरी मच।
थैंक यू।
और उसके बाद मैं ये आपसे पूछूं कि अभी आप एक कार्यक्रम से आ रही हैं जिसमें पहली बार फॉर द फर्स्ट टाइम इन द हिस्ट्री ऑफ दिस सिटी, एटलीस्ट इन द हिस्ट्री ऑफ नेशनल कैपिटल, 70 साल के ऊपर के तमाम लोगों को एक हेल्थ कार्ड, आयुष्मान भारत का हेल्थ कार्ड हमने रोल आउट किया है। क्या आइडिया है इस बुनियादी हेल्थ सुविधा को देने के पीछे आपका नेशनल कैपिटल के सिटीजन्स के लिए?
मैं एक्चुअली बताऊं, सच में जो 70+ एज ग्रुप के हमारे रेजिडेंट हैं देश के, उनको ये हेल्थ एश्योरेंस मिलना सरकार की ओर से कि आप निश्चिंत हो जाइए, आपकी किसी तकलीफ़ में, आपकी किसी बीमारी की स्थिति में सरकार विल टेक केयर ऑफ़ यू, आपकी पूरा ध्यान रखेगी, आपका इलाज कराएगी, आपकी टेस्टिंग्स, आपका हर वो मेडिकल एक्सपेंडिचर जो आपको अपने बूते पे करना कई बार डिफ़िकल्ट हो जाता है, कई बार आपके बच्चे भी उतना सपोर्ट नहीं कर पाते, कई बार सिचुएशंस बड़ी ऑड होती है। ऐसे में सरकार जो अपने सीनियर सिटीजन्स की केयर टेकिंग कर रही है, ये ना केवल दिल्ली के लिए, मैं बताऊं पूरे विश्व में आप कोई देश उठा के देख लीजिए, ऐसी योजना आपको मिलेगी नहीं। ये पूरे वर्ल्ड के लिए एक विजनरी योजना है जिसमें आप अपने देश के, अपने शहर के 70 साल से ऊपर के बुज़ुर्गों का इलाज करा रहे हैं डिस्पाइट ऑफ देयर इनकम स्टेटस। उनका धर्म, जाति, स्टेटस कुछ भी इसमें काउंट नहीं करता। आपके पास उस शहर का आधार कार्ड हो, आप वहाँ के लोकल रेजिडेंट है, दैट इज़ एनफ। आप सोचिए कितनी खूबसूरती है इस योजना में कि एक अमीर आदमी जो अपने सब कुछ उसके पास होगा उसके लिए भी ये योजना है, और एक गरीब रेडी पटरी वाला व्यक्ति भी, उसके लिए भी वो सेम योजना है। और सही बताऊं, अमेरिका हो या कोई और बड़ा देश हो, अगर उन्होंने कोई हेल्थ का प्रोविज़न अपने सिटीजन्स के लिए क्रिएट किया होगा तो केवल उसका क्राइटेरिया है आप टैक्स पेई हैं कि नहीं है। अगर आप टैक्स पेई हैं तो गवर्नमेंट विल गिव यू हेल्थ असिस्टेंस। पर ये जो योजना है, वेदर यू आर टैक्स पेयर और नॉट, कुछ भी आपका स्टेटस है, आपको ये योजना समान रूप में हर एक बुज़ुर्ग को मिल रही है। मैं सच में थैंक्स करना चाहूँगी नरेंद्र मोदी जी का, देश के प्रधानमंत्री जी का, जिनकी वजह से आज दिल्ली के सब बुज़ुर्गों को, उनको एक बहुत ही खूबसूरत लाभ मिला है, योजना मिली है और जीने का एक नया अधिकार मिला है।
और मैं ये इसी बात पे आने वाला था कि प्रधानमंत्री का पर्सनल फोकस इस योजना को लेके बहुत रहा है। पर्सनली उन्होंने खुद पुश किया है 70+ की आरोग्य स्कीम को देश भर के लिए, और काफ़ी दिनों से ये रुकी हुई थी नेशनल कैपिटल में। और अब आपको लगता है कि आप इसको पूरा स्प्रेड दे पाएंगी? वो लोग खासकर जिनको कि इस तरह की चीज़ों की जानकारी नहीं पहुंच पाती है, जो लोगों को जानकारी हो जाती है वो तो जानकारी से सुविधा का फ़ायदा उठा लेते हैं, उनको भी आपकी सरकार कोशिश करेगी कि क्या उनको पूरी इन्फॉर्मेशन दे और वो इसका फ़ायदा ले सके?
मैं प्रॉमिस करती हूँ दिल्ली के हर एक 70 साल से ऊपर के बुज़ुर्ग को कि आप हम तक पहुँचे या ना पहुँचे, सरकार आप तक पहुँचेगी और एक एक बुज़ुर्ग का रजिस्ट्रेशन करा के उसको इस हेल्थ योजना का पूरा लाभ मिलेगा।
So Chief Minister, that you promised from the NDTV's forum, thank you very much. एक और बात बताइए मुख्यमंत्री जी, आप यू आर ए यंग चीफ मिनिस्टर, बीजेपी के शासन में पहली बार एक महिला मुख्यमंत्री बनी हैं दिल्ली में, और दिल्ली में मुख्यमंत्री बनने के पिछले 10 साल का एक्सपीरियंस जो था उससे कहीं ना कहीं लोगों को एक बड़ी डिसअपॉइंटमेंट भी हुई थी कुछ इश्यूज़ को लेकर के। आपके अपने मन में, क्योंकि आप दिल्ली के रेजिडेंट हैं, आपने स्टूडेंट पॉलिटिक्स करी है यहाँ पे, आपके अपने मन में एक नेशनल कैपिटल की क्या छवि है, कैसे चेंज देखना चाहती हैं आप इसमें?
मुझे कई बार ये प्रश्न पूछा जाता है कि आप दिल्ली को कैसा बनाना चाहती हैं, लंदन बनाना चाहती हैं, पेरिस बनाना चाहती हैं, क्या बनाना चाहती हैं? तो मेरा एक ही जवाब होता है कि मैं दिल्ली को दिल्ली बनाना चाहती हूँ। दिल्ली जो देश की राजधानी है, दिल्ली जिसका एक अपना इतिहास गौरव है, दिल्ली का अपना एक कल्चर है, दिल्ली एक मिनी इंडिया है। पूरे देश के हर राज्य के लोग यहाँ आकर के बसे हैं, उनके लिए ये उनका होम टाउन है। और ऐसे में दिल्ली का इंफ्रास्ट्रक्चर, दिल्ली का हेल्थ, दिल्ली का एजुकेशन, दिल्ली हर मायने में दिल्ली अप टू डेट होनी चाहिए। पूरे देश में सबसे टेक्नोलॉजिकली अपडेटेड शहर होना चाहिए। पूरे विश्व में इसका एक सम्मान होना चाहिए। पिछली सरकारों के राज में आप देखेंगे एक नेगेटिव पॉलिटिक्स, एक नेगेटिव इमेज दिल्ली शहर की बिल्डअप हुई, और आज भी कहीं ना कहीं पॉल्यूशन के लेवल पे कहें, यमुना जी की सफाई के लिए कहें, दिल्ली का जब नाम पूरे वर्ल्ड फ्रेम में आता है तो हम देखेंगे कि सबसे ज़्यादा एयर पॉल्यूशन कहाँ है, दिल्ली में है जी। सबसे ज़्यादा प्रॉब्लम कहाँ है, दिल्ली में है जी। तो मैं ये सोचती हूँ कि दिल्ली की इमेज बिल्डिंग होनी चाहिए। दिल्ली में ये जो नेगेटिव एक्सपेक्ट है ये ख़त्म होना चाहिए। दिल्ली के लोगों को वो मिलना चाहिए जो दिल्ली का अधिकार है, और दिल्ली में रहने वाले लोगों का दिल लगना चाहिए यहाँ, ऐसा मेरा सोचना है।
मुख्यमंत्री जी, दिल्ली की छवि बदलनी चाहिए, और आपने पोल्यूशन और यमुना की क्लीनिंग के दो बड़ी चीज़ों की बात करी। दोनों ही मुद्दे आप भी जानती हैं, क्योंकि आप जैसे मैंने कहा कि स्टूडेंट डेज से यहाँ पॉलिटिक्स कर रही हैं, रहने वाली हैं, रेजिडेंट हैं दिल्ली की। दोनों ही मुद्दे ऐसे हैं जो कि जिसमें बहुत काम करने की ज़रूरत है। ये ओवरनाइट सॉल्यूशंस इन इश्यूज़ का हो जाए ऐसा संभव है नहीं। तो एक बड़ी कैपेसिटी आपकी गवर्नमेंट को, आपको खुद और सेंट्रल गवर्नमेंट के साथ कोलैबोरेशन में डिस्प्ले करनी पड़ेगी अगर हम इन दोनों इश्यूज़ को हमें सेटल करना है तो।
ऑफ कोर्स करनी ही पड़ेगी। आप देखिए, पॉल्यूशन जो है एक बहुत सीरियस मैटर है, और पूरी दिल्ली का हर एक नागरिक इससे बहुत इफ़ेक्टेड है। छोटा बच्चा हो, बड़ा बुज़ुर्ग हो, अनेक तरह की बीमारियां इस पॉल्यूशन के कारण से आज दिल्ली के लोगों को लगी है। पर समाधान क्या दिया पिछली सरकारों ने, मैं आपको बताती हूँ। समाधान के नाम पे एडवर्टीज़मेंट, हम पराली की दवाई बनाएंगे, वो दवाई बेच देंगे, अन्य राज्यों को देंगे, पराली ख़त्म हो जाएगी, हवा साफ़ हो जाएगी। ऐसी एडवर्टीज़मेंट के ऊपर करोड़ों रुपए का बजट सरकारों ने खर्च किया। पर आप तो मीडिया चैनल हैं, आप मुझे खोज के बताइए तो कि वो दवाई बनी क्या, किसी को मिली क्या, कोई इलाज उसका हुआ क्या, कोई लाभ मिला क्या? नथिंग। करोड़ों रुपए की एडवर्टीजमेंट के बाद ना कोई दवाई मिली, ना कोई दवाई बनी, ना किसी स्टेट में गई, ना पराली खत्म हुई। हाँ, उनकी सरकार बन गई इसलिए पराली खत्म। अब पंजाब का कोई रोल नहीं है पराली में। अब सारी की सारी पराली जो है वो बीजेपी गवर्नड जो राज्य है वहाँ से आती है। अब पंजाब की दिशा से आना बंद हो गई। तो ये उनका सॉल्यूशन था। अगला सॉल्यूशन ऑड इवन। आप बताइए, इतने समझदार लोग हैं, इतने सारे पर्यावरणविद भी यहाँ पर हैं, ऑड इवन करने से कितना पॉल्यूशन कम हुआ भाई? ये 3 मेजर स्टेप मैं बता रही हूँ जो पिछली सरकारों ने किए। एक, पराली की दवाई बनाएंगे, दूसरा हम ऑड इवन करेंगे, और तीसरा एक स्मोक टावर बनाया गया। कहाँ है वो एक स्मोक टावर? हमने खोजा, पता चला कि कनॉट प्लेस में बना था, 6 महीने चला, कॉस्टिंग उसकी 2 करोड़ थी, उस पर एडवर्टीजमेंट 30 करोड़ का था, और आज वो वर्किंग नहीं है। अब बताइए, ये समाधान सोचेंगे तो एयर क्वालिटी ठीक होगी क्या? आज भी आपको लगातार जब पता चलता है कि जी आज भी एयर क्वालिटी ख़राब थी, आज भी, तो ये वो काम नहीं है कि साल के 2 महीने सर्दियों का मौसम आया तो आपने एयर का सोचना शुरू किया, तब आपने ग्रैब लगा दिए, तब आपको कोट फटकार लगा रहा है, तब आप काम करने की सोच रहे हो कि अब क्या करें, और कुछ नहीं मिलता तो दूसरे पे इल्ज़ाम, ये हरियाणा का प्रॉब्लम है, ये यूपी का प्रॉब्लम है, ये बाकी केंद्र सरकार का है, इसमें पीएम नहीं है, इसमें एलजी नहीं है। नहीं भाई, अगर आपको सच में एयर पोल्यूशन ख़त्म करना था तो एक उसका डिटेल स्टडी, उसका सॉल्यूशन, उसमें कंसल्टेंट्स, उसमें ऐसे लोगों की राय कि करना क्या चाहिए। हमने जब सरकार आने के बाद इसको पूरी तरीके से ऑब्ज़र्व किया, इस समस्या पे घंटों के लोगों की कंसल्टेंसी ली, तो ये समझ में आता है कि जो इसके कंपोनेंट है एयर पोल्यूशन के, चाहे वो आपकी डस्ट हो, क्योंकि आधे से ज़्यादा शहर तो आपका ओपन है, वहाँ पे ना ग्रीनरी है, ना आप वो सीमेंटेड है। दूसरा, इसमें व्हीकलर पोल्यूशन कि आपके जो व्हीकल पूरे शहर में चलते हैं उसका पोल्यूशन होता है। और ये जो डस्ट पार्टिकल एयर में रहते हैं, ये कोई 2 महीने के लिए नहीं आते, ये साल भर है। वो आज गर्मी के मौसम में भी है, वो सर्दी के मौसम में भी है, हर समय है। तो हमने आते ही जितनी योजनाएं बनाई, हमने वाटर स्प्रिंकलर्स थे, हमने जो स्मोक गन्स थी, पूरा साल भर चले एक्सेप्ट मानसून मौसम, क्योंकि उस टाइम तो ईश्वर बारिश कर रहा है, तो पूरा साल भर स्प्रिंकलिंग हो, पूरा साल भर स्मोक गन्स चलें ताकि जो एयर पॉल्यूटिंग कंटेंट हैं वो बैठ जाएं। ये साल भर की योजना बनाई, डिटेल्ड बनाई कि आपके अगर दिल्ली में 250 वार्ड हैं तो उन 250 वार्डों पे 4-4 मशीनें उनको अलॉट करनी है। उसके लिए बजट क्रिएशन किया, उसके टेंडर लगे और अब वो जनता के बीच में आने की शुरुआत पे है। तो ये जो काम किया, मतलब अब व्हीकल का पॉल्यूशन है तो व्हीकल मान लीजिए आप पब्लिक ट्रांसपोर्ट को कर लेंगे तो प्राइवेट ट्रांसपोर्ट, और प्राइवेट ट्रांसपोर्ट को भी कर लेते हैं तो जो दिल्ली के बाकी शहरों से यहाँ पे ट्रांसपोर्ट आ रहा है वो प्राइवेट गाड़ी आ रही है, वो आपकी ट्रांसपोर्ट की बसेस आ रही हैं, राजस्थान से आ रही है, हरियाणा से आ रही है, पंजाब से आ रही है, तो क्या आप उनका पॉल्यूशन चेक कर रहे हैं? तो ये भी तो कंपोनेंट है दिल्ली के पॉल्यूशन में। तो इसके लिए क्या नीति बनाई, इसके लिए क्या किया? तो इस सब के ऊपर काम करने की ज़रूरत है।